Hello. Welcome,
Hey
guys,
everyone.
to the 5ers stream. Let's get some music going.
Welcome everyone
Hopefully
to the
everyone can hear
5ers
us.
stream. Let us know where you guys are following today's stream from, where you're tuning in from. We know that we have a very international community, so let us know. Feel free to comment where you're from today. Mike, how are you doing?
I am good, Anastasiia. How are you?
Yeah, I'm doing good as well. Interesting times in the market. Can't
That's
overlook
one way to that's one way to put it for sure. There's a lot of movement going on right now, so yeah, it's interesting times to say the least. So yeah, great to see you guys. Let's just say this straight from the top. We are experiencing a few technical gremlins this morning. StreamYard, which is the platform we use to stream from, are having some issues, it seems. I was on a live stream this morning with Alex on Alpha Beta Labs, and we had a few bugs. We're hoping that they're going to get ironed out during the course of the stream, but if you do have any problems with us, please bear with us and let us know in the chat, and we will do our best to address them. Obviously, I'm not Jonathan. I guess that is just, that's kind of obvious. He's far better at this than I am, but poor Jonathan is not feeling his top self today, so he asked me to step in and keep Anastasiia company. Not that you need to be kept company, Anastasiia. I think everyone is far more interested in talking to you than they are to me, but I can at least be your sidekick for today. So
I think you're undervaluing yourself, Mike. I think everyone
well,
is very
just remember the name. It's modest, humble Mike. So yeah. But great to see everyone. Let us know if you can hear us okay. Let us know that I know there was a bit of an issue with a lag. So if there is a lag, please let us know, and we will do our best to address that. Anastasiia, what's been happening this week? You've been trading much?
I haven't been trading much, but right now I'm actually in a trade. I'm gonna share my screen because I've seen something interesting this morning, and actually it makes me really happy to know that some of the setups that I'm looking at are actually about to become valid very soon again. So if you can maybe help me to please bring my chart.
I can
thank
indeed.
you so much. Yeah, thank you. Fantastic. So the things that I am actually right now trading is USDCHF, and I'm continuing. It's in a sell. I'm in a short for USDCHF right now from the morning, from literally like an hour and a half ago. So I'm looking for continuation to the downside now. If you look from a little higher perspective, we will see that it's slightly lagging today. Here we go. So we will see that USDCHF had some volume accumulation in the morning.
Sorry, Anastasiia, 1 second. Yeah. I'm just getting a message saying that your chart is not being visible, and quite right, it is not visible. Let me just quickly play around with the layout for a second, and hopefully we can get it appearing. Let's remove it and re-add it. There we go. I think we've got it now. Sorry about that.
Can you guys let us in the comment if you can see the chart?
Hopefully I haven't made you too dizzy from throwing you around the screen there. Apologies for that.
No, it's all good. Thank you so much, Mike. Thanks a lot. So what I'm looking at is the sell for USDCHF. I'm in a short from an hour and a half ago. And the reason why I got into the short partially is, if you see from the hourly time frame, now let me switch to the candles. We had the accumulation of volume here. The price had been consolidating here during the night. And then during the morning, we started the move to the downside, where there's all the volumes appeared to be above the price. And as I'm trading from volume to volume, this is the current point of control of the week and today's day as well. So that's a maximum volume traded, and I'm expecting it to go towards the next volume area. So I'm right now in profit. I moved my stop loss to break even already, and I'm expecting it to go slightly lower. towards this previous volume zone. So this is again an hourly time frame. The next point of control I'm looking at is 410. Maybe I'm going to be closing my trade a little earlier than where my take profit is, because my take profit is essentially for 1 to 2 reward. But I'm having some doubts if the price can actually give me this 1 to 2 today. Maybe I'm going to be exiting at 88,415, since this is also the point of control of this, one of the points of control of this whole consolidation. So, and this is from 410 to somewhere 250. I'm going to start looking for buys. So I can even shorten this whole zone just like this. And this is where I'm going to start looking for the reversal for the USD CHF back to the upside. But right now this is the one that is running. And I figured out that TradingView actually added something that I've been using for a while. I don't know if you noticed, Mike, but they added the footprint, volume footprint.
Yeah, I see footprints. They fascinate me, but they scare me. So you're going to have to talk me through. I would love to know how you trade a footprint chart, because I know loads of people who use them. I know they're particularly useful in the futures market, but I look at it and I go, too many colors, overstimulation, and I go back to my candles. So I'd love to know actually what you see when you look at these footprint charts.
Yes, so someone is asking actually in the chat already. Harish is asking, what were those candles? The footprint, perhaps for those who don't know at all, it's called the footprint because it essentially shows you the amount of all the asks and bids and volumes that are traded from all around the world on this specific asset. Now, this Forex is slightly difficult because it's depending which, because when you trade Forex, you essentially trade on your broker's chart. So you only will be able to see the orders that are coming from that liquidity provider that your broker is using. So I find it more useful on the futures market and on stock market, for example, on oil, on gold, on stock index futures, like for example, S&P 500, and even the CFDs, they actually work better. However, for Forex, we can still see some useful information. And I've been trading footprint for a while already, for a good 4 years. But TradingView, as far as I'm concerned, introduced it just recently. And I started testing it out, and I found out that it's not that bad, actually. And it does make sense what they are showing. So they have different settings, Mike. First of all, you can add it here if you choose the type of the chart where we look at the candles person. So I go to the volume footprint. They'll also have time price opportunity, TPOs, and session volume profile. I didn't necessarily like how they did that. So when I click on footprint instead of candles, well, I actually still see candles on the left side, so that's good. And then you see the footprint clusters. They have several settings. Now here. So they have several settings. You can change it to less colorful one as well. So you can change it, but I do like
this. It's less stimulation for my eyes.
Definitely, I understand what you say. So I go with the tick per row 10. Normally for the futures chart is 1, but then it's slightly too much for me on TradingView. Doesn't seem to be tuned in for such a zoomed in information. So I use 10 ticks per every row, and I use delta type. Now they have also buys and sells. They have the volumes. So we can also see how much volumes have been traded, was traded on during the candles, and where their clusters, so these rectangles become lighter, that's where the more volume was traded, and where they become darker, the less volume was traded. So that's quite useful because I can see that, okay, this is a simple example. Here we had some consolidation for an hour and a half, and we see that majority of volume was traded in this zone. How do I know? Well, because we have the light clusters overlapping in all 3 candles in exactly the same zone. So that's where the volume was traded. And we see the price drops and then pulls back and isn't able anymore to break through the zone. So that's also quite interesting. I also saw that I was a little late, so I didn't get the perfect entry, a little lower already entered. But that was one of the reasons I also entered the trade. And as we can see, as far as we get the bigger volume above the price, I'm going to be staying in short.
Got
I
you.
also
Got you. Okay.
prefer to use delta. So the total is the volume. So the ask plus bits, and delta is ask minus bits. So we can see, you know, if their clusters become dark red, that's where the negative delta is. So that's where the more bits were traded. And as delta becomes lighter blue, that's where more asks were traded. So I'm paying more attention to these levels. So
Daniel just makes a sorry, Daniel makes a good point there. Just to add, for anyone who's looking for the footprint charts, it is available on TradingView, but from a premium subscription. So if for example, if you're on the essential subscription like I am, you won't have the footprints. Just for anyone who's looking for it, that's why you may not be able to click on it, but it is a new feature that they've added recently. So yeah, it's definitely worth checking out.
Yeah, and if someone wants trying it out, you can also register the TradingView for 30 days for trial, you know, on a different email. For the premium, for free, you can try it out and see if footprint even makes sense for the strategy that you trade, you know.
Yeah, absolutely. It reminds me of something I was talking about recently with someone about how people look at the charts and how some people can see something. Like, for example, right now I'm looking at it and I can just see lots of numbers and colors, and it's like, whoa, hang on a second, this is a little too much. Now, some people would say, well, hang on, Mike, you look at your charts and you've got lines and colors everywhere as well, which is true, but I've put them on there. Now, when I have an indicator that gives me all sorts of, or a chart that just gives me all these colors and numbers and everything else, it can be quite overwhelming to look at. And it reminds me of when, you know, if you look at a chart and you can't see what somebody else is seeing. So if you said, Anastasiia, you could try out the volume footprints with a trial subscription. Somebody might log in and look at it and go, I cannot see what Anastasiia is seeing. It doesn't make sense to me. And that's okay. It doesn't mean that you're not a good trader. It doesn't mean that you're not able to trade. It just means that you look at the charts in a different way than Anastasiia does, or you look at the charts in a different way that I do, or Jonathan, or any of the others that are here. So I think it's important to look at it as another tool that people can use to view things from a different perspective, you know, and hopefully help you find that edge as well.
Yeah, for sure. I think it's very important what you said. You know, I always say that everything can work. Depends on how you apply it, but literally everything can work. It can work and be a profitable strategy. You know, I like footprint because it gives me more information than just candles. From my personal perspective, it eliminates the guesswork. So when I enter the chart and I see that something's happening, I might think, okay, this might be it. So there might be sellers or buyers taking over, but I don't know for sure. And footprint gives me this information that, okay, it actually is happening what I think it is, you know, or hey, it's not, I'm wrong, and it's not the time to enter the trade, although it might seem like it from a different perspective, you know, when I only look at the candles. So the footprint actually did give me the edge of confidence and knowing that, okay, I'm not just guessing, but I actually, you know, see what, you know, actually it's happening, what I see is happening. Daniel says, you playing Tetris. I guess it looks like it. from afar, you know, it does look like it, like one.
That is one way to look at it. That is definitely one way to look at it. Vinny's asking you, Anastasiia, for USD CHF, if it's late to enter now, or do you think it's already gone? This is always a tricky one.
Yeah, I'd say it's too late, because realistically, if you enter the trade, where do you place a stop loss? I'm like, okay, I would place a stop loss. You know, my stop loss is already on break even, you know, but I would place a stop loss at least here. And in the end, it's the most it can give is a 1-to-1. If you are lucky, probably it's going to be even negative risk to reward with this one if you enter right now. So with USD CHF, I wouldn't be entering anymore at the current moment. You know, since if it's, you know, something that is around the entry point, I always say yes, but right now it's already in profit. But I'm looking at the other thing, actually. This is AUD USD. I'm going to switch for candles first. This is AUD USD, and this is 4-hour time frame. So what I find interesting here is that we are right now, and I'm going to remove my points of control a little too much sometimes. What we see right now is that the price is literally where the previous consolidation was in the volume right here. So I can immediately see that majority of the volume is right now, like it's being traded where the price is right now. Now, besides this, if you go slightly closer for 1 hour, and I place my volume profile, it is a manual one. This is a fixed range volume profile that TradingView has, and it's available in Essential as well. For those of you who use an Essential subscription for TradingView, here is another high volume node. So right here is a zone where volume also increased when the price was making this downwards movement. So when the price goes down, this is another volume. And I'm expecting if the price reaches this slightly higher level, I would prefer to enter higher. If we are here, I'm going to be looking actually for the footprint chart for the confirmation to see if sellers are going to step in, and then I'm going to look for a sell. So right now we are still bullish. Definitely we see that, clearly there are no red clusters yet. Majority of this is blue if you look at it from the perspective. So if we are here about 0.63, I'm going to be looking for a sell, but first for the confirmation. So what I want to see is either the price going up, and here we start having majority of the red footprint. So majority of the cluster we just red, the Tetris blocks, if you want to call it that way. Or if the price goes and then breaks below the previous volume, in this case, it's going to be this one, last one, because that's where, if I place my volume profile chart, it's also going to show me that there was a high volume node here, this one. So I want to see the price either below the volumes, which is going to be telling me, hey, most likely it's a confirmation for sell, the beginning of the downwards move, or at least the red clusters in the footprint. So I'm looking for this AUD USD sell. I'm not gonna make my usual mistake. I usually forget to place my alert, and I miss my trades if I forget. Like if there is no alerts, Mike, there is no way I'm taking this trade. I swear. Every time I just come back to the charts and I'm like, how in the world could I miss this one? I was literally looking at that thing.
Is that something that you generally have a problem with on live streams, or is it just generally with trading that you forget to put an alert?
It's with the majority of the live streams. It's when you're busy with something else.
I know the feeling.
I forget to place my alert.
The live trading is a whole other ball game. It's so easy to just get lost in, following the chat, making sure that we've got the live stream and the charts appearing, making sure that your camera's working and all this other stuff, and then looking at MT5, looking at TradingView and all the other stuff. So it's in a way, live trading kind of gives you more of an intuition for it, but at the same time, like you say, if you don't set a notification or something to warn you, hey, price has come to where you were thinking, it's so easy to get lost in what's happening elsewhere. Interesting question from Jack Jackal. He's saying, why would you need a footprint? You can see if sellers or buyers step in with the candles. I mean, I don't know what you think about that question, Anastasiia, but I feel as though, yes, you can see it with the candles, but it goes back to the point that I said earlier, that some of us can see the candles and see certain things, right? Whether it be the candle structure, whether it be the patterns, etc., etc. But then, quite often certain patterns or certain structures are false and don't give you a true picture. As we said earlier, you can look for different things and look for different setups on whether it be the footprints, whether it be the candles, etc., to give you an understanding of what the market is doing. The reality is that no matter what chart you have, the market is going to do what it wants to do. None of us can predict it 100% of the time and have guaranteed success. It's just about fine-tuning that edge and getting to that point where you believe you've got an extra insight, right? I don't know, what do you think about that one, Anastasiia?
Like, don't get me wrong, I've been trading with candles as well, and some time ago when I was trading just with the normal candlesticks, I also had my winning periods, and they're quite good ones sometimes. But as a candle, we can only see what candle shows us, whether it's a bullish candle or bearish candle. A little bit more perhaps could be seen with a wick, depending on how big the wick is and on which side. We can assume that there was an activity of buyers and sellers, but what footprint does for me personally, it's for personal perspective, is that footprint takes the guesswork away, and it shows exactly how many buys and sells were executed at each and every single level. Whether it's at this moment, I don't need to guess that sellers step in or buyers step in. I can clearly see that here we had more sellers than buyers in these zones, because I can see the red footprint chart. I can see that here I had the seller 2 levels where someone else was adding sell positions, because I can see now the red clusters at this area. I can also see that I have barely any buys, because the majority of the previous 2 footprints, here 3 footprints, are red. So I can actually understand that, hey, it's not just something that is my personal perception, and it's not subjective anymore. It's actually what is happening. So the footprint helps me to clearly see, okay, sellers are actually there or they are not. Because even in the consolidation, we have consolidations when the big market participants, accumulate their trades in it, and there is a lot of volume going on inside consolidation. Or we have consolidations when the market is just out of money, when after the big volatility, when traders have taken a lot of stop losses, margin calls, like on crypto, some time ago, and see that volatility actually is lower, because the price isn't necessarily accumulating more volume. It just stops because there are not a lot of people trading right now. And for these 2 conditions of the market, there are different strategies that I can apply. So, for me, if the candles would be enough, I wouldn't obviously be using footprint, but I do find it really helpful. And someone was saying about Atas. Kyle was saying Atas. I used Atas platform, and I use Atas platform also continuously. It's a little more difficult to stream because it takes a lot of power. It's a really heavy platform, but I use it, and it's also based on the footprint. That's why I'm testing on the trading queue as well, to have it, somewhere on the reach of my hands.
Yeah, absolutely. And as John says, as long as you're making money, there is no wrong or right strategy. And that's absolutely true, John. At the end of the day, there is no one strategy for trading that is the be all and end all and the holy grail. Otherwise, everyone would be doing it. So whatever works for you, that's the avenue to pursue, I would say. As Harish says, a line chart trader can ask the same question: why not a line chart? It's just what you can understand. Totally agree, Harish. Completely agree. We have I don't know if this is from Yasin directly or if it was somebody that messaged Yasin, but do you find footprint charts effective for Forex? In Forex, they only show data from your broker, not the entire market, unlike stocks, which have centralized exchanges. I think you've already covered that, Anastasiia, but you're really only looking at this recently, is that right? With regards to the footprint charts for Forex?
So I've been trading with Forex, but I was looking at their futures pairs. So I'm going to open one now. So I analyze it normally with a futures pair, like for example, 6S, which is a Swiss franc futures on the CME. And essentially that's going to be a reverse chart, but then the footprint needs to be reapplied. It's a calculation here. So I've been using it on ADAS for the whole 4 years, to be honest with you. And it's more, it's a better information, obviously, when you trade when you analyze it on the Forex futures chart, because it's a centralized exchange, and you can see all the orders, all market participants, all asks and bids. So there is a better information, more clear information for sure. But if I reapply it afterwards on Forex, so I analyze it on 6S, I applied it on a USD CHF. That's how I've been doing it for years with ADAS. And I've recently only started testing the footprint on TradingView, applying directly to Forex market. Right now, it's been proven it's good, for the past 2 weeks, but it's not enough data, obviously. I need longer period of time to say, hey, it's actually doing really good, you know. But right now, I can't complain. But I still feel, but it's a subjective feeling because that's what I've been doing for years, you know. I still feel more confident when using it on the futures chart first and then applying it to Forex. That's also how I've been trading the 5ers accounts since last year. I use it on others to analyze it and then apply it on CFD, you know, trading the 5ers accounts.
Yeah, absolutely. Well, there you go, guys. You've got the poll. So let us know in the poll whether it's yes or no. Are you using footprint charts in your trading? So let us know, guys. It seems like it's a bit of a hot topic in the chat. So inadvertently, Anastasiia, we've come up with a topic that we didn't even realize we were going to have. The footprint charts have proven controversial. So yeah. Candy says, I've been trading the same thing as Anastasiia is doing. I'm profitable and I have even passed 3 5ers accounts. Great strategy and great firm to use. Excellent. That's what we like to hear, Candy. Thanks ever so much for your comment. Alpha Beta Lab is in here as well. That must be my good friend Alex sitting there. Let me pull up my charts on gold because Alex and I were trading gold this morning. And he's been pinging me like crazy because we were in a gold trade earlier when we saw this big move coming up here. So let me just go out to the 15-minute. So this nice big bullish move earlier on was what Alex and I were trading. And if you go back into later on, not right now, but later on, go check out the Alpha Beta Lab stream from this morning. You'll see it there. And it was quite funny. Literally, I joined Alex before the stream and he said, Mike, buy gold, buy gold. And I don't normally take signals from Alex, but you know, this time I was feeling brave, shall we say, or foolish, depending on which way you look at it. And we did get into a buy. Now, we both actually closed as we started to see this pullback. It hasn't broken this low of this 15-minute. Now, there is definitely liquidity lower for us to target, but my feeling is, I mean, at the moment we're in a 1 hour that closed with this wick rejection. So I feel as though we're still going to push up further, and we still have this 1 day inside bar sitting right here. And that for me is liquidity. So I can still see us going higher and taking this high area here. I'm probably looking for a reaction in and around this area. And the reason for that is if I take it out to the 4 hour, we've got a lot of a lot of sellers coming into the market at this kind of area. If I take it out to the 5 hour, again, you can see this big engulfing candle, and I'd be looking for a reaction in and around that area. So at the moment, I am still in a buy. It is pulling up against me at the moment. As you can see here, it is selling off a little bit at the moment, but I think that's just because we're facing resistance against this area here. But there is still liquidity, as I say, major liquidity up here, which I'm expecting us to take out. So let's see how that plays out. I've got one thing that I do want to say is that when we're looking at these charts, sometimes, you know, the one thing that I did with Alex was I jumped in and I probably didn't pay attention to what I should have done, which was my risk. And those of you who have been following, those of you can see in the ticker down below, you'll see that we have got a big event coming up in just over a week, I think, or less than a week. We have got the MasteRisk event coming up. Anastasiia, I think you're going to be on that. 6 hours of live streaming. So let's just quickly run a quick overview of what that's going to look like for you guys.
MasteRisk free online marathon is going to start super soon. 6 sessions, 8 experts, and 6 live hours. So on March the 11th at 9 AM GMT, we are going to start with all of the risk management topics covered in one full day of practicing strategies and live demonstrations. What's going to be included? Free exclusive resources, a new account exclusive for the event, and 15 10k high stakes accounts up for grabs. Now the first 5,000 people that register will get access to an exclusive contest. So go below, join now for free, and we'll see you there.
There you go, guys. If Alex hasn't convinced you, I don't know what will. To be honest, I mean the excitement and the enthusiasm from Alex there should convince you all. In fact, there's a little buzz in my ear that says he doesn't like what I'm saying about him, and he's come to say it himself. Here he is, the man himself. How about that, guys? How you doing, mate?
Hello, mate. You're all right. What is going on? Hi, Anastasiia, as well.
Hey, Alex. Someone was just requesting you in the comments. Like,
I know. First of all, we need to speak to whoever did that ad, the one that we just pulled up. I don't know why it came in so short. It was so awkward to seeing it come into the screen like that. But I hope we shorted gold. Anybody else short gold now? Michael?
Nope. I'm still in the long, mate.
You're still in the long.
Mm-hmm.
Okie dokie.
I'm not touching it today while it's consolidating. Staying away from that.
Yeah, it may probably be the better idea, to be honest. It's really not coming up with a decision of what it actually wants to do, is it?
Yeah, yes, it is quite choppy, but these are the kind of things that I'm looking for. You've got a wick pulling down, taking the low of this one, it's pushed back up, and we've got this one here also trying to push back up. So we look on the 15-minute. Again, we've bounced off these areas here, and we're bouncing off your favorite EMAs as well, Alex. So I think there's still some room for us to push higher. We haven't taken this low here, where we've got this wick rejection. We're creating some bullish momentum at the moment. Let's go to one of my favorites, which is the 7-minute. 7-minute not really showing me anything at the moment. But what about the 11-minute? The 11-minute looks a little bit better. The 11-minute, we can still see this bullish momentum, this bullish trend. We haven't created any lower lows yet, so I'm still comfortable. At least for now, anyway.
Mike, you're the first person I've ever seen using 11-minute chart.
I'm telling you, it will change your life, Anastasiia. You give me footprint charts, I'll give you the 11-minute chart.
I'll take your word for that.
What about the footprint, Anastasiia? If we're looking at gold, what does the footprint chart say? Have we got gold futures?
Let's have a look.
Yeah, to be honest with you, when you are when it's in the consolidation, it's loading it. Yeah, when it's consolidation, majority of the volume is somewhere in between. As you can see, it doesn't even want to load it necessarily. I'm gonna need to change the settings for that. But majority of the volume will be just in the middle. So footprint and not, they are really good for the trend trading or reversal trading, for example, but not for consolidations. So when the price is in a range, and you are not going to get much information from footprint charts at all. So let's even do it like this. And,
so the entry for short, I took to 29.19, just because we had three times. We had 3 times that we pushed up, even after the buy that we had this morning. It tried to push up once, failed. Tried to push up the second time when we were all going crazy and all oh my god, we picked the low. Actually, that was just me. And then it failed. So for me, it was just it's just showing a little bit of weakness. But I guess if we're in just a range, then it doesn't really matter one of these different signals, because we're just oscillating. So
yeah, not really nothing. You can see the lighter part here, so the more volume, and it's above, but here also another one, right? So it's what I'm saying. It's usually inside of the consolidation where the majority of the volumes is going to be traded. So footprint are, if you're talking about consolidation, footprint are useless, essentially. It's a good spot when it exits the consolidation, because you can see that clearly, for example, the volume increasing on the amount of asks and bids if suddenly the spike is going. And then you can confirm the breakout using footprint. But while it's in the range, I'm not going to get any information from there.
Yeah, fair enough.
I think a lot of the gold kind of institutional traders are waiting to see what happens over the course of the next few days with whatever minerals deal may happen between the US and Ukraine, right? That's the latest thing that they're waiting to see, whether they can go more risk off or risk on, and obviously what happens with the tariffs as well. You know, there's a lot of geopolitical stuff that seems to be moving things around, and just creating a little bit of uncertainty across the markets, whether it be gold, whether it be the indices as well. I mean, the indices, yes, the last couple of days have really had a hammering. So it just feels as though everyone's still trying to get a feel as to where the market's going to go. It'll be very interesting to see what NFP does tomorrow. Is NFP going to be a really big mover, or is it just going to be nice and calm and quiet? I mean, we know that NFP is never calm and quiet, but anything could happen right now.
Yeah, well, we're gonna see about their tariffs and everything, because in 2019 he first imposed the tariffs and then he pulled them back off when he reached the deal, you know, with Mexico as well and China. So he's a very big pumper and manipulator in the market. So I think he's waiting to reach some deals, and people are just waiting, I feel like, to see they're gonna go risk on and they're gonna bring the money back into the market, or they're gonna go more risk off, and then gold, I think, can rise more. The same with the deal, right? Same with the minerals deal. People are connecting it to the peace deal between Russia and Ukraine. So they think that if the mineral deal is signed, then the peace is more likely to be achieved, and then most likely gold can be declined. But again, it's not a guarantee. First of all, then it depends on what is going to be in this deal, and then we're only going to find out later, you know, not the moment we sign it. So I think there are a lot of
exactly. I think it's very easy to oversimplify it and say, oh well, there's a minerals deal, right? That's it. You know, everything's going to stop. There's obviously a lot more nuance and a lot more specificities with it. So yeah, Al, just to I don't know if this is going to be good news or bad news for you, mate, but 75% are on my side with this. They're long on gold.
What is the statistics of traders making money in?
Good one.
Oh, guys, I need.
But I've got to jump off anyway. I've got to jump into a meeting. But it was lovely jumping in and saying hello to everybody, and we'll see you next week anyway.
Thanks, Alex. Cheers, mate.
Mike, what do you think about the USD index, DXY? Concerning the events and in general, just technical aspects. But
I mean, when you look at it for the last couple of days, it's just been selling like, I mean, so much. I can't see any support for it right now. I think you've got it marked out there around the 104 area. That's where I see it going as well. I've got a couple of levels just below that, at 104, 187 and 104, 344. Those are two major liquidity areas that I'm looking for to potentially get taken. I just can't see anything right now that is supporting strength in the dollar. You know, the current the current tone coming from the US administration seems to suggest a very, very weak dollar. We all know that's what Trump wants. We know that he wants a weaker dollar, but he first still needs to get China and the others to come to the table for negotiations. And for that, he needs a strong dollar, because the Chinese want a weaker dollar as well. So I don't think it's as clear cut. I think the DXY, if you look at it on the daily, there isn't really anything to stop it at the moment. If I pull it up, hopefully you guys will see this if I pull this up. If I pull up my chart, I just want to make sure that mine does come up. I've got a little bit of a back note. There we go. It's disappeared. Hang on a second. Let's just change the layout and hopefully it will pop back up. Remove. There we go. God, you got to love StreamYard. you can see we've smashed through the 200 EMA, and for me that says that we've got a lot of bearish momentum. Now it will come back and retest that because it can't just smash through it. But if you look at the 21 and the 50 as well, they've also crossed over and they're also pushing down. So it's got to find somewhere to bounce, and that's why I've marked out this area as an initial area of interest, which is probably just a little bit higher than yours at the moment, but that's where I can see us at the moment on the DXY. It could well come down to this last time that we touched the 200 EMA, which is further down here. We've got a one-day order block on this area, so that's also a potential area of interest just down there. Those would be my kind of areas of interest that I'd be looking for price to see some kind of reactions. Those of you who aren't familiar with my kind of way of looking at the charts, I always look for 3 types of liquidity levels based on candlesticks. First one is an inside bar on multiple time frames. So if I see an inside bar and the high or the low haven't been taken, then I see that as a liquidity level. If there's a candle with no wick, then that for me is also a major liquidity level. And then perfect equal highs or perfect equal lows are also major liquidity that I look for price to come and take. So that's why I've got those 2 levels marked out on the daily. If we go back to gold, let's just see what gold is doing. Gold is probably going against me, and probably 75% of us. But let's see. It has broken that level that I'd marked out, which is not really what I want to see. But we are getting a bit of bullish momentum coming back in. It could be that we just wanted to take out that low. Let's see. We are just consolidating around the EMAs, and they've all just clustered together, which is never normally a good thing. So unless it wants to go long, then I'm fine with it. But right now, it's not looking particularly great. We have this level here, which isn't a wickless candle, so I'm not too worried about that one. But we do have an inside bar here on the 11-minute, so that would be a nice area for price to come back and retake. And we still have, as I said, we still have that inside bar on the 1 day. So I still feel as though we're gonna push up and take it. It's just a question of whether price is happy to leave this area that we've left behind here and push on up. That's what I'll be looking at for gold right now. So I'm still long. I've still got my position. Hopefully I'm not going to get taken out. My lows are on the 15-minute. Let me just double check. Or on the 5-minute, in fact. My lows, my stop loss, sorry, is just below these lows here. So as long as the 200 EMA isn't taken out, I'm still long on gold. So we'll see how that one plays out. So let's see. What else we got happening in the chat? William saying lower dollar means lower prices for export.
I can pull up my chart in the meantime. It just entered long on AUD/USD actually. So that's something I'm looking at. Since I still had some space until I was looking for a sell, and it was looking quite bullish. This is a 6A future, so this is an example of how I usually analyze it. So I look at the futures and then I transfer it to the Forex charts, and it's easier with this one because it's a direct correlation. So whether it's a 6S and USD/CHF as an opposite, now 6A and AUD/USD are almost the same charts, right? It's almost literally the same one. So, and it pulled back towards my previous area of volume. So I looked at my volume profile, and looks like from the previous low to the current high, the maximum volume was traded at 765. So that's almost where the price pulled back towards. And at the same time is the previous highs as well here. Now, if you look at the for bigger perspective, this is the dynamic developing point of control of the week. So this blue thin line that I see here, that you can see here moving, let me make it more bold so everyone can see this line here. Here, this one. So this is literally also where the price pulls back. So this is another support. So the volume support that the price first broke and then came back towards it from the other side, because when we see that the price reached 800 first time here, it pulled back to the downside. And then after a while, buyers were able to push the price through these volumes. Then the price retested, and when the price already pushed through the volume, the same volume can become a support, but there's before it was playing as a resistance zone. So that's another confirmation why I was looking for a buy. And if we look again from even higher perspective, we will see also the previous volumes here. There's whole consolidation. The price also actually broke through it first and then retested it. So that's a point of control of this whole consolidation from already the beginning of February till the mid of February. So I think we still have some time, some space to go at least towards this zone here. But then I'm already going to move my stop loss to break even if the price goes there. So I'm going to be risk free. And as maximum, I'm actually looking at even towards their 290, even actually 310 here. So my main volume, my main goal zones are going to be this one. I'm going to move my stop loss to break even. Then another one at 180, the point of control of the week, and 325, 310. Somewhere there, I'm going to be looking to close off completely my order. So AUD USD, that's on futures, right? So now if we look at AUD USD itself, again, it's I entered literally where it is right now. So that's my, that's my break-even point. My stop loss I place below this zone of volume here because I don't want the price to break through it. So my stop loss is 680. And if we look from the higher perspective, again, my first goal is going to be here 993, and then as maximum as 63,400, I'm going to be looking for with this one as a first goal, this one as a second one, 940, and then 400 here. So it's a little more risky, but I'm going to give it a shot because it pulled back perfectly towards this previous volume zone before.
Yeah. No, certainly on the 5 minute, it looks really like a really nice, nice clear setup. Do you want to pull up gold again, because we are getting a real push down on gold at the moment.
So do you want?
If you want to pull it up on your chart, I'm conscious that StreamYard doesn't seem to like it when we change from my screen to yours. Gold on the 5 minute has pushed back down again, testing these lows. It is selling off, but again, it's wicked back straight back up on the 1 minute. So it's retesting these wick areas on the 5 minute and the 15 minute. If there's going to be enough momentum, then certainly it can sell off. But let's see. It still hasn't broken those lows. If it breaks those lows, then I'm out, and that'll be my long invalidated. But for now, I still see us pushing higher. There is obviously a consolidation on the higher time frames, but let's see how we can play this out over the course of the stream. It's possible that I get taken out. We know that gold can do that relatively quickly. It is coming down to the 200 EMA on the 5 minute. So let's see how it wants to move. We have left an inside bar on the 1 minute, which is reassuring. It suggests that we have got liquidity come back and take still. So we'll see how that plays out. I did see a question from William asking me, did I hear you say 7 and 11? Why do you look at those time frames? So you did hear me correctly, William. I do look at the 7 and the 11 minute charts. The reason I look at the 7 and the 11 is, if you imagine when you look at the charts with the 4 hour, the 1 hour, the daily, etc., they're all multiples of those time frames. Right, so the 4 hour is 4 1 hour candles, etc., right? The 1 hour is 4 15-minute candles, etc. When you look at the 11 hour, the 11 minute, the 11 hour, the 11 day, even the 22 minute, the 22 hour, and the 7, they give you a perspective on the charts without those constrictions, without those kind of what's the word? Those multiples of the 1 hour, the 4 hour, etc. So it can just give you a very, very different perspective on the charts that you wouldn't necessarily see otherwise. We're seeing a really nice reaction on gold right now. Not the kind of reaction I'd want to see on the 5 minute, but it is on the 15 minute. So let's see how it continues to close. Currently on the 5. If we can keep pushing up, then I'll be happy to see that play out. But let's see, 15 minutes looking good. The 11 minute. So going to that question, I'll try and bring up my chart. Let's see if we can do this without completely destroying StreamYard. Let's see if we can bring it up. There we go. Beautiful. So this is the area that we were looking at. And on the 5 minute, you can see here that 5 minute candle, it just looks like an impulsive move. But if we take that to the 11 minute, right now, it's got another 6 minutes to play, and it's creating a really strong engulfing candle to the upside. We've got that inside bar that I spoke about earlier. Now, whether it's going to hold on, it may not. The 5 minute has come back and it's retesting the EMAs. But it's pushed off the 200 once again. We take it to the 2 minute, and the 2 minute has created an outside bar or an engulfing candle to the upside. So that's why I look at these multiples. You look at the 3 minute. The 3 minutes created a beautiful engulfing candle to the upside, and it's bounced again off the 200 EMA. The 7 and the 11 just give you a totally different perspective on what you might see otherwise. That's why I have things like the 22 minute. 22 minute, again, creating a push to the upside. We've got an inside bar here. We've got another one here. We've taken the lows of those inside bars. And so now I'm expecting price to come and take the highs of those inside bars. That's just generally what I look for, because I see those as liquidity targets. The 30 minute, this is now currently our resistance area that I would see. Right, so this is now the area that we need to break for us to continue in the longs. Whether that happens or not is, we don't know. Right, that's the only price can show that. But that's why, again, I look at other time frames like the 45 minute. I look at the 50 minute, just to get a different perspective on things. The 90 minute, for example, right now, the 90 minute has got an inside bar here, so there's a liquidity level that price could have come and taken. But it's decided to leave it. It's decided to leave it at least once, if not twice. So that's why I look at the 11 and the 7, because they give you a really different perspective on the candles and the structure. And as I say, my perspective on the charts are based on candlestick structure. So here you can see on the 7 minute, price rejected, but then it created this massive wick to the upside, created an inside bar, and price has taken the low. It's taken that low and it's done a massive wick as well. It's taken the high of it now and it's taken the body. And now it's waiting to see, do we want to keep pushing up? The same on the 11 hour. The 11 hour, it's taken the high and the low. And now I'm hoping to see it push on higher up, because this isn't strong enough resistance for me. I'm expecting us to see more resistance up here. So I'm expecting gold to push on up. It may not do it. It may well have stalled and you know, I'll be taken out. But my general strategy when I look at these candlestick patterns and these structures, it tends to work quite well. Gold obviously is I would say quite strongly manipulated, right? Because it's probably one of the biggest markets in the world. When you look at how much is traded every day. So gold can move much more volatilely than anything else. But that's why so many of us trade, isn't it? We have got some other requests for other assets. We'll take a look at those in a second. Yeah, let us know, guys, what is it you're looking at in terms of gold? I know 75% of you were saying that you're long on gold. Are you still long on gold? Let us know in the chat. I'm still long. I'm still confident with that move. I'm still confident. I'm in drawdown still.
Where is your target, Mike? Because I see it potentially if it's gonna go into 29. 1 second. This is futures. A moment. I see it going towards like 29.40 even, somewhere there. Previous highs.
So if I'm being ambitious, I'd be looking for a target around this level here. So 29.37, because that would be the next area that you might see a reaction from. Definitely 29.30. 29.30 is kind of the initial target that I would have. And I'll be then taking some profits out from there if we get that far. This whole area you can see here, I mean, we're technically in it right now because we've got these wicks from here. This is all manipulation. This is all where price has chopped around and tried to change direction. And that's why we're seeing, you know, a lot of these wicks in and around this area. But we didn't hold this one. We didn't hold this wick here, which was the last push down that we had. You can see it here. That hasn't held. The other reason I'm still bullish is because you can see the EMAs are closing up on the 4 hour, and they're showing bullish momentum. So that's where I'm looking for the moment. I'm not sure we're necessarily going to see all-time highs broken. I think we're probably going to see some consolidation for the time being. If you look at it on a macro level and you look what gold has done, gold has just literally not stopped since the end of 2023. All right. So for me, I think we're now at a level where gold is probably going to find a little bit of a breathing space. Geopolitics is going to give it that time to consider that as well. So it may be something that I have to close earlier. It may be that gold today just decides to range, and if that's the case, then I'm not gonna chew up my P&L for that purpose. Let's see. Yeah, so that 15-minute close nicely. I'm quite happy with that 15-minute close. You can see it wicked off again the 50 EMA. So that for me looks like a nice reaction. And it's just this area here is I want to see what's going to happen in this area, whether we can keep pushing up or not from there. William's asking, Anastasiia, didn't you look with the volume last week for gold? Would like to see it again if possible at this trading moment. Let's see, William. Hopefully we don't completely destroy StreamYard. I'm going to make everybody dizzy by flipping Anastasiia and I from left to right. But I think that's worked. There you go.
So I said it in the beginning, but basically while it's consolidating, the volume doesn't really make a big difference, because when it's consolidated, the majority of the volume is always inside of the consolidation, so somewhere in the middle. Why is that? Because if price is consolidating, one of the reasons is because the big market participants accumulate the big orders. So if someone wants to enter, let's say it is a 10,000 contracts, they cannot just send the 10,000 contracts buy by market, over. Because first of all, they're going to get a huge slippage. Secondly, most likely their order will not be able to even be filled in because there is not enough liquidity for such high orders at that moment. So usually they break it down in small pieces and the price consolidates to average the entry. So the volumes right now don't really give us a lot of information. But if you look at it from the perspective, then we will see that majority of the volume is below still. And right now, where the price has been rejecting, Mike, when you said it's dropping and when it pulled back from the last 15-minute candle, I can see from the futures on gold that it pulled back from the point of control of the month. So now it's going to upload, but here we have the majority of the volume waiting for trading here from the week and from the months as well. So this is the developing point of control moving up, this blue line and white line, and they essentially show how the liquidity moves. So when someone executes a big order, the developing point of control moves, and depending either they're executing buy orders or sell orders, it moves up or down. So as we can see, the developing point of control moved up here, because someone executed a huge buy order. The price went up, it played as a support, now it moved again up because someone executed another big order, and right now it moved again up and the price is holding above it. So just purely from this even alone, I'm looking for the continuation to the upside for gold. And this is gold futures, but I'm going to switch to CFD in a second. So I'm looking for the continuation to the upside towards this previous huge consolidation on top, right? So this is futures. Now CFD looks exactly the same. The difference is only in price levels. Price differs a little, but that's basically exactly the same thing. We have majority of the volume here. We have developing point of control jumping to the upside, confirming that, you know, majority of the orders are bullish and they are playing as a support for the price. So I am looking for gold to go to 29.39, so almost 29.40, as I was saying, to the upside. So for me, I don't see the entry necessarily. Just because it's not how I trade, it doesn't mean there is no entry. You know, it's just not how I trade normally. But I do see it going to 29.40, maybe even today, because we had the PMIs coming out. We still have the PMIs today coming for US. So I do think that maybe they're going to also push the price higher.
Yeah, exactly. There's definitely a nice trickle of news today. We've got the ADP employment change in 2 hours and 37 minutes, then followed, as you say, Anastasiia, by the PMI, the S&P PMI for the CAD, and then we've also got S&P PMI for the US dollar half an hour later. So there's a nice trickle of news coming out today that could well push things higher. So right now it just seems to be consolidating on the 1 minute. It's not really doing too much. That's normally what happens when I say something like that. Suddenly it goes nuts, and either I get stopped out or it goes in my direction. But yeah, William says his initial targets are 29.45 and 29.54 for gold. So it sounds like William is also in some longs on gold. So yeah, that's what we're looking at for gold at the moment, guys. I know there was a few questions for some of the other popular pairs such as GU and EU. Anastasiia, do you want to pull those up on your chart and we can have a look at those?
Definitely. I'm actually looking for EU as well. I want to see it a little higher, and then I'm going to be looking for shorter, the same as AU. So they actually perfectly align. So as you're looking for 7 minutes and 11 minutes, I do love my 2 hour charts, actually.
Okay. I've got the 2 hours as well. I can get down with the 2 hours. That's not a problem.
Yeah, I do like it because it gives a middle perspective between 1 hour and 4 hours, because it's such a huge step if you think about this, you know, to jump from 1 to 4. But right now I will do it because otherwise I'm not going to be able to load my chart. So on 4 hours, you see the trading queue doesn't want to cooperate with me. It's just such a high amount of data. So here we have at 0.7570, 0.7500, the volumes from the previous, like already, November 2024. So the price has been consolidating here, and on the move to the downside, that's a majority of the volume was traded here. We are now entering the zone, and that's the zone where I'm looking for the reversal. I don't have the the specific price level yet, besides maybe this 570, but I want the price to be go slightly higher before I start looking for that reversal towards the sell. So now if we go to back to 1 hour time frame, trading queue, here we go. So if we go back to 1 hour time frame, we'll see that the price is pulling back towards this zone here of volume, and perhaps just like AUD/USD, we can find that going up. So I am kind of looking for the continuation for a buy. I don't see the entry here, or if I do see, it's quite risky. So I do like my AU more. I try to not trade correlated pairs like AU and EU at the same moment, because it's just doubling my risks. But I do see it going together with AU, and then here I'm going to be looking for reversal. So somewhere between 550 and 07800. Again, it can be some kind of volume formation or just the price pattern or footprint pattern that is going to tell me, hey, it's time for reversal. And then I'm going to be, when I have the confirmation, I'm going to be looking for short. So this is EU. So my AU is slightly in profit, but I essentially look for exactly the same thing for EU as I'm looking for. And USDCHF is still running. It's profit, but still going. And for GU, also the same thing. I'm also having my volume level at 29,500 only, 29,700. So it's still quite a while for GU until it reaches the level where I'm going to be looking for short. So if you look at high perspective, again, it's a consolidation that I'm looking for the price to reach, because the consolidations are directly correlated to volumes to me. So if this is where the accumulation is next one, and below it's barely anything, right? The previous one was here, which the price has successfully broken today. So we had the break, we had the retest. So now I see it going to the upside, as a continuation. So we see the price broke this previous volume level, retested it. Where's my mouse? Here. So retested it earlier today and now continuing. So again, the same exact thing I'm looking for is continuation towards 29,500, 29, even 800. So that's still quite a good move to go here for over 120 pips for GU. I'm looking for the upside. The only thing is that here I also don't see necessarily the entry for GU, only if it goes back here. This is where I would be looking for a buy, but I'm not necessarily convinced that it will go there. I think it has a big chance to just continue to the upside without giving any entry or any pullback. So preferably, of course, I would like to see this happening, but I think it's quite unlikely that we will see it today.
Yeah, I mean, pound has been very strong lately. Obviously, making the most of the dollar weakness, but the pound, I think it was end of last week, was showing a lot of strength and was really pulling up quite nicely. If you look at GJ, for example, we had I would say a consolidation for last week, but it has shown certainly yesterday. And coming in today, it's consolidated a bit more, but it's taken its time going to areas of interest. If we look at it on the daily, it looks like it's created a nice bit of support now to push on further up. It's broken past on the daily the engulfing candles that were going to the downside. So the pound seems to be showing some strength now. It is coming up to the 200 EMA on the daily, so it'll be interesting to see whether it can push further beyond that and go higher. But overall, the pound has shown a lot of strength.
I'm sorry, Mike. My trading queue is not cooperating today. But I see what you're saying.
No worries.
Talking about the highs, right? That have taken over.
Yeah.
Taken out the
exactly.
High. I can see that.
Exactly. It's taken a lot of those highs. It started to consolidate on the hourly, so it's been ranging quite a bit on the hourly. But obviously, whether that's going to get broken, there was a big impulsive. Sorry, I'm looking at the wrong chart. There was that big impulsive move yesterday. So at the end of yesterday, that was a really, really big amount of volume that just came in. It kind of feels as though that's been, the kind of the move to say, right, okay, we're ready to push on up. I wouldn't be surprised if we came down to the 190, 600, 190, 650, that kind of area. There's a 1 hour order block in there, and there's a couple of order blocks earlier on as well. So wouldn't be surprised for us to pull back down to those areas. But we have, if you look on the 1 hour, we've created a couple of wicked up areas and also an engulfing candle as well to the upside. So you've marked out that interesting area that I've just mentioned in your volume zone, as I've described as an order block. it's a question of whether or not the current lows that we're seeing in this range, whether they're going to hold. I feel as though they could. We have taken, actually, I say that we've taken highs at 9 o'clock this morning, so 8 o'clock GMT. We took significant liquidity levels on the 8 hour and the 4 hour. So it's possible that we'll see a pullback down to that volume area that you've got marked out before we then see higher highs again.
Yeah, I usually don't trade UJ, but it does look nice. And the previous day, it was over 300 pips to the upside. 300.
Yeah,
But I see what you see. I think we might very likely go to 198.50 before the continuation to the upside. Because from my perspective, also we had taken their volumes from 199, 150, and has well tested it already. So most likely it's not going to hold on, and we're going to test the previous ones here and the ones that were formed yesterday during the move to the upside, during this impulsive move. Because if I go lower and we place a volume profile here, we will see that this is also quite a big volume node, most likely. Let's wait until it's low. But I feel like it should be quite a big volume node there. Yeah, there it is.
Yeah.
So
and in and around that area as well, we have if we look at the EMA 200 EMA and also the 21 and the 50 on the 4 hour, we've got a lot of momentum coming into the market now. We've broken above the 200 EMA, and it's showing a lot of strength to go higher. So I wouldn't be surprised, given the weakness that we're seeing in the dollar, I wouldn't be surprised for us to see GU going higher as well. On the 4 hour, GU's gone into what I would describe as dead air to a certain extent. What I mean by that is let's try this. I think we need to do this kind of this side-to-side action, Anastasiia. It makes us a little bit dizzy, and then the charts reappear for some reason. StreamYard seems to like it that way. But if we look at it on the daily on GU, for example, we've taken this major liquidity level that I had here, and we've taken this one here as well. We've broken past the 200 EMA on the daily. And what I mean by going into dead air, we haven't really got anything here. I mean, yes, there's this order block that was sitting here that we might see as resistance in that area there. So that's possibly going to slow us down. You can see it's reacted from that. But I still feel that when we look at the 4 hour, you've got a big push up here, another big push up here. We've created these order blocks. We may see a retest of these lows here before we then push on further up. But overall, I'm seeing a lot of strength in the pound at the moment. Martin is asking Anastasiia, he's interested to know your vision of the dollar index. Would you care to share your vision of the dollar index, Anastasiia?
I do, if StreamYard does.
Yeah, there we go. I think we're good.
So yeah, I'm still looking for the bearish continuation on the US dollar index though, because if you look at the daily, we've talked about this with you, Mike, today. This is something that we marked up last week. So last week we were on the stream and I was talking, hey, that most likely I'm looking for the continuation until 104, 100, 104.00 levels. And after the small pullback, did go to the downside. Now, one of the levels that I was looking for the pullback from is the one that the price just reached. So 109, 104.900 level here. So that was one of the volume levels. If we look at it here, now it's going to load it most likely. So we had the point of control here, one of the big volume levels as well. So the price is trying to pull back to the upside. I still think that we might pull back slightly from here, but I would expect still the continuation towards 104, 100 levels. That's also the reason why I went long on AU and short on USD/CHF still, because I'm expecting the continuation of a bearish momentum on DXY. So here, perhaps we can pull back towards one of those high volume nodes that were formed during the downwards movement. One of them is 105,530, 105,650 level. And if the price reaches it, I still think that we're gonna see the continuation, because the majority of the volumes, and I think, Mike, you have your order block here as well, right? About 104, 200, 300 level here. So I think the majority of the reasons why the price would consider reversal is only here. I don't see also there is anything else that might stop the price until it reaches at least 104, 200, 100, or even 00 levels. And since I'm expecting bearish continuation, that's also why I am looking for long. It's still going slightly to the upside, slowly, but surely. And the same with USD/CHF, still bearish. We still had some pullback, as well as DXY is pulling back from one of my zones, but long term, and even until tomorrow, I'm still expecting a bearish momentum. And I think this zone is going to be quite interesting look for reversal. Maybe also NFP, if we reach it until the Friday's NFP, I think that is where the price might look for support. And then maybe some dollar is going to regain some strength, but we'll see, of course, based on the tariffs. But this is going to be quite an interesting level, because if we look at that, was already where their dollar index was rejecting every time it came here before. So already in December 2023, we had that rejection from exactly the same zone. We had it tested multiple times throughout the whole 2024, and then consolidation again before we broke through. So I think if we can reach back the same level, it's going to be quite interesting for some buys. But until then, I'm mainly short on DXY.
Yeah. I'm very much in agreement. I think the DXY is looking incredibly bearish. I think the current events taking place in the US and with the US administration are just spooking a lot of the market and creating a lot of uncertainty. Gold at the moment is pushing further down. It's not looking too great for my long that I have. It's come down to the 200 EMA on the 5 minute. It hasn't broken the lows that would completely negate my setup. So I'm still quietly hoping that that we've still got a base level of support. But it has broken that 5 minute structure that it created, where we shot down and pulled straight back up. So the next few minutes will be quite key to see whether we can regain some bullish momentum. At the moment, it doesn't seem to be catching any. It's pulled a lot of sellers into the market recently. So let's see how it plays out. But there's a nice reaction on the 1 minute right now, which is reassuring. But we need more than just one candle to really give me confidence that we're going to be okay. If it's not going to continue, I mean, if I'm looking at something like the 15 minute, the EMAs are starting to pull back down, which is not great news. So we'll see. We have left a nice liquidity trail. So this is the thing with gold. Everyone likes gold because gold moves, and gold can give you wonderful trades and wonderful wins, but gold can also absolutely destroy your account very, very quickly. Gold is this one that everyone likes the look of and wants us to pull up on the charts and to trade it and everything else. But it is a difficult one to trade.
I have a love-hate relationship with gold.
You have a love-hate relationship with gold.
Yeah.
I have a love-hate relationship with gold in the sense that my wife loves to buy it. I'm not so keen on buying it. I don't mind buying it when it's on the charts, but buying the actual stuff is a little too little too pricey for my taste at the moment. But yeah, we'll see. It's just not finding that support at the moment. It is really pushing down, especially on the 1 minute and the 2 minute. It's not what I want to see. Sorry?
Where's your invalidation? Where's your stop loss?
My stops are just below 2913, basically.
2913, okay, see that. See.
Yeah. So
Yeah,
it may come down to that volume area and then push on up.
Yeah, I still see the gold might go up but realistically, this is where the majority of the volume is right now.
Yeah.
But yeah, I think we are dropping here all the way.
Yeah, we are going for that liquidity level that I marked out. Yeah, there we go. I am out of that trade. So yeah, unfortunately, 75% of us were wrong on this occasion, guys, with gold going long. It may well still go long, but certainly not for the setup that I had marked out. So I hope you all had your risk managed carefully, so that you're not getting taken out of any of your challenges or any of your funded accounts. Venetia's had 4 trades on gold yesterday, 2 losses and 2 wins. The last win recovered the first 2 losses. That's always a nice way to the end of the day. Gold can do that to you. So I'm glad to hear that you were able to recover those losses, Venetius. Void is saying every new trader be like, "Oh, gold, shiny, click." Yes, exactly. Yes, exactly. That's exactly. Gold feels almost like glamorous. You know, there's an element of glamour with gold sometimes, which I think a lot of people like to go for. It is really selling off right now, so I'm not sure. Has anyone got the Trump indicator that tells us whether Trump has tweeted something or if he's just woken up, or has President Musk maybe said something that's decided to sell off gold? I'm not sure. We are coming up to the hour, so we'll see if anything is moving in the news. Let me have a quick look. I do like to have a look at financial juice occasionally. Sometimes gives us some news. Let me just pull up financial juice. Where is it? News feed. Trump, lower mortgage rates. Trump praises the decrease in interest rates. There we go. So Trump has spoken. Federal spending reductions will aid in reducing debt. The NDRC to introduce policies on development of low altitude economy. There we go. So Trump has spoken. We just need a Trump indicator. Anyone who's good at Pine Script, I reckon you could make a decent amount of money by going out and getting yourself, a way of building a Trump script that says every time Trump posts something, that you then get a pop-up on your trading view that says Trump has spoken, watch your positions, you know. So yeah, might be worth having a look at.
We have 4 years to develop that. 4 years of trading.
Exactly. The Trump panic button. Yeah, exactly, Void. Exactly. It's Trump is almost like he's almost like a daily NFP in a way. You know, it's like you just got to keep an eye out for it, but you just never know when it's going to happen.
It definitely makes it not boring to trade, if I may say so.
But look, is for sure.
Into the zone we were looking at, and it's
and it's reacted straight off it.
Yeah.
And it's made a really nice reaction.
If it goes back above all that, I think it's going to be still a good long. So something like this we might look at. It's going to be quite interesting. So if you can break this volume, essentially, that's what I'm saying. That I think it's still going to be bullish after that. Surprisingly, actually gold moved, but I don't see the same move anywhere else.
Yeah,
he would be speaking about mortgages and the interest rate. It would affect also the US dollar, which I don't see happening necessarily right now. That's quite
Let me
interesting.
just have a look at.
Because normally, if
Yeah,
about the interest rate, it would affect that as well.
it hasn't touched the DXY at all.
Not at all.
Or the indices. No, nothing at all. That I can see. No. And the NAS hasn't reacted at all either. So yeah, curious. Maybe that wasn't it. He's saying he's planning to balance the federal budget. That's the latest that I'm getting here from Financial Juice. Those of you who are interested, Financial Juice is a free platform where they have a ticker that just gives all the latest news that feeds in. It doesn't happen exactly at the moment when it does come out, but it does give you an update as to what may or may not have maybe triggered the markets. So that's a good one to check out. Financialjuice.com, I think it is. So worth having a look at if you're looking for a tool to get your news from. They give you just a constant feed of the news, and can help you not when it's happening. When the markets spike, you just got to put your helmets on and just hope for the best. But it can give you an understanding of where the markets might move afterwards.
Someone is asking about any open trades. So I am. That's something that we were looking at during our stream already. So AUD USD, it's like a turtle. It's going really slow, but I would prefer that as long as it's profit than a fast stop loss. So it's slowly going. I'm still, if it goes all the way there, it's going to be a really nice 1 to 5 or even 1 to 5.5. Now, if it goes here only, it's still 1 to 4. So I'm still going to be happy. In the worst case scenario, it's going to be 1 to 1 and a 7. And I'm going to be closing it if it shows the signs of reversal earlier at 990. So that's AU. And USD CHF has pulled back slightly, and I'm still looking to downwards movement. It had wanted to restore worse trade, so I'm not. If you're looking to enter that, be aware that the risk reward is most likely going to be 1 to 1 at the best, perhaps maybe negative even, depending on where the price is going to be reversing. But I'm still looking for USD CHF. And as we can see, this red footprints still holding the price. So we had this red footprint zone. So here we had a seller activity, and we had another seller activity from here to here. That's also what is holding on the price still. The price wasn't able to break through this seller zone after that. So let me mark this. Oops, that was the wrong one. So I'm still looking for that. Now I'm perhaps considering even to sell gold. If buy gold if it goes higher. So again, if it closes above, at least take this highs on the 5-minute time frame from 298.5, I'm gonna consider buying it, because that is gonna appear above my volumes as well. Because if I'm gonna place my volume profile all over this previous highs towards the lows at the moment ago, you see my volumes are gonna itself below. So I think it's gonna be quite a good buying opportunity here too.
Yeah, I agree. That area is, if you look at it on the 15-minute, just from a candle perspective, you've got that's really where price changed direction. So we'd held those levels for quite some time, and then the 15-minute candle at, what was it, 11:30, 10:30 UK time GMT. That's when it just changed direction and really pushed on down. So we have indeed come down to that volume area that you spoke about, Anastasiia, and is just now waiting to see whether that's enough to push us higher. As I say, I can see a liquidity trail left behind, which gives me confidence that those of you who maybe are looking at buys, that there's a nice area. I think I'm probably going to sit this one out for the time being, purely because I've already had that one loss, and it's not worth taking another one for the moment. I'll let Anastasiia take the wins for me today, and I shall live to fight another day.
if it goes up still. Be really careful with gold, because I had a fight with gold early in my trading career, you know. I would win some, I would lose all of this another day, and it was constantly, you know, this fight that was going on. Specifically with gold, actually, I had it. And now I'm really careful. If I take 2 trades on gold in a month, that's going to be it. Like, that's going to be a lot already. Some months I don't take trades at all, you know, it's because I'm not really confident in something. But if it goes up now, I think it's going to be quite nice as well to look for buying.
Gold, I find, is one of those ones that I think somebody said is you know, it's shiny and it's exciting and it gets the adrenaline going, right? But the problem with anything that gets the adrenaline going is that it can also really, really hurt. So sometimes too much adrenaline can't be a good thing. So you know, gold is one of those ones that can be quite nasty, and you know, the speed at which it moves can catch a lot of traders out. And I think gold is a very, very prime example of an asset which can really induce things like FOMO and things like that. Whereas you wouldn't necessarily get that with, for example, the Forex pairs. You know, you might get it with a little bit of EU and things like that, but there's a little bit more, I would say, stability in those. There's enough liquidity to move it around, but gold can just, you know, the move that we've just had on gold right now, if you're new to trading, that giant drop and then suddenly we're pushing back up, you know, that's taken me out, right? So I'm looking for support. It hasn't held, and probably the buyers will now step in, you know. Adil is asking, Anastasiia, if you would mind looking at the Dow Jones, if you have that. I know you do take a look at the indices.
Yeah, there was periods of time, a few good years when I only traded indices, nothing else. It was actually during Trump's first presidency, in fact. So I'm not going to go back now because I think my trading queue is not going to be able to load the data. But a couple of things that we need to know about the US stock market during Trump's presidency. In 2019, when he first imposed the tariffs, US stock market also crashed. And then when he pulled the tariffs back off, you know, he called them off after he reached the deal that he wanted to. That's when the stock market went to the upside. And everyone remembers Trump as the one who made the stock market strive, you know. But essentially in the beginning, almost no one remembers that it actually did have a crash. And we see some kind of continuation because we know the history loves repeating itself, right? So we see the continuation now, the same exact thing. So the price actually is now dropping because of the tariffs, because of the trade war that he started. And literally during the 1 month, right, or like Dow Jones had more than 1,700 points drop in the past 2 days alone. And it was funny because in 2014, someone found a tweet, I don't know if you saw it, Mike, that Trump was saying, if the Dow drops 1,000 points, the president should be...
Yes, exactly. He's conveniently deleted that tweet since then.
In his defense, I don't like the guy, but in his defense, Dow was much lower at the price right now than back then. So right now it would be equal of around 4,000 points. So we still have some space to drop.
We'll give him the benefit of the doubt on that one, but you can already see people are using that as a stick to beat him with.
Yeah, for sure. Well, with Dow Jones right now, need to remove that. What we can see is where Dow reversed last time is essentially this consolidation. Because if I place my volume profile, even from all the way to the low to the highs, that's going to be one of the biggest high volume nodes. So this is going to be more clear. This is going to be one of the biggest high volume nodes, and that's where the price, you know, rejected last time. So that's what caused the reversal and held the price previous time and when it dropped there. Now what we can see now is if we zoom in for 4 hours and we also place the volume profile over this whole consolidation at the bottom, we will find similar thing happening. The only difference is that this time the volume is slightly higher. So as we can see, it also did reach the same reversal zone. And it did try to go up, and it is still trying, right? So right now I'm not necessarily looking for the entry because it dropped a lot already, and it did reach the rejection zone, but I'm still bearish on the stock market of US. One of the reasons for that is still tariffs are still there. He may call them off, or he may not, because it was just reinforced yesterday even more, and that's why the drop continued. I think we still have some time until the deal, some kind of deal, is going to be reached, and then we might see the reversal. So purely from the Trump effect, I still think we're going to go to the downside. Also, technically, if we look at this drop down, that's where the majority of the volume was. So if someone was looking for a buy, was here, and then we reached this zone, and we reached this zone, and it did drop back down again. So we did have another drop from the same zone. So now we are consolidating, but my preference is still bearish, because if not, then we wouldn't be rejecting from this zone. We would go slightly higher at least. And I have two scenarios that I'm looking for though. Either we are going back here, and then I'm gonna look for a sell. So either I'm looking for something like that, and that's in the best case scenario, because then we might have a good entry here for a sell. In the worst case scenario, it's gonna drop from here, and we are just not gonna have an entry for a sell from the current moment. So both fundamentally, technically, I can see that the preference and the control is still on the bearish side of the Dow Jones. I don't see the entry right now. We still have the PMIs coming, so I would probably wait for the PMIs in the second half of the day, closer to new session, and already look for the entry, because as we can see for London, it's still consolidating.
Yeah, absolutely. Cool. Guys, those of you who are just joining us, very much great to see you. Void, if you're picking up background noise, my apologies. I am in a shared office, so you're possibly picking that up from my side, so I'll be cautious and conscious to try and mute myself. But those of you just joining us, just to give you a reminder, we do have the big 5ers event, the MasteRisk event, taking place on the 11th of March. So in less than a week from now, and I suppose probably better than me or Anastasiia telling you about it. Let's get our good friend Alex to tell you about it.
MasteRisk free online marathon is going to start super soon. 6 sessions, 8 experts, and 6 live hours. So on March the 11th at 9 AM GMT, we are going to start with all of the risk management topics covered in one full day of practicing strategies and live demonstrations. What's going to be included? Free exclusive resources, a new account exclusive for the event, and 15 10k high stakes accounts up for grabs. Now the first 5,000 people that register will get access to an exclusive contest. So go below, join now for free, and we'll see you there.
Mike, you're muted. We cannot hear you.
Oh, sorry. There you go. I was Void scared me with all my background noise comments, or his background noise comments. So I muted myself. Yeah, if Alex doesn't convince you to join that MasteRisk event, then I don't know what will. You guys have got an amazing lineup. You've got Anastasiia herself is going to be joining, I think, alongside Alex as a host. Yeah. And then you've got a massive lineup of people throughout the day, 6 hours. So do make sure that you check that out. Yeah, 8 speakers. So it is going to be quite the event. If you sign up for now, there are limited spots, but there are going to be there's going to be a contest basically, and there will be exclusive accounts. There's a bit of a hybrid account, so if you go out and check the website, then the first 5 people get access to that contest, and they'll get access to the account. It's a bit of a hybrid between a hyper growth and a high stakes, from what I understand. So make sure you check that out. We'd love to see you guys join us for that on the 11th of March, 9 AM GMT. Yeah, there's going to be, I think, a lot of education that people are going to find very, very useful for that. What are you looking forward to most on that, Anastasiia? Have you got a particular session that you're looking forward to?
I'm looking for everything, to be honest with you, in our Risk Marathon, because it's gonna be such a packed event with like so much value, you know. Because when I was starting, I was dreaming about having something like this. You know, there is a lot of information online, but it's so unstructured that it's difficult for the new trader to come in and know what is important, what to focus on, because from different sides we have people shouting, you know, this is important, that is important. And the fact that we have such a lineup structured event makes it very easy for everyone to come in, to know what to focus on, how to structure their trading system in the best possible way to maximize their profits, to minimize their risk, and to also balance it with a mindset, you know, how to approach it in a best way possible. So I'm really looking forward for everyone. And you know, as a host, I'm gonna be all the way in the back, and I'm gonna be listening to every single word on this event. So I'm gonna be ready myself also to learn more things, you know, from our amazing speakers. I'm really looking forward for that. And guys, again, besides a lot of value and information, you're also going to have the access to the contest. You will be having the access to the giveaways to make sure that you join all the way in the beginning to not miss out any information.
Yeah, absolutely. So the link is in description, guys. Make sure you check it out. You can sign up for free. You've got the full schedule of what we're going to be going through on that. So you've got Jordan from TradeDelicious, you got Victor and Jonathan, you got Saul, you got Michael from TradeThePool, you got Rich. So those of you who know Rich from TradeDelicious will be there as well. And you've also got Jonathan at the end doing a live demonstration and Q&A. So you've got all the information there. You've got the special offer about the 10K 10K high stakes accounts getting away. There's the contest. I mean, there's so much there. All the information you need is on the page. So make sure you check that out. It is definitely going to be an event that you don't want to miss out on. There is also the X profile where you'll have updates on there as well. So make sure you check that out. Kim, the event is going to be live on YouTube. So once it's finished, then absolutely it will be available on the 5ers YouTube account. So you'll be able to go back and watch that back. So yeah, yeah, William, absolutely. You know, we're trying to make sure that we've got the best possible lineup that you guys could wish for, frankly. So that's why I'm not on it, because I'm not as good as these guys. So make sure that you do check it out, because it's definitely going to be one to watch. I will be tuning in myself as well. So definitely want to be worth checking out. Ashish, do you guys have an English language Telegram channel for market updates? We don't have an English Telegram channel for market updates. There is a Telegram channel, but not specifically for market updates. Market updates, we've got these streams. We've got a Discord for any traders who have an active challenge account with the 5ers. You can access the Discord through your dashboard. So make sure you check that out as well. A nice lie from me. I don't know what lie you're talking about, Haresh.
They are talking about you undervaluing yourself and being too humble.
When I can say that I'm consistently making profit, then I will start to consider myself as part of the elite group that are going to be leading this main event. But I'm still way off on that one. As I said, those of you with us yesterday would have heard I spoke a little bit about the psychology side of things, and I suppose that's the one thing that trading has given me is, you know, I was always quite self-aware of my flaws and my demons, let's say, but trading has really helped me to become more self-aware of those more than I was before, and really shine a mirror on things. And it just so happens that I started trading around about the same time as I started going to therapy, and if I can bring anything to the table, then that's certainly my perspective on things, is making sure that, you know, you're honest with yourself when it comes to trading, because once you start doing that, that's when you can really start to see some momentum in your trading results. So yeah. So that's just a little bit about the event that's coming up on the 11th of March. Gold is something I'm just keeping an eye on still. Gold is kind of just sitting around a little bit, Anastasiia. I don't know what, I know you're looking us to break this level area here, I think is what we marked out. You're looking for us to break this one on the 15-minute. It's just not really managing to do it at the moment. I noticed on the 15-minute we've created liquidity on either side with this inside bar. To see eventually if we some probably would see something like this. That would probably be
so slightly can you hear us?
You might have lost me. It might be a degradation on mine. So my apology, guys. Let's see if we can bring Anastasiia back.
There we go. Now we see the arrows. I think you're back.
Okay, apologies for that, guys. I think it's my my degradation on my internet today. If it's not StreamYard, it's my internet. There's always something. So what I will do is I will bring up your charts, Anastasiia, because I know you are with us until past. Is that right?
Yeah, that's
if
correct.
I'm not mistaken.
Yeah.
So I'm gonna dip out quickly. I've got your chart up, everyone can see it, so I'm going to dip out quickly. I'm going to take the opportunity to restart my computer and just make sure that the internet is not going to play games with me, because I'm with you guys from past and then until for the next 2 hours after that. So I'll be back in a little while. I shall hand you over and leave you with the very capable hands of Anastasiia, and I'll see you guys in a little while.
Thank you, Mike. So, well, as you guys can see, my USDCHF actually did hit my break even. I don't have the ability to switch around and play around with the setup, so you guys will be able to see my face really big on my screen. But anyway, USDCHF actually did hit my break even. I'm not going to be re-entering that at the moment. AUD/USD is still running, it's still bullish. So no other confirmation I got from there. So I'm really looking for. Thanks, Jonathan. Thank you. Jonathan fixed our setup from the back. Thanks a lot. I think at least it's Jonathan. So what I see here for AUD/USD is still the continuation to the upside. And since USDCHF is out, AU is the one that I still have running. And someone was asking about the indices. So US 30 we talked about. Now S&P 500 actually looks better from my perspective, because as we can see, we had the same thing. We reached the reversal level from 57.32. The volume level price perfectly pulled back to the upside. This is the one that I had marked up already from several weeks ago. So we perfectly reached this level. And then the price pulled back towards the previous point of control of this whole drop. So when the price was dropping, the majority of the volume was added to the market here. So that's where the price pulled back. Also, we had the rejection from both of the zones, and now the price is dropping. But I do still see the continuation from here to the downside. So I'm going to be looking for the short for S&P 500. Like a more risky entry would be just buy market right now, but we have the PMIs coming in 2 hours from now. So I'm going to be looking for the price to close below the volume. So at least go below the volume. So I know that the bearish move has started, and then I'm going to be looking for the short. So I'm going to play it more conservative, but this is a S&P 500. I think it's going to still be valid today. So you guys can mark it up for yourself. Again, as long as we are below the 57.99, that's going to be something I'm looking for short for S&P 500. Okay. AUD/USD is showing weakness. Vinny is saying in lower time frame. Well, I'm not looking at lower time frame actually. So I'm looking at 30-minute time frame, and 5 minute. I'm only looking at the footprint. But as long as my 30-minute time frame, 1 hour time frame, 15-minute time frame is bullish, I'm going to stay bullish. So I'm only exiting the trade when I have the confirmation on the time frame that I was looking for the entry. So I have my volume zone here on 15, on 5, on 30. It's all the same zone. So as long as we are above this, I'm bullish for AUD/USD. Of course, obviously, I might be wrong, but that's my perspective. As long as we are above this, at least above 7.35, I'm gonna stay bullish on AU. What's exact information you're looking for short S&P 500? Well, let's get down to the lower time frame so I can show you. I want the price to be below this consolidation. So as long as the price goes below the consolidation, preferably closes on 15-minute candles. So 15-minute candle closes below, I'm going to short it afterwards. Because the consolidation plays as a volume zone, and the volume zone plays as a resistance. So it's most likely going to hold the price from going back to the upside. So I want to see the price lower, hold it lower, closing lower as a sign that sellers have taken the momentum over. And I suppose that is going to happen on the PMIs right before, right after. And that's where I'm going to be looking for the short on S&P 500. Again, I like my indices. In the past 4 years, I didn't really trade it as much as I would trading it during the first presidential period of Trump, because in the past 4 years we had less liquidity in the market, so lots of liquidity has left US stock market. Now it's coming back slowly. Let's see what is going to be afterwards, but right now actually I've been trading it much more frequently in the past months than in the past 4 years, in fact. Gary, we talked about gold, so you can always already watch the recording afterwards. Recording is always available. So for gold, we are looking for bullish movement. I'm looking also for a buy, but I want first also to see that it's definitely bullish right now. And for a current moment, it's still stuck. So it's kind of not doing anything. I want it to be above the previous zone of volume at 29.18, 29.20 before buying it. So yeah, 21.18, 29.20 somewhere, and then I'm going to be looking for the pullback and for a buy. And right now it's stuck. Mike was showing it, but his laptop was like PC was not cooperating, but he was showing that he's still expecting the move to the downside before their still bullish continuation. And I also can see it still happening during New York session. So either this or that, and then I'm looking for a long, yeah, but not right now. Not for right now. So let's see. AUD/USD is back at break-even. I didn't move it to break-even yet, so it's still at, right now it's at 0 for me. So a very slow trading session today, but it is what it is. PMIs are coming, NFPs coming. I usually don't even trade on Thursdays right before the NFP, because the market is usually just that, and it's waiting for the updates from the NFPs. But let's see. So what's going to happen tomorrow? And DXY is still the same, so bearish, but I'm still see the opportunity that is going to give a pullback to the upside. So did we have any more questions? Hey Bartosz, dzień dobry. Bartosz is sending greetings from Poland. Okay, so what's the target for AUD/USD? Well, I have 3 targets for AU. The first target is 998. So 995, 998, obviously depending on the spread, but this is the first target I'm looking at. So right here. And this is a little more than 1 to 7 risk to reward, like 1 to 7. It's not the best, but it's a worst case scenario. Now, the better scenario is 1 to 5 risk to reward around 295. 295 is already the next volume zone, so that's also my next target. 295, and the next one is 420. So right here, I'm looking for the price to reach at its best. So at the best, if the price goes up, I'm gonna get more than 1 to, let's say 1 to 6, no, 1 to 5.5 risk to reward with this one. And I'm going to be just looking for the footprint charts. I'm going to be looking for the reaction. If the price shows me reaction lower, I'm going to be playing it safe and closing it conservatively, manually on one of the previous targets. But the last target is 420, 430 level. Hey, take care. Hey there, take care, Void. Oil, that's an interesting question for oil. No, okay, USDCHF kicked me out on break even, so let's close this one and open oil.
I am back. Hopefully you can hear me okay, and my internet has picked up a little bit.
Seems like it's fixed now. We are looking at oil. So someone is saying oil at the buy levels. Well, you know, there is a saying, don't buy the bearish markets. And well, I think we can clearly see which kind of market oil is. It's definitely bearish. Besides this, also it's based on Trump's policies that oil is dropping right now. I don't really see the bearish, any bullish signs for oil, to be quite honest with you. It just broke this huge volume zone, also had it marked up already a couple of weeks ago. And we had the pullback from it to the upside and then rejection to the downside. It was a beautiful short, not gonna lie, I completely missed that one. So that was a beautiful short here for oil. It's a part of the game, right? And right now we are going down. I can kind of understand why you are questioning long, because perhaps the price is right now on the previous support level. But realistically, if it was dropping for so long, what can stop it from dropping more? You know, it can drop much more, much longer than we are able to pay for it. So right now, I don't see any bullish signs. My mouse keeps disappearing today. I don't see any bullish signs for oil. I still see that we at least go down for another 30, 40 ticks. Maybe here a reversal, but I also wouldn't buy from here. So I would only buy something that has been bullish for so long if it actually shows a break of structure, the sign that, okay, the bearish trend is over. So for me, for oil, it would be something like this only. Earlier than that, I wouldn't be looking even for longs, to be honest with you.
Cool. Here he is. I was just about to do a proper professional intro for him, but Victor he's so eager to come and join us. I'm not sure if you... Here we go.
Hey,
no. Good morning, everyone. Anastasiia, Mike, how are you guys doing today?
We are good. You're sounding a little bit croaky. Have you come down with the same thing as Jonathan?
I have. Yes, I think so.
This is not good. This is not good. Somehow, you know, all of us are located in different countries, hundreds, if not thousands of miles away from one another, and yet everyone seems to have come down with some kind of bug all at the same time. Something's going around.
Yeah, I think it's so contagious that it even contagious each other through the virtual connections.
Online.
Absolutely. Even StreamYard seems to be suffering today with some technical gremlins working away today. So yeah. Anastasiia, I know you need to jump off. Guys, we'll do a bit of a quick reset, and we'll be back in a minute. Victor will be jumping into the charts and showing us what he's working on. So just give us a second, and we'll be right with you.
I like that. That's an awesome intro. Let me show my screen in the meantime. I see that of course, my screen wasn't there because I didn't put it yet. How is everyone doing? Let's see. Mike.
Sorry, Victor. There's I forgot to mention there's a bit of a sneaky trick to getting StreamYard to work today. We can see our charts and our screens being shared, but then the guys on the live stream can't. So we have to do a little bit of a wiggle like this and kind of make ourselves a little bit dizzy. And then
Really?
eventually it does come up. Yeah. So just to add a little bit of fun to the games. Let's have a look. We'll see. I've just got it up on my side screen here to see if it shows up. There we go. Your charts are on the stream. So I will leave you to it for a little bit. I will be back shortly. I just need to grab some lunch, and I'm sure the guys are excited to hear from you and your insights on the wonderful things happening in the markets today.
Before you leave, Mike,
Mm.
is there any specific layout that is working and one isn't, or is it just you have to switch around until it
It's-
works?
Basically, the two middle ones. So these two that we've got right now,
Mhm.
those seem to work, and I just basically flick between the two once you start sharing. So it seems to be a problem when we swap screens. So if I start sharing my screen, we can see it as being shared, but the guys can't for some reason. So yeah.
And the way you test this is by watching the stream as if you were a viewer.
Yes, that is right.
Mm.
That is right. Venetius, thank you very much. I'm not sure if I'll have chicken feet or not. I know Victor's a big fan of the chicken feet, aren't you, Victor? So maybe I'll go and have some chicken feet for my lunch. But I won't be long, guys. I'll be back in a little while, and I will leave you with Victor. Alrighty.
Chicken feed. What shall we say about chicken feed? All right, so let's see. I'm going to switch to this layout, but I'm going to check online to see if on YouTube if this is, or maybe you guys in the chat can confirm that you can still see my chart. In the meantime, I will check to see if there's anything, if this is visible or not. I simply like this layout a little bit better. I'm checking that as we speak, just to make sure that you guys can see my chart as well. I hope you are doing. Yes, all right. It seems to me that you can see. Okay, perfect. So how is everyone doing? My voice is still on its progress of a comeback, but hasn't come completely yet. But it's okay. It's no problem at all. All right, I think we all want to see price action on GU and EU as well, and perhaps on gold, as it has been very powerful. I mean, very interesting. The moves are very powerful last couple of days, and especially in EU, I find this to be such a beauty. I know I say this many times. I know you guys know I am a price action trader. I love price action. And I love those order blocks when price react to them with a wick. It seems like magical. I find myself to be like a little kid in a candy store watching all kinds of interesting things. But if you look at the chart, I had this chart is I didn't touch with it. These yellow dotted lines have been here for some days. You can go back to the stream and watch EU whenever I analyze this, perhaps even a week ago. And these lines, these two lines that you see here, have been in place for some time. I honestly don't know when exactly I've put them on the chart, but I can assure you it wasn't today, it wasn't yesterday. It was plenty of days. And you can see how I indicated, right? It's not about me, saying I told you so, but it's about price action. It's about how, although the market is, has a big random part of it, there's a lot of randomness in the market. A lot of things aren't, right? Price action isn't random. And this is proof to that. Whenever we see this, I indicated earlier that this is the completion, where I'm indicating it right now with a yellow arrow. I see in the chat that I'm breaking up. Is it? Let's see if it's something that is. Let's see if I can do anything about it. It is better now. Is it? It should be. I'm going to let me see if I can do anything to. Yeah, it should be fine now. Let me know in the chat if there's anything, if it's still not optimal, but it should be perfectly fine. All right, so as I was saying, the yellow arrow here indicated the completion of the quasi, right? And yes, I say quasi again, because that's basically the two concepts I trade. I trade the order blocks and the quasis. So you'll hear me talk about them anytime I analyze. I'll at least say once on one of those two words. This is the completion, right? This is the top of the structure. This is the left shoulder. That is the head. This is where the neckline, the basis of the left shoulder is, and that becomes the neckline. It is broken, comes back, and interacts with some structure of relevance, forming that right shoulder. And this then becomes the completion of the reversal pattern. In the classical head and shoulder, the pattern gets confirmed when this line gets taken out, right? This the structure gets completed, and it's for a reason, right? That the head and shoulder is only completed when we take out this line. And I don't trade it that way. I trade I enter at the formation or during the formation of the right shoulder, meaning in here or in there, as the market is reversing and trying to complete the structure. And what I do is I aim my first TP. One of the TPs is at that completion of the structure. And if there's more reason to it, I want to keep it open for the next TP. And in this case, the next TP was all the way here. And you can see how price went there very quickly after taking out that level. It's nothing else to the left mattered, it seemed. And it went straight to that area. That is so beautiful to see. I love seeing that. It just I see this all the time, and I get all fuzzy inside when I see it. All right, so let's see. Perfect. Okay, perfect. Let's see. Let's make a top-down analysis on EU. Do you guys have any requests, any pairs you want me to look at? Or maybe you have a question. Maybe you're wondering something about price action, something about trading, maybe something about anything trading related. Just let us know. In the meantime, if you're enjoying this stream, and if you're enjoying our content, our hosts, those the speakers we have on our show, hit the like button. Hit the like button. Show us your your appreciation for the content we bring to you. It is necessary so that we can reach more people. The algorithms on YouTube, they pick up those those number of likes and subscription. So hit the subscription as well. And the YouTube will, of course, present our show to more, suggest our show to more viewers, which is, if it's good to you, why not? Let's share it to more people. The more, the merrier. Okay, in the meantime, before we continue, I would like to have Alex with us for a few seconds. And by that, I mean, of course, I want Alex to come and tell us something for a couple of seconds. Are you guys ready?
MasteRisk free online marathon is going to start super soon.
I
6 sessions, 8 experts.
Ooh. Okay, so that's the that is the issue we are having. apparently we not everything is working.
MasteRisk free online marathon is going to start super soon. 6 sessions, 8 experts, and 6 live hours. So on March the 11th at 9 AM GMT, we are going to start with all of the risk management topics covered in one full day of practicing strategies and live demonstrations. What's going to be included? Free exclusive resources, a new account exclusive for the event, and 15 10k high stakes accounts up for grabs. Now the first 5,000 people that register will get access to an exclusive contest. So go below, join now for free, and we'll see you there.
Perfect. Thank you, Alex, for those announcement. Yes, don't forget we have this event coming up. It's the 11th of March. If you haven't registered yet, go do that, because it's going to be a great event for your benefit. There's so much knowledge waiting for you to absorb and become and use it to become a better trader. So don't miss out on that opportunity. All right, so let's look. We had a couple of questions I saw in the meantime in the chat. One of them, let me see if I can bring it up. Let's see if that works fine. Someone asking how I can breathe while wearing a mask. I don't know how to answer that. I'm breathing. Let's see. Okay, so what time frame? Let's check this one out. What time frames do you usually trade the most in order from 1 to 3? Okay, in order from 1 to 3. So you want 3 time frames that I trade the most in order of importance, or perhaps frequency. Well, the thing is, I don't trade one single time frame, so I wouldn't be able to tell you, this time frame I use more often than the other ones, because that wouldn't be true. I don't trade one single time frame. What I do is I start from the monthly for the analysis, but on my day trade, they start on the H4, right? So that's the first time frame I look at. And if there's nothing there, I do nothing. I go to another pair. I have 2 pairs that I trade. And if both of them have nothing on the H4, I would go do something productive, something else, maybe trading related or not. So I go from the H4, and then I go, if there's a reason for me to trade on the H4, I will then go to the H2. And that is the way that I trade. I use all the time frames. To look for that alignment. I need that alignment to get into the trade. So it's H4, I go to the H2, H1, and if they are aligned and they're telling me there is a setup, then only then I go to the minutes. And then I have a couple of time frames I use for my trigger, which are the 5, the 3, 2, and the 1. And I can use any of those as long as there's a signal in that particular time frame, right? So I don't need to have alignment on the minutes. The alignment comes from the hours. So I have on the hours, I have the setup. To me, that's the time frame of the setups, of the alignments in the hourlies, and the minutes is for the execution or the signal, the trigger. And on top of that, I start doing that before I look at the H4. But on top of that, there's another layer, which is the daily and the weekly. And depending if I have alignment from the H4 with the daily, and maybe with the daily and the weekly, I would then convert the trade, a part of it, not all of it, to a swing trade, right? So if I have a daily reason, then I'm going to have daily targets for a part of that trade. And if not, I'm going to look to close that trade intraday. So I'm a day trader as the basis, with the possible expansion or extension to a swing trader when I get the moves or the setups that merits to have a swing trader. So basically that's how I use the time frames. So it's not, as you can see, it's not one particular time frame that I use more than the other. So I'm afraid I'm not able to give you a top 3 of time frames. Another question here, Do you use any other indicator other than your price action, order blocks, and the quasi? This is from Kim. I don't. Actually, I do, but it's not what you think. For my setup and for my entry signal and for basically all the inputs of, not all the inputs, the direction, the reason to buy or sell, I have no indicators telling me anything, right? So I would like to say my chart is naked, but of course, as you can see, it's not naked. I do have objects on them, which are the order blocks and the quasis. And of course, yes, I do have a retracement tool, and that's an indicator. I mean, I do use that to indicate, right, where is the half, but it's only the 50% retracement. So where's the half? I want to be trading at the most, the best price possible. So I don't want to be getting in too early. I want to have a deep retracement. I'll talk about the quasi if you guys want me to. But that's the only indicator that I use on the chart. I do use another tool that is an indicator. And that is, I will double click on my chart right now and you'll see it on the lower section of the bar. And that's the ATR. And I hope you can see it. Let me get the comment out of the way. You see that red graph below, that's the ATR, which is the average true range. And that helps me in a number of ways, which we can discuss as well during the day today. That's an indicator, and I do use that to, for my stops, actually not for my stops, for my targets, and other things as well. But I would like to say, although it's not completely true, that I trade a naked chart because I don't use any, moving averages or RSI or MACD or things like that. The, typical indicator kind of a signal. I don't do that. But I mean, it doesn't mean it's not, you shouldn't be doing that. Indicators are just a derivative of price, right? That's usually what they are. And there are different ways to be a profitable trader. You don't have to be all trading the same way. All right, so let's look at the chat to see if we have any other questions. The link to register, you can check the, there you go. I see that we have posted already the link. Thank you. And I see Estrada say bom dia. Bom dia to you too. No, that's the only thing I can say in Portuguese. Bom dia. That's it. All right, let's see what else. Sure, we will discuss the quasi trading strategy for sure. No problem. We have one question here. Interesting. Let's look at this. Alignment. You mean same direction, I suppose, and also look at the higher and then go lower, but normally only 2 to 3 times lower. Thanks for the explanation. We'll keep it in mind. Alignment. Alignment is a huge, well, it sounds like an exaggeration, but it's not. Alignment is it's the idea of confluence, right? So meaning you need two things. And I use the word indicator because they indicate something, but not necessarily an indicator on your chart. It can be anything. It can be price action. It can be time of the day. It can be anything. But having two things, right, telling you the same direction, the same thing, meaning price is likely to go either up or down, right? That's basically confluence. Now, when you have two time frames that are aligned, what I mean by that is exactly that they're telling you the same thing, telling you that, sellers are taking control or the buyers, whichever side, doesn't matter. But as long as they are sharing the same, not signal, the same indication or the same thing, then they are in alignment. And there's a certain things yesterday with Ashley, we touch a little bit upon this. There are certain depending on your strategy and your approach and so on, there are different, I would say, rules, right? Rules. You cannot use, any random time frame and then match it up with another random time frame as well. Meaning you can't. There has to be, for the alignment to have some relevance and some edge. It needs to be at a certain optimal distance to each other, or a size, a ratio to each other, right? And that ratio may change according to the approach, according to the trading style, etc. Let me give you an example. If you're trading, if you're looking at the daily time frame and you're trying to look for confluence on the 1 minute, that alignment, they may be aligned, but that alignment doesn't say much. It's not very helpful. Why? Because a 1 minute chart and a daily chart, although yes, they make part of they're looking at the same price, but they're too disconnected, too far away to give you any meaningful alignment, right? The confluence isn't very relevant. That's one thing. The other thing is, they shouldn't be too close to each other either, right? If you have an H, I say 1 minute and a 2 minute, they're probably going to have alignment, but I mean, it's not very relevant either, because you're going to see both of the same thing on both time frames, and it's not going to help you. It's basically looking at the same chart, just slightly a slight different time frame. So it needs to be somewhat of a difference, right? A little bigger or smaller, but not too big of a difference. And in my case, the rule of factor 4 is what I use, but it doesn't have to be the same thing all the time. It can be factor like factor 2, meaning your step, if you go up, you go twice as big. If you go down, you go twice as small, meaning you go half. The step 1 is half the one that you're looking at. But it depends on your style, and you'll have to collect data to see what time frame step is optimal for your strategy. Okay. All right, perfect. Let's see, do we have any other questions? Difficult to see the ATR on a dark screen. This is the ATR. Actually, the ATR, it is the actual graph isn't that important. Yes, I do use the graph from time to time, but what is actually important is I can actually mark it, but is the number, the value of the ATR. So that's why it's not very important whether you actually see the chart or not, the ATR chart. As long as it's visible right there with the numbers, that's enough. Right, so just have to see. In this case, it is the daily ATR is at 101.2 pips, and that's it. I don't use the rest of the graph below. Actually, I don't even have it visible most of the time. Okay, perfect. Great stuff. Let's do some analysis. And I'll check the chat if we have any special requests. But I'll start with the EU, and let's look. Yes, I'll start with EU, and depending on the request, I may switch to another pair. And time permits, we'll do the quasi. I'll give a little bit of an explanation on the quasi as well. So stay tuned for that. Okay, let's look at the monthly time frame. Is there anything we see here, right? I ask myself the same question on each time frame. Do we have a reason to trade this time frame or not? That's it. That's the question that's the first question that I ask myself. Do I have a reason or not? And I don't have a reason, and I'll tell you why. It does look quite congested, but I've come accustomed to using these structures. So when I'm at the monthly, I only look at, so I don't look at the weekly right here, and I don't look at the yearly right here. I only look at those order blocks that have, of course, the M of monthly, right? And I've, trained my eyes. I do this all day. So it's easier. It's let me get that out of the way. It's very easy to see that there isn't anything else other than we have, of course, there is. Let me take that out. We have a mic. Hello.
Hello. I am back. Post chicken
Well,
feet.
How was it? How is it, the chicken feet?
Oh, delicious. Delicious.
I hope they're crunchy. Were they?
Oh, yes. Absolutely. I'll be going to see my dentist after this.
As I was saying, the first question I ask myself is, do we have a fresh order block or a order block which is part of a quasi? And we don't. We have a daily here, but that has been already mitigated, and once it's mitigated, I don't use it anymore. We have another order block that was taken out right there. Other than that, we don't have a fresh one. We don't have this order block would be an area we could trade from. But we haven't reached that yet. So we don't have a reason for the monthly. So basically, the monthly is telling us nothing relevant for today. That's basically in a long story short. On the weekly, what do we have on the weekly? On the weekly, we have a quasi. You can see this big trend of price going down, but the exact swing points that I use are these. That's the established downtrend. It gets taken out, and that becomes the head and shoulder, where I'm going to be looking for. It's not the head and shoulder. It's a quasi, not a typical head and shoulder. And I'm going to be looking for price to come back into these structures that price left to trade them, to trade that reversal. And that is exactly what price did right here. As you can see, we knew this order block. We knew that there was an order block here since 14th of November 2022. So almost that's 2 years and 5 months, almost. And price, you got to be patient. Price comes back eventually to that area. And what does that order block tell us? That there is a chance, not a guarantee, but there is a chance that once price comes back into that order block, it does that, right? It has some kind of a reaction. It can be a pop. It can be a complete change of trend and continue higher. You don't know in advance. You don't have enough information in advance, of course, because that's going to be in the future. You have to wait for price to do that, and then, read price, right? Read that price action. Is it really a strong reversal, or is it just going to be a pop on and then continue lower? But the one thing you can be quite certain is that there is going to be some kind of a reaction. Very rarely there is no reaction. Well, that happens as well, but most of the time you will see some kind of reaction, right? So we had the first reaction, which was this, was very muted, almost a non-event. We did have a bullish engulfing coming in, being printed, but price had no follow-through. Price followed straight down after that candlestick combination. Then, let's see if I can take that out. Where's that? There. Then we had, lately, a few weeks ago, we had that order block being created right there, right? It was at the end of this week, which was the 10th of February. So it's been, what is that? 3 weeks ago. That is the sign, price action telling us that the buyers are coming in. That's exactly what we were supposed to see based on that weekly entry order block on the weekly quasi, and that's the basis for price to go much higher. Now, on the weekly time frame, the next structure that price makes sense for price to go to is this structure, right? Because it's leaving a weekly order block. See that? And automatically, this one wasn't created until later, right? By the time this was the first one, the bottom one was created, the middle one wasn't there yet. So if it's leaving one station of the order block, right, price moves like a train from station to station, and it's leaving one weekly, and typically very often it goes to the other one in the opposite direction. So that would mean that it's fair to assume that price is going to that weekly order block on the other side, which is above us, which is also one of the TPs that I have indicated. Now, but that's on the weekly, right? So that's fine. That's all fine and dandy. But on the daily time frame, we can use our eyes, our X-ray eyes equipped with order blocks and quasis, and see how the reversal develops, activates the quasi, right? That's the left shoulder, the head. That's the down lower lows and lower highs and lower lows, the break of the structure, right? Very simple, no rocket science here. And it comes back to that order block we have below. Beautiful. And reacts as it should. As you can see here, it reacts. It didn't touch that, didn't take that high yet at that moment in time. Reverses for a little deeper, gets some momentum, and then shoots right through it. Actually, I was talking about that we were still expecting price to take this out, because the completion of the quasi, it's a high probability event, right? Usually it completes the quasi. That's something happens very often, not all the time, of course. So it breaks that order block, right? Completing that quasi, that reversal pattern on the lower time frame. And where does it go to, right? It tries to go to the next. Remember what I just said, right? If we're leaving a daily order block behind us, we're probably going to the next daily in the opposite direction, right? And yes, there are some order blocks here that haven't, this one has been mitigated already, so I shouldn't say it wasn't mitigated. That was mitigated already, but we still had this order block that is still unmitigated. So it's safe to assume that once we break this structure, the next structure we're going to go to with a high degree of probability, I didn't know it's going to do this as fast as it did, but it doesn't surprise me. It's actually beautiful, because once it breaks it, it seems like there was nothing in between to stop price. And price goes right to the next, like in a hurry, to the next station. And that's exactly what it did. I didn't know exactly that it's going to touch this yellow dotted line or not. It doesn't really matter. The thing is, it wants to get close to that order block, and eventually I think it's going to touch it as well. So that's on the daily time, or that's EU on the daily time frame. Make sense of this bullish run, which in terms of price action makes complete sense. If you were looking at this reversal pattern developing, this is what you would expect. If it breaks and it completes that reversal pattern, what do you expect? It just confirmed a reversal pattern. It's going to go the other direction. And if it's leaving a daily order block, it's going to go to most likely another daily order block in the opposite direction, especially if that order block that next one is an unmitigated one. So, and that's, makes complete sense. This is all from the chart. I haven't looked at the news, not listening to what Trump says. I'm not listening to what Mike says. I know Mike is very influential on the geopolitical arena. I'm just looking at the chart. And the chart are telling us, not all the time, of course, but the chart is telling us, a lot of the times, everything you need. And of course, I'm a price action trader. I'm a technical analyst, so I'm going to say that you don't need fundamental news. But it's true. Most of the time, you can trade perfectly fine with no fundamental news, awareness of that fundamental news. All right, so this is the daily time frame. I don't want to go to the lower time frames, because to me, this is the bigger picture. And so I asked myself, okay, do I have a structure here? Do I have a reason to trade this daily? Well, the area on the daily was this order block to be trading. We're past that, way gone, long time ago, right? Price came back into that order block, the second one it created, right? When it came back into this order block, it created another one, and it came back, retested it. That retest could have been another reason to get into the trade, right? That's already gone, and long gone. On the daily time frame, this quasi is done. Either you got in at the right place, or you just have to wait for the next train to come and pick you up, right? There's nothing, you're not gonna run chasing the train once it's already leaving the train station. So this is the quasi here. There isn't any reason for me to be trading. There is no fresh order block. There are entry order blocks on the quasi. These areas, by the way, because the quasi was created and validated, activated, and completed, doesn't mean these structures, they stop exist. Because sometimes even after completion, price can come back and use to mitigate them as it keeps on going much higher. But as you can see, price has really left this area by, clearly has left it. The more the further away, the farther away it leaves this structure, the less likely it is that these entry order blocks on the quasi are still relevant, right? It makes sense. If it's still there, if it only had made something like, let's say, peaked, completed the quasi, but came back, you can still use those order block as it is moving out, perhaps doing something like that. That makes sense. But once price is clearly leaving, from this point, it's clearly leaving, this whole complex of price action behind it. Clearly see that it's way, it's doing something else. It's going for another price discovery and structure discovery. If that's the case, then I'm not eager to trade these anymore, unless I have some confidence on some other time frame, maybe the weekly or so. All right, so that's based on that. I don't have a reason to go long or short anymore on euro. The momentum is to the upside, of course. As we are getting into these structures, you can expect sellers coming back. That doesn't mean it's going to reverse necessarily, but it's going to at least decelerate. But how far it's going to go before deceleration, or even with deceleration, how far it's going to go, it's kind of difficult to know. You can, of course, get some ideas based on the ranges, but at the timing of that reversal, right now we don't have any reason to think it's imminent. That's it. On the H4, I don't have a reason to go long or short. The only thing we have here, of course, is this order block that was left behind. If price comes back to that order block, that could be a reason for us to take a long from, as long as it's fresh. Other than that, I don't see anything. I'm just sitting on my hands on EU. Very beautiful price action, I must say. Let's check the chat to see if we have anything from the audience. Trader Lawrence says, have you managed to cash any longs on EU recently, Victor? To be honest, not recently. There was a trade that I took here quite some time ago, and at that time my daily time frame wasn't signaling me yet, so I didn't, according to my trade plan, I wasn't supposed to hold it further down. I would have needed it to come back to that area, or I think it was this one, for me to hold it long. So I did have one, but very few, and it does happen from time to time, that I don't catch every move. Even though I can see them coming, I can read a price action, I still have to wait for my signal. My trade plan is very, very strict. Reading and understanding what's happening is not enough for me to take the trade. right? So I'm not a discretionary trader. I actually wait for the signal. If the signal isn't there, I think I like to think about it as my trade plan is my boss, right? And I'm a employee of my boss. And the only thing I need to follow is the directions of my boss. The trade plan tells me to do this, to enter the trade or not to enter, and that's it. I'm just when I put myself in that position that I'm subject to the direction of the boss, my trade plan, it takes off that pressure off me, because it doesn't depend on me to get into the trade or not. I just follow my plan, and when I put all the information in my trade plan, it tells me take the trade, I just take it. It works both way. It helps me with FOMO. It also helps me with holding the trade. If the trade tells me to just hold it, who am I to doubt my trade plan? That's my idea. That's of course, the trade plan, I made it. It's me, my past me telling me what to do. But still, that's the trade plan, and that's how I see it. And this has helped me a lot. With FOMO, with holding trades longer, holding trades for days on end. Just follow my trade plan, right? Trade plan tells me what to do. I just follow it. If it goes to a loss, that's fine. I did my job. My job is to follow the trade plan. All right. Let's see. Maku Buya Edward. Yes, sometimes price doesn't come back. It doesn't always come back to retest certain structures. I mean, it's logical, of course, right? Some are retested, some are not. And I only trade the retest of those structures, those order blocks. So whenever that happens, I just brush it off. I just tell myself it's someone else's trade. It's not mine. I let it go, and I don't lose sleep of it. If that's the expression, Mike, is it? I don't lose sleep on it.
You don't lose sleep over it. Sorry, I am listening. It's just it can get quite noisy in this office when other people are on a call. So I had myself muted. But yes, I don't sleep over it. Don't lose sleep over it.
You don't lose sleep over it. All right.
Exactly.
That's my okay. So let's look. Go ahead.
I was going to say, Victor, what's I see you've got gold open at the moment. What are your thoughts? We had before you joined us, we did have a poll earlier whether gold was going to go long or short. 75% of people said it was going to go long. It did go short for a period of time, but actually, if we look at it even on the 5 minute, it hasn't. Yes, it did pull back, but it created a massive wick down, and it hasn't broken the structure. And now it's pushing back up again. So it looks like that 75% of us that were here earlier, we could still be on the right side of this. So be good to know what you think, Victor, on your perspective of gold.
And that 75%, that includes you as well, I hear.
Oh yes.
Good.
And Anastasiia now as well. I want to be clear. This isn't just me saying this. Anastasia's in buys as well, as far as I know. So
fair enough. All right, let's do some analysis on this. On gold. Gold is very popular. We always have people asking us about gold all the time.
Whilst you're looking at it, guys, let us know in the chat. Right, I'm really curious to know. We can make assumptions as to why people trade gold, but I'd really like to know, what is it that you guys that ask for us to look at gold and ask for us to analyze it, etc. Tell us why. What is it that you really want? Why is it you trade gold? What is it that appeals to you guys? Hey, Hamid, good to see you, my friend. I'd love to know in the chat. Let us know.
Yeah, that's interesting. That would be an interesting topic, right? Why is gold so popular? What is it that attracts people to trade the yellow precious metal? And I have an idea, but I'm not going to say anything. I don't want to influence the chat yet. I don't want to make them biased. And I surely don't want to influence Mike's opinion, because I'm going to ask your opinion as well, Mike. after the chat, we're gonna have a. I'm gonna ask you so why you think gold is so popular, and so popular among the traders. All right, so on the higher time frames, there isn't actually much to see. We have a fresh order block here below us, but we're not there. We left it. It's clearly that the buyers are in control. Looking at this time frame, also just zooming out, you can see clearly we have been going up for months with seemingly no end. This is a very, very strong trend, and trend is your friend, as we have read and heard so many times. And it's for a reason, because the trend tends to continue for some time, and it's safe to. The safest thing is to assume it's going to continue going forward until you have evidence of otherwise. So guessing that price is going to keep on going, well, this is the monthly, so maybe it's not fair to say that, is a very good one. That's the monthly. There's nothing here actionable to look at. We have, if we take out everything, naked chart, price going very bullishly to the upside, very little pullbacks, just a few candles, consolidation, shallow, very shallow in comparison to this leg. As you can see, that's another sign who is in control, right? How the market is moving tells you momentum on this time frame or in a higher time frame. And price even accelerated. Look at how many bars we have on the weekly time frame with no red bars, no down candle, right? That tells you something. It tells me something for sure, right? Who is in control, where the market wants to go, etc. So if we zoom in a little bit, at the end of this, what is this? 8 weeks of continuous price going up without any retracement, we see the first sign of maybe the sellers coming in, which is this bearish engulfing, which also is a outside bar. That's a strong indication that the sellers really did come and try to push price lower, and they're, based on that order block or that structure, they're likely to try to defend that which they started last week. This is the weekly time frame. So on that note, or on following that rationale, we could see price having sellers coming back to the market when price comes back in this time, in this this candle, when price comes back to retest, and that's where we are. So if I look to the weekly, I would say I want to look if there is alignment on the lower time frame. There's that word again, alignment, from the weekly. The monthly didn't have anything to say, but the weekly is telling us we might have sellers coming in. And if we have something similar on the daily time frame as well, that could be something we could use, because alignment increases the odds that scenario is going to play out. So I have a reason based on that outside bar to look for a short. I'm aware that the buyers are very much in control on many different time frames, but still, that even though that the buyers are in control long term, we can still see that reaction. This doesn't change the bullish trend, right? A move like this, and this is what you would minimally expect from a bearish outside bar, right? Some, in this case, not a pop, a drop in price as price is retesting this order block, and the sellers are attracted to the market, and they will have a certain reaction. Actually, Mike, I'm going to take a little break to get some water, and I'm coming back in. And I'm coming back in about I don't know, a few minutes, not too long, if that's okay with you.
Sure. Yeah, of course, no worries. I shall carry on Victor's analysis of gold. So those of you who earlier would have seen, let's hopefully just check that you guys can see my chart. I'm just checking the live stream now. There's a little bit of a backdrop. There we go. Okay, so you guys can see it, which is great. So gold, those of you with us earlier would have seen that when I was talking to Anastasiia about it, we had this inside bar here created, and actually we had a second one created on the 15-minute. And what price has done is basically barcoded up and down. It hasn't taken this low here, and what it did do is it created a 1 hour inside bar down here. So again, it was just that contraction of price, but it has shot up, taken the high, and now it's really pushing with more buyers coming in. So we had this outside bar, or this engulfing candle here on the 5-minute to act as confirmation for me that buyers are getting in. We've got liquidity higher up. We've got liquidity here on the 12-hour as well. The 12-hour candle closed not too long ago. So the 12-hour is an inside bar. So there is a liquidity trail, as you can see here, being left behind. That liquidity trail is being left for price to come back and take those later. I don't think we're necessarily going to go long entirely. I'm still undecided on that. I think a lot will depend on what happens with Trump and his negotiations with Ukraine and Russia. But for now, it looks like price is going to just chop around, and it will come back and take these levels that I've marked out here. As you can see on the 2-day, we have an engulfing bearish candle. We also have it on the weekly from last week, which is also an engulfing bearish candle. It is quite possible that this week, that we're on Wednesday, it's possible this week we actually just chop around. That's also a possibility. But at the moment, the buyers seem to be stepping in, and really all we can do is trade what we see. At the moment, the buyers are still taking it. They're still holding on to that strength. Alex's lovely EMAs give me a nice added confidence sometimes when I look at these things. On the 5-minute, we did have that drop with that long wick here, but we've bounced off that 200 EMA, and we've kept going. So my assessment that we were going to pull down, we did pull down, maybe not as far as I thought we would, but we are now pushing on up, and I would expect us to certainly take this high. Whether we can push higher up than that and go for this daily inside bar, that's still to be seen. But certainly the moment the momentum seems to be with the buyers at the moment, as you can see on the 1 hour. But we've still got half an hour left of this 1 hour candle. The next couple of minutes could be quite decisive, because whenever I see a wick, so for example here we've got a bearish candle. This bearish candle closed with this wick rejecting quite strongly. So even though it's a bearish candle, you can actually see already there that there's a price saying, actually, no, we're not buying this. We're not interested in this, and it's pushed back up. Quite often, if you look at a 15-minute, a half an hour, or a 1 hour candle, or even a 4 hour candle on gold, you will see a lot of price changes in the last 5 minutes of those candles. Last 5 minutes, just keep an eye on it and watch what the price does during that period of time. You'll see that it changes direction quite quickly to try and catch people out. So at the moment, we've got a couple of minutes left. As you can see, it's now suddenly pulling back down again on the 1 minute, which will mean that the half-hour candle is now got a bit of a wick rejection. It took this inside bar here, and now it's a question of, well, is it going to leave this one behind or not? So that's just something to keep an eye out when you're looking at gold, at least from my experience. Sorry, Victor, you're back. How was the water?
The water was crystal clear. All right, so yes, as I was saying, we were on the weekly time frame. Yes, thank you for that. We were on the weekly time frame, and I was saying that based on this candlestick formation, we can already have one reason to think that we might see some sellers coming to the market. Price might drop a little bit. Doesn't mean it's going to change the direction of the trend necessarily, but this is how price moves. It creates structures, it retests them, and it doesn't always retest them successfully. It can go the other way as well. That happens. But it's safe to assume, especially if you have multiple confirmation or indication on different time frames telling you the same story, right? That's that alignment again that I was talking about. So on the weekly time frame, we have a reason to expect, or at least to look for, more confidence for price to go lower. Let me take that that arrow away. What else do we see? Let's go to the lower time frames. On the daily time frame, we do have a quasi, a nice little quasi here, which is this. Right? It may be a quasi for some people, and other people it will not, depending on how your rules are of the quasi. I have strict rules, but it doesn't matter what my rules are. The fact is, we do have a quasi formation. It may be valid for you or not, depending. So that could be the left shoulder, and this would be then the right shoulder, or perhaps that will be your left shoulder, depending on how you break down, how you approach the quasi formation. That will be the head, but depending on those rules, exactly what I'm referring to, your neckline could be here. Mine would be. So that tells me that there is a break of structure. The sellers are, their push for price lower is significant, right? Whether they're going to win this battle or not is to be seen, but their push is significant, and that's what we need. They broke the structure, and if they're going to be successful, which I don't know in advance, nobody knows, where do we think they are most likely to get more reinforcements for their push lower, right? I'm putting it on the charts already. You can see that there are two bearish order blocks that were left as price was pushing down. These are the areas I'm combining order blocks and quasi right now, which is exactly what I do in my trading. That's how I got funded, and that's how I make my money. Simple, very, very simple. Order blocks, quasi, nothing too fancy or rocket science about it. Price comes back to that, to these structures, and I don't know for sure that price is going to do this. There's no way to do that. As a trader, you don't have a crystal ball into the future. You only have data and your experience telling you, and with that, your trade plan, which is based on your data, hopefully, that tells you what is likely to happen where, right? So in the scenario is, if price is going to go down, which I don't know, where is it likely to bounce off from, right? Where is that reversal coming? Because price has been going up last 2 days, right? We can clearly see that. If it is going to go down, according to that quasi, where would that entry order block be? And that's one of these two. They're still kind of vague, I would say, because they're still a big area. But that's where you use multiple time frame to refine your entry. So what I then do is I would go to the lower time frame. So as you can see, we have a weekly reason to go short, and we also have a daily reason to go short. Mind you, this is gold. If you're gonna short gold, don't marry your trade, right? Make sure you have your stops in place, because gold is very, very bullish a lot of the time. All right, if you go to lower time frame, to the daily time frame, we see that yes, we have two entry order blocks in the daily. We already knew that from the higher time frame. We already have that. Let me check that. It's not only StreamYard that's doing weird. The TradingView is also.
I think there are little technical gremlins everywhere today for some reason. They're being sent to test us today, Victor.
I'm sure they are. All right, so we have those are the daily time frames structures. But we go to the lower time frame, and if all time frame, not all, but if key time frames are aligned, we should listen to that, because it tells us that there's the probability of that which we expect is stacking up. The odds are stacking up in your favor. So, and if we go to the lower time frames as well, let's mark to see the retracement. That's like so. That means that this is the 50% of the retracement of the leg is below that line, of course, and 50%, the other half is above it. I only trade when it's on the last, as deep as beyond that 50% retracement. And we're already past that. So these structures on the H4, which coincide with, we have 3 as well on the H4. So we are currently in one of them. And you can see how price has given us an indication that the sellers are coming to the market, right? At least that was yesterday at the end of the day. That could be enough reason for you to already, get into the trade. However, personally, I want to see more. I want to see follow through. There is a order block that was created there. And if price is indeed going to go lower, it's likely to come back to that order block and then before it makes that move. And that's exactly what we're currently doing. We are revisiting that order block. So to me, that's the area. If this is going to hold, we should see on the lower time frames reversal patterns forming in here in this order block, telling us that the price is going to reverse. So let's take a look. Let's see if we have any quasis or fresh order blocks being there. We are in a fresh order block on the H2. What does price action tell us? I'm gonna change the music. Let's see what we have. They're all great, but I like this one from time to time.
A little more chilled.
All right, so what we have here is it's important to look at, you could use everything I just did and have like a trade plan, and you get a signal and you go long or short and you don't worry about anything else. But if you really want to increase your probabilities, you want to use as much information as, not overload, but look at price action as well. Look for those reversal patterns as well. And so far, this is the order block that was supposed or is supposed to let me get this. This is the order block that's supposed to be respected, right? This is the order block right here on the H4. You can see it here. And the question is, are we seeing reversal patterns in this area? I would argue that we haven't seen that yet. At least the quasi on this time frame is below us. That's on the 2. We haven't broken that yet. Let's go to the 1. The structure is still there. We haven't seen that. There is, however, a fresh order block that is now being retested at the upper half, so to speak, of that H4 order block. So that looks promising. I'm gonna take this away because this is not relevant anymore. The other ones, that is. Okay, and this one as well. It's important to keep adjusting and refreshing all the order blocks to see if they are, still relevant, still valid, and so on. So we have here an H2. As you can see, I go systematically, methodically from the higher time frames using the same tools to take advantage of that fractional nature of the market, using the same tools on every time frame, fresh order block and quasi on each time frame, and let that tell me if we are at a place and if they are in alignment or not. So that's great. I like that a lot. I would say if price were to give me an entry on the lower time frames here to go short, I would definitely take it. Because now you have the daily telling you that this is a great area. You have the weekly telling you it's a great area. you have the H4 and the H2. That depending on your trade plan, that could be plenty of alignment to take a short from here. Let's go to lower time frame to see if we have anything. The quasi, in my opinion, is here, the trend line. And that wick down you mentioned, Mike, that is the the break of that neckline very nicely. And that gives us another quasi to look for entries. You can do this on the 15-minute as well. And perhaps we should check that. Yep. We are currently in one of the order blocks on the 50-minute. And it's one big area because it's also, it overlaps, right? It doesn't really help us, so I'm not going to be using it. If the area isn't refining the bigger structure, then it's not very useful to us. There you go. That's one, and we have another beta here, which has been invalidated already. Yes, it has been invalidated, so it doesn't. I'll take it there, but it's not there. I'm not seeing. It's not valid anymore. That's not a 15, but that's a 5. All right, so there we go. Look at how price. This is live. I'm not taking this trade, or maybe I should. This looks good. You have alignment from the weekly, daily, just to make sure that the bigger picture is in your favor. You have the hourlies telling you that this is a great area to short, and the minutes showing you that reversing at that key area. What more do you want? What else do you want? This is how you build your case when you trade, right? You have the market tell you different perspective, different time frame, that one thing is likely to happen, and still you even though I say this is a great trade, doesn't mean it's going to go much lower necessarily. It may not. There's a probability. It may or may not actually work, but it doesn't matter. If I keep doing this, having multiple time frame, multiple structure telling me the same, you better believe me, I have a good probability in ending. I know I'm going to end up in profit after a certain number of trades. And that's how you trade. That's basically how you trade. You stack your odds in your favor, using things that your data and your experience has shown you to work. Actually, let's take the trade. How many times do I get to trade in front of the audience with such a alignment in a trade? So let's do that. I'm going to show my, let me get my trade ready. And I'm going to, let me music is groovy. Wouldn't you say so, Mike?
I would indeed. Let's go through and just have a look at what the guys were saying with regards to why they trade gold. I think the first person that came back to us was an interesting name to pronounce. Less volatile than the Nasdaq, but pays the same amount. Interesting. Vinny says it's pretty volatile, and the fact that you can make a lot from it, I guess that's why. It's a mover and a shaker, says Lewis. Volatility. Indices and gold, no commission, that's why. And also gold is less dependent on the session for movement. Okay. Because there's a lot of volume in gold. Yeah. It's volatility, nothing else. Plus, if you're right, profit piles quickly. We've got volatility. Also, gold always moves. There is always some kind of structure any day, any time. A lot of volatility. Everyone's saying volatility. Gold is not my thing, but I think it's a cultural thing for a lot of people from South Asia, India, China. That's an interesting thought. I don't know if we have anyone from those regions. Let us know in the chat if you feel that's a valid argument or not. Lack of correlation with other financial markets make it particularly attractive to me, says Stephen. Yeah, risk off market because we're in the gold squad, says says Anderson. Anderson's referring to Daniel, I think there. Trade gold because we want big profit. So, I mean, it sounds like for the most part, people are talking about gold purely because of the volatility. That seems to be the really defining kind of argument for it. I mean, yes, gold is probably the most volatile asset out there from a CFD and also from a futures market to a certain extent as well. I don't know if it's necessarily the most profitable though. So all of you that are trading gold, I'd really love to know how profitable you find your gold trades. And genuine answers here. I'd really honestly encourage you all to be truthful with your answers. How many of you who are trading gold on a regular basis are finding it to be profitable for you? Are you finding it to deliver profits on a consistent base for you? Because I do think that gold is one of those. I don't know if we're getting your chart. Are we? There we are. Okay. So there is always, as Anita says, there is always gold. Gold always has volatility in it, and is always and is moving in an uptrend, and is very good for scalping and big moves. It is in an uptrend at the moment overall. That is true, Anita. I just find gold to be, I suppose I sometimes find it connected with what is maybe not so good about the trading industry. A lot of people look for those big profits, they look for those big wins, and gold, yes, it has a lot of volatility, it has a lot of movement, there's a lot of opportunity, but I really do think that a lot of people get badly burned by the gold market as well, which is why I ask, how many of you who are trading gold on a regular basis are making consistent profit from it? That's what I'd really like to know. Samir says daily basis I'm making profit and loss in gold. Okay, so I'm looking for consistent profits, guys. That's what I want to understand from you guys. As Victor says, it's a numbers game, right? So if you're if you're placing trades and you're taking trades, you want to make sure that you're obviously winning more than you're losing. Otherwise, what's the purpose of trading? So if you're trading gold, let us know. Are you genuinely making money from it? I'd really, really like to know. William says, if money management is correct, it's very profitable with a defined strategy that you consistently follow. Yeah, exactly, William. But that's the thing is, with gold, is it easy to do that? I'm wondering whether does gold, the way that it moves, the way that it chops around, the way that it wicks, and all the other stuff that gold likes to do, how easy is it to have a defined strategy that's consistent, that you can consistently follow, and that obviously pulls back to your risk management, it pulls back to your psychology, but I do think that gold is possibly one of those assets that, whilst you can make a lot of money from it, I do think it can hurt a lot of people as well. 99% of traders with 85% win rate trade gold only. Interesting. How many traders have an 85% win rate? And I'd be curious where you got that statistic from as well. Gold is the best. Only people who don't trade gold blow accounts weekly. Okay, because I feel like we have a golder disciple here. So yeah. Go look at Castillo FX. He does live free trades for the last 5 years, straight at 88.2% win rate live on camera. I'm not saying you can't be profitable with gold, right? That is not what I'm saying here. What I'm saying is how many people can be profitable on gold? How many times is gold going to, eat you up, chew you up, spit you out? That's what I'm wondering. Let's keep it friendly, guys. Otherwise, we will need to take action on the chat. But that's what I'm talking about. I don't know what do you think about Victor Gold? We've talked about volatility. That seems to be the overarching topic there.
Yes, but before I do so, what is your opinion? Why do you think gold is popular with? I think you mentioned it already, but what would you say in a couple of phrases is the reason why gold is popular?
I think gold is used to attract people into the market. Gold is the traditional symbol of wealthiness and wealth in general. So I do think there is a psychological pull towards gold. That's why it gets traded so much. But I do genuinely believe that there is a large number of people who are losing money from gold because of the way that it trades, because of the way that it's so volatile. It can be very, very difficult to be consistent with it. William made a very good point earlier. If you can be consistent, if you can have a solid strategy, then absolutely. But I don't think we've had many people confirm to say, yes, I'm trading gold, or I'm always trading gold and I'm consistently profitable. And I think that's where, I'm just curious. For me, there's a curiosity here as to we get every day when we have these live streams, everyone wants us to look at gold. It's probably the one asset that has the most interest, has the most requests. We get the most views and the most, engagement when we talk about gold, right? And there has to be something, to it. But does it necessarily give people the returns that we want? On the 5ers, we're not interested in just talking about Lambos and what's your profit and all these sorts of things. That's not what we're here for. I just wonder whether gold is luring people into something that maybe isn't as achievable as maybe something that doesn't move as fast, particularly if you're a beginning of your journey with trading. I started with gold 2 years ago. I started with gold and I got eaten up like you wouldn't believe. And it was painful. I lost a lot of money. And I stepped away from it, and I moved onto the Forex pairs, which don't move as fast and can provide clearer structure. Provided me much better wins. So I think there's a psychological thing with gold. I think there's some kind of, somebody mentioned it earlier about the cultural thing. I don't think it's necessarily a regional thing. I think it's universal. Gold means wealth, and so people see that as the vehicle to potentially achieve it.
You mentioned many things that I was going to mention, Mike. Now what do I say? What do I now talk about? Yes, actually, the status symbol, not just nowadays, not just this decade, but for centuries, thousands of years, has been gold. I mean, if you go to the ancient times, already gold has been, so deep rooted as a symbol of value, of being rich. I think that's certainly something that attracts traders. If they're coming to the market and they see that list, the palette of the tradable assets, and they're not going to have a feeling on a Forex pair necessarily, but they're probably going to have some kind of an attraction to gold. And that's one thing. And yes, the viewer, I agree with the viewer that there is also a cultural component to it. Not as much in the Western world, but I mean also in the Western world, who doesn't appreciate, jewelry or things made of gold? At least, even if you don't wear them yourself, you're going to say, wow, it's made of gold, whatever it is, right? It must be valuable. But especially there are certain cultures where gold is extra important, and that is in India and in Asia in general, but in China, of course, I'm referring to. And they're big, extra big on gold. They have, I think, gold season. I'm not sure when it is, but where they buy and they do things with gold, when marriages and things like that. They have all these rituals around gold, which you can't have I'm not sure if I'm gonna say it correctly, but you're almost supposed to be doing it, right? It's a ritual, it's a cultural thing. So even if you just go with the flow, you're gonna be participating in buying gold, and you're on that gold bandwagon when you're in those cultures. So that's one thing. The other thing is, how does the countries have their national reserve? In what asset is it, right? Of course, we have fiat, and the majority of the money is fiat, but national reserves are in gold, right? We always talk about that. Fort Knox. Why do we have gold in Fort Knox? It's because gold is the ultimate, at least historically, has been seen as the ultimate store of value. So yes, I think those arguments are very compelling and very convincing, that anyone coming to the market will have a sensitivity, or be sensitive to at least try gold. And of course, if you're looking for adrenaline, if you're looking for roller coaster, if you're looking for that kind of a ride, then gold is certainly where you need to go, because gold is volatile. The wicks are infamous. They can take you out all the time, and they do. And they may wick me out, because that's what we know about gold. Gold is very volatile, and is very it's a beast of a different kind compared to Forex altogether. It's very volatile and very moody, right? When it gets bullish, it really runs, but it can react on a dime and go completely the other way. So it's I think it for certain, it's not the first asset beginners should be trading. That's for certain. I'm 100% certain of that. Two, it is, in the end, it is, as any trade, it respects and it talks the language of price action. So there is ways you can trade gold. The only thing is you have to adapt to it, because of that volatility, price will wick you out. So you have to take a bigger margin of error with your stops, and know a couple of things, how it reacts to certain news. I've seen gold gap dozens of dollars on a second. I don't remember when this was, but a long time ago. That was something that happened from time to time. I mean, imagine that you're in a trade, and it goes and it jumps like $20 on a gap because of some news. I mean, that's the kind of thing that gold is capable of doing. And 20, I think, and at that time, 20 was the daily ATR. So imagine euro gapping 100 points. That's 100 pips. That's basically what gold has done in the past and is capable of doing, in certain conditions. So it's definitely not the easiest pair to trade, and I think it's very popular, but I also share with that opinion, Mike. I don't think the consistency is easily reached with gold. Sure, there are profitable traders. Of course, there are in gold, and I'm not going to argue against that, but they're not going to be in the majority. I think if you look at the composition of the assets they trade, their gold may. My guess is it's not going to be in the top 1, 2, or 3, the top 3 assets, because it's so volatile. However, what you will see is big wins, like the big payouts in gold, right? Much more than other pairs. Why is that? because of its nature, because of its volatility, when you get that that bull on its by its horn, it runs, and it really runs. And if you're able to hold that on, you'll get a monster of a trade, and that's what gives you those big payouts. And it attracts more people to it, but it's not necessarily because it's such a great trade asset to trade. Personally, I don't trade gold on a regular basis, but price action is universal. The order blocks and the quasis, they work on all assets because they are, just a reflection of human psychology, the collective psychology, that tug of war happening. That's what quasi and order blocks are. So they work on every asset, and I don't mind trading gold. I enjoy trading any asset. So we'll see. But that's my answer on gold.
Yeah, absolutely. Lewis has just made a very good point that I was going to make myself, actually. So thank you, Lewis. We have the ADP employment figures coming out in 15 minutes, guys. If you are trading with the 5ers, I don't think this is one of the high impact news. Let me just triple check that for today. No, it is. So in 15 minutes, guys, there is news that is coming up. So if you're on a high stakes program, please make sure you're not opening any trades, whether it be a market order, a stop order, or a limit order, 2 minutes before or 2 minutes after that news is due to hit. If you do, and if you hit any profits, then those profits won't count towards your challenge or towards your funded account. You won't lose the program, you won't lose the account, but the profits will not be counted towards any targets that you may have. So just be cautious of that, and obviously it can move things around, and things like spread and slippage and all those wonderful things that we all love to experience every time the news comes out, that have made us all such wonderful traders over the years. Then watch out for those. All right. So yeah, but this is why I'm interested in gold, because for me, gold is that topic. We know, you and I, we've spoken with Jonathan, we know that the 5ers stream gets the most viewers, gets the most interest when we're talking about gold. It's the one thing that everyone wants to look at. And that's why I'm curious about it. That my curiosity, I suppose, gets the better of me sometimes with it, where I feel like, there's something there, but my curiosity is, if it's there, then do people really benefit from it? We're really keen and really, committed to helping people, educating people. We want profitable traders with the 5ers, but is gold necessarily giving people that opportunity, or is it chopping them up? And is it chasing that gold at the end of the rainbow? Is that leprechaun waiting for us there, if we're trading gold, or are we simply just chewing up our P&L and chewing up our programs? Gold is not an attractive lady for me, says Venetius. It's certainly one that, as I say, a lot of people, I think somebody said it earlier, a lot of new people to trading go into gold thinking, oh, this is my opportunity to make a lot of money, and very quickly find out that it can actually be a very nasty pair to trade. Somebody else has said about looking at other Forex pairs. If you're, for example, if you're looking from India, your national currency isn't one of the major pairs, so you're not necessarily going to trade it. So maybe you're going to look at gold, and as you mentioned, Victor, in India they buy gold every year from November to February. So again, there's also that cyclical part of it as well. So yeah. Venetius is saying there's a beautiful move on EU right now. So I know we're talking about gold, but I do feel as though we need to provide a little bit of variety to everyone here before the news comes. Victor, I don't know if you want to pull up EU on your chart, and we'll see what are the Europeans doing to the US dollar at the moment.
Let's take a look.
Ooh.
Well, I analyzed this in the not so long ago. This brown shaded area, that's a daily order block. I would expect price to be attractive to go there at some time. I do see a selling. This is on the hourly, right? So I do see this is this could be a very nice left shoulder. Of course, that's completely speculative because I don't know if that head is going to form or not. But I would expect price, just because we have an order block here above us, I would expect price to try to reach that. It will work as a magnet. So I would expect price, and if you look at it from in terms of the character of the trend, it looks very bullish, and it's those retracements are very shallow, and it makes sense to expect that a continuation will happen. If we look at the I'm gonna check the ATR. In the meantime, let me see if I can. Oh, I can check it, of course, on my trading view. Don't have to check anywhere else. Let's look at the ATR for today, which is 101.2, and if we apply that to today's candle, that means that we already passed 100%. The ATR, we're at 120.3 currently. So of course we have the AVP coming out, so it's not a very typical average day. It's okay. It is, within the range of reasonable. It's reasonable to expect price to go beyond 100%, but it's already stretched. It's 120, basically almost 120% stretch. So will it be able to continue pushing forward? The more it pushes, the more it stretches, the more difficult it becomes for price to continue. So I wouldn't want to go long in this area at all, even though the momentum is to the upside, and even though I think price will probably want to reach that order block, at least reach it and penetrate it a little bit, because when we're stretched like this, I'm always thinking, when is the reversal coming? It may not come right away. But it perhaps is gonna start decelerating at some point, and then break down to go to a somewhere of demand. That may take a long time. It may take even a few longer than a session, right? A day or two. But I'm not too eager here. I don't want to go long. I don't. That's not my way of trading in any case. I'm looking for a break of structure to see if we can go short. But first, it's not convincing at all that it broke any structure. It's very bullish. You can see how big the order blocks, the candles on the buy side are very impressively outnumbering from the other side. So I would expect price to continue to go higher, but lingering danger, if you will, for price to reverse soon on EU. At least have some kind of a drop.
Yeah. And yesterday, we've got to remember that yesterday the euro, I think it was the euro, was the strongest asset. So of course, and any currency can have a more than one bullish day, but to be so bullish for a continued period of time is unsustainable. The markets don't like massive impulsive moves, so there will always be some kind of pullback at some to some extent. Otherwise, they're going to have to pull down one way or the other. William's got some interesting advice. She's going back to gold very quickly. My advice: trade gold only after you know how everything works and get professional help to get to a point where you can really handle it alone. I started differently and lost a lot. Yep, and I would second that, William. I completely agree. Gold is definitely something that can make you a lot of money, and it's definitely something that can really give you great opportunities, but it is also something that can cost you dearly. And that's the last thing you want when you're just starting your trading journey and your trading skills. one of the hardest things is to maintain that confidence and self-belief sometimes when you've hit some really nasty losses.
All right. I think it's completely true. It's get professional help. That sounds that sounds funny.
You want to be a trader, get professional help.
But it's true. It's true. You don't want to do that as a novice. You don't want to be losing your hard-earned money on something where the chances are not, they are against you. Basically, they are against you as someone coming in, and if you don't know what you're doing. Warren Buffett said, risk is when you do something that you don't know about, right? That you're doing something that you don't know what you're doing. That's when you have risk, and that's why gold is risky. It has its own owner's manual. If you don't know what you're doing, it's very risky. That's especially true for gold.
There's a lovely little plug there from William. So there you go. The professional help is from us in a webinar that we're going to do next week. Very nicely done there. Thanks, William. You're doing our job for us there. So thank you for that.
Very good. Yeah.
It saves Victor and I from having to do the plug ourselves. Although those of you who don't know what we're talking about, we'll do a quick reminder for you from our very good friend.
MasteRisk free online marathon is going to start super soon. 6 sessions, 8 experts, and 6 live hours. So on March the 11th at 9 AM GMT, we are going to start with all of the risk management topics covered in one full day of practicing strategies and live demonstrations. What's going to be included? Free exclusive resources, a new account exclusive for the event, and 15 10K high stakes accounts up for grabs. Now the first 5,000 people that register will get access to an exclusive contest. So go below, join now for free, and we'll see you there.
Awesome.
Absolutely. If you haven't seen the details, guys, check the link below in the description. The website has all the details of who's going to be there. Victor himself is going to be leading one of the sessions along with Jonathan. We've also got Jordan from Trade Delicious. We've got Sol, the CEO of the 5ers. We've got Michael from TradeThePool. We've got Rich. Those of you who watch Trade Delicious will also know Rich, and he's also doing the sessions as well as Victor in the Discord. And then Jonathan will be rounding the session up at the end of the day with a live demo and a Q&A session as well. So definitely something that you guys want to check out and sign up for. As we say, there's limited spots. First 5,000 people get access to the contest as well. So make sure you sign up for that. Don't miss out. It is going to be quite the event. As Victor, as I think William suggested, it is going to be something that will hopefully give everyone some great learnings and lessons to take away into your daily trading.
I wish when I was starting with trading that I had all these possibilities, all these speakers, people who want the trader to become better, who want to impart their knowledge, their experience, and share their lessons in failures and successes in trading for others to benefit from. I wish we had that. At least when I started my trading career. So this is a huge opportunity. That's what I'm trying to say. Everyone listening, don't miss out. It's going to be great, and you do want to grasp and absorb everything these speakers have to share with you that day. All right, we have ADP coming out in 1 minute. Go ahead, Mike.
Yeah, no, I was just going to, that was exactly what I was going to say. You took the words right out of my mouth, Victor. So yeah, be careful, guys. We are in that 4-minute window. So if you're in a high stakes account, make sure you're not getting triggered by any stop or limit orders. Keep an eye out for that. Yeah, just make sure you're trading carefully with any orders as the news is coming out any minute now.
Yeah, it's about 25 minutes. Of course, there is a delay between the time we are saying things or seeing and saying things and the time you at home or wherever you may be are actually, seeing it on YouTube. There's about, I think it's like 10 seconds of a delay. But it's going to happen anytime now. 2 seconds. And there you have it. Move to the upside. Initial move. Initial reaction.
Going up to the 200 EMA on the 1 minute.
Would you like to show your screen, perhaps?
Yeah, I certainly can. Nope.
I think we clicked it on the same time.
Let's just double check that you guys can see it. No, you can't. Let's do a bit of a wiggle jiggle, and there we go. Yeah, it's come up to the 200 EMA on the 1 minute, as you can see there, and it is now pushing back down. It's come back, retested this area up here, where we had a bit of a consolidation on the 1 minute earlier, and is now pushing down. So the previous 5 minute candle was an inside bar. So the support that we have seen chopping around the 200 on the 5 minute may now actually be broken. We'll see how that plays out. On the 11 minute though, we're still holding. So I had this level marked out on the 1 hour and on the 90 minute as an inside bar. And curiously, if you look on the 1 minute, price came down and it was 16 and the price came down to 17 cents. So that's why I look at these price levels, because very often price will either come and just sweep it, or it will literally come down to the cent before bouncing straight off again. Doesn't always happen, but if we do see price continuing to push up, then that will be an indication that we're going to see buyers still taking over. As you can see on the 11 minute, it looks very different, as well as on the 7 minute, it looks very different to say the 15 minute, which is again one of the reasons why I look at those time frames. So we'll see. It's holding for now. It's created an inside bar, and that's an interesting one. It's created an inside bar after that initial news candle, and it's now, at the moment at least, a bullish engulfing. Either way, it's going to be an engulfing candle, but now it could now start to pull down, or we may start to see the bullish momentum come back in. So we'll see how this one plays out. Obviously, we've got the 200 EMA still, so that's obviously going to act as some kind of resistance as well. But as I say, the close of a candle in gold can always change. If you watch it in the last 10-15 seconds of a 1 minute candle, there you go. Look how that one closed. It looked like a very, very strong bullish engulfing candle. Look how it closed. So now we've got 1-2 very, very strong wick rejections saying, no, you buyers that want to push us up, we're not necessarily going to let you do it. And so that battle for the buyers and sellers at the moment is still playing out. And if we break this low, as we have done, it looks like the sellers have taken control. We look at the different time frames. We've got an inside bar on the 2 minute. So again, inside bar, the low is taken. Let's see now if we can now come back and take the high, or is that 200 EMA going to act as the solid support that we were talking about? 7 minute, still not very clear. This is why I like the 7 minute, is that you guys were asking, the 7 minute, it takes away the uncertainty of, we've got to wait for another 2-3 minutes or whatever for the 5 minute to close or the 15 minute to close. So yeah, that's why I look at those as an alternative perspective. I saw we had Nicholas saying can't find the link in the description. Nicholas, if on X is probably why you can't find it. So if you give me a second, I will paste it into the chat, and that should propagate it to all of the feeds.
We do
There
have
you
it in the chat already, but yes, I think
there we
that's
go.
yeah, we do have it, but it's a great idea to keep posting it for everyone to see. It is on the YouTube, Nicholas. So if there are many ways to do it, you either come to the chat or you see it in X. I don't know if they have. Can they see the chat in? Of course they can, because he just posted. In the chat, of course, you'll have the link, but on YouTube as well. And we got it posted again as well. Perfect. Someone asked to show the gold trade. I'm not sure if it was directed to me or to you, but that's the gold trade that I took in front of you. I'm going to leave it open. I'm not going to actively manage it. And if it's going to be a stop loss, so be it. And if it's gonna TP, the same thing, right? I'm not gonna second guess myself and thinking, oh, something happened, I need to intervene. No, I'm a big proponent of not touching the trade too much. Yes, there's more information coming out. Yes, there are correct moments in time to intervene. Yes, you can increase your edge by doing so, but the majority of the time, you open the door to just more actions that don't conduce to more profit.
Agreed. Victor, I know we've got Victor. Sorry, not got Victor. We've got Pedro waiting in the wings to join us. I can see him smiling at me. Pedro's just trying to sneak in there quietly, thinking that we can't see him. I have got a meeting at 1:30 the hour that I need to jump into. But Pedro, hopefully, if you're ready when you are, give us a thumbs up and we'll bring you in. Here he is. Here's our Portuguese community leader.
What's up? Welcome. How are you guys doing today?
We are good, Pedro. We're good. We've been discussing the ins and outs and the rights and wrongs and the value of trading gold. Are you a gold fan, Pedro?
Not so much. I like to analyze it, but I'm not that. I don't really trade it that often, to be honest. I think it's periods. Some periods I may trade it more often. I think it depends on the opportunities. Since I'm more of a counter-trend trader, and gold has been basically breaking highs constantly for the last few months, it has been rare that I actually look for opportunities. Actually, last Tuesday, there was actually an opportunity to look for a short. Aside from that, I've been just monitoring and try to see what's going on in there, not exactly trading it.
Got you.
Yeah.
Glad to have you here, Pedro, with us today. As you can see, I'm trying my best to say words without
coughing,
and without losing my voice. But yes, no, great stuff. Mike, you said you're gonna be with us just a few more minutes, as I understand.
I am indeed. I've got a meeting at 1:30.
I'm gonna be switching off as well. I'm gonna be taking a break in 7 minutes, the same time with you, Mike. So Pedro, you are a lifesaver. You indeed you are. The trade is going as we can see on gold is going. It really hasn't moved much yet. It seems to be on the lower time frames on the 1 minute, wanting to go much lower, making lower lows and lower highs. But basically, I detach myself from the trade. Once I enter and I put on the stop loss and the take profit, I detach myself. So if it goes to TP or stop loss, great. Either way, it doesn't really matter much. But I'm sure
it's very tricky, as is usually the way with gold.
Yeah, it's just ranging at this point.
Yeah.
Guys, I think I'm gonna take that break earlier.
It's
See you guys
okay.
in half an hour.
We'll see you in a bit, Victor.
See you.
Yeah, we were talking about why do people trade. I'm going to bring up your chart, Pedro. We were talking about why do people trade gold. Because we were discussing it's such a popular topic when we have these live streams that everyone wants us to look at gold. Everyone wants us to pull up the chart and give our analysis. And I know there's obviously people that are looking for signals and all that stuff. But we were just discussing why is it that gold is so popular, and the general consensus seems to be that people like the volatility. People like the fact that it chops around. So yeah, it's one that we that we were curious to find out from the audience. What are your thoughts on it? Do you think there's a reason why people are so I wouldn't say fixated, but that gold seems to be such a popular topic for people to look at and to trade?
I think volatility is indeed one key factor. Maybe when comparing with some Forex pairs, it does tend to move more. Maybe if you look at the ATR or average daily range, most likely is going to be bigger than any other Forex pair, or even if you're looking at the indices, even though the indices also can be quite volatile and provide really great moves. But there you go. Like with volatility, it's perfect if you are in the right direction, but it can be quite dangerous if you are in the wrong direction. So volatility by itself, it may not translate into being profitable or making money. In here, you still need a strategy in this case to know how to capitalize from those moves. Now, I understand, even in terms of not being correlated with some other assets, it can also be an advantage. For example, oil has been quite interesting as well in that aspect. It's not really correlated with it has an impact on what's going on in the world, but it's not really correlated directly with the dollar or US indices or whatever it may be, which can create unique opportunities in the market as well, especially if you are trading different assets. At least that one, it's on its own. But yeah, I understand volatility can be a big factor. Nowadays, of course, the spreads are more attractive. Back in the days, the spreads of gold, you had volatility, but you had bigger spreads. So it was kind of removing a little bit of the edge or of the interest of trading it. But nowadays the spreads are super tight already, so small that it makes it quite attractive in here. But as I mentioned, you still need a strategy to know how to trade it. I'm not the biggest fan of just getting lost in the 1 minute time frame to try to predict if it's going to go up or not. I prefer to have a bigger view, try to understand what are the key levels that I prefer to be involved in, and then I can go into the lower time frame to look for confirmations. Otherwise, being too attached just into the lower time frame, usually I get lost in there, and I start making a lot of mistakes and being too reactive to every candle. And that can be a little bit of dangerous.
Alex is asking that he and Hamid wanted Dow. I'm assuming this is Dow Jones that you're referring to, Alex, but you never get it. So I'm going to jump off now. Hopefully my meeting won't take too long, Pedro. If it's a quick one, then I'll be back briefly. But maybe if you want to have a look at the Dow Jones for Alex,
I'll take a look at whatever they want. I just make sure that when you leave, like, if display of the stream is okay, because I don't have access to it, so I cannot really move anything.
I will make sure that that you're okay. Hang on a second. Let me.
Yeah, can I go to the route? Can I go to the other side? Perfect. Okay, yeah, it can be. This can work. Thank you, Mike. So yeah, guys, how are you guys doing? So we are mentioning Dow Jones. Yes, we can definitely take a look at the Dow Jones, and let me know any other asset that you want me to analyze. We can do it, and also can give you a little bit of my views of what I'm looking at after yesterday big move, especially on the euro and also on the dollar. Right, we had a massive move to downside on the dollar, but even bigger to move to the upside on the euro, which the reason for that is I'm not really sure if it was the budget announcement towards the $800 billion for the defense sector in the Eurozone. Who knows what the reason was, but reality is that we had a massive move to the upside. So let's take a look at the Dow Jones, as someone is asking, and then Nasdaq as well. Perfect. We can take a look at Nasdaq as well. How's in New Zealand? Okay, guys. So let's start with the Dow Jones first, and then we move on from there. In addition to that, anyone that is asking about exactly, Alex, the $800 billion for defense in the Eurozone may have been a key factor. Who would imagine that investing in your defense would actually strengthen your currency? But there we go. Apparently, that's what happened in there. But anyone that is asking for a specific asset as well, just to give maybe a bit of context, can you let me know as well if you are a bullish, bearish, or if there is any specific zone that you are looking at, so I can give a little bit more of detail and explanation when I'm looking at it. That would be great. So Dow Jones, if you guys have been watching anything that I've been doing recently, especially if you have joined the Portuguese YouTube channel that we go live as well Monday to Thursday at 5 p.m. I do my analysis in there as well. So I've been bearish, at least until price reached this level. So all the way through, when the Dow started to break below these lows in here, I thought that price would feel at least this range, getting into the lower extreme of this bigger range in here, and that lower extreme starts with this demand zone. Of course, you can go even a little bit deeper, you can test a little bit of these levels, but at least to test towards this level, that's what I've been looking for, especially when price was ranging in here in the middle. So I don't really trade Dow that often, but if I were, I would be trying to find opportunities to sell in order to push price to the downside in here. Now that we finally arrived to this level, right? So basically yesterday we finally approached this level in here. And now the question mark is, are we starting to see any kind of bullishness that can start looking for a potential reversal from this demand zone? Or by any chance, we are actually going to just continue to push lower and eventually even target this low? Something in here that matters as well, that apparently I have drawn on this chart, is that this low in here, it looks like it already broke that low on the left side. It still respects the structure overall, but it already broke that low. And after the break of this low, price retested all the way back and respected the top. So basically what we have in here is basically price going up, going down, takes the low, and then goes up again and respects the double top, which then eventually can lead into a more bearish move. It can be kind of that initial reverse of a trend in here, right? Especially if you do have that double top being respected at the highs. So that's a potential. So bigger picture, I may be expecting maybe first for this low to be taken before actually these highs are taken. But at this point, we need to start looking a little bit more of what's going on within this level. So we can try to look at it. We can try to see a little bit more into the lower time frame. Something that I like to do is try to look a little bit into the lower time frame in here, where there are maybe orders that potentially the Dow still wants to respect. For example, maybe I see this demand zone, which maybe that low didn't really touch it. So maybe there's a little bit of a zone in there. Then you may have this structure in here as well, that maybe price hasn't really reacted. Maybe that's where actually price has reacted right now. Just curious to see about it. And then everything's compressed, and maybe there's another zone in here. Basically that one is already retested, this structure in here. So basically that already went all the way to retest this structure in here. So maybe we have a little bit of that demand zone. So that's a simple thing to do, is just to try to see where are the orders left behind, demand, supplies, or decision points. I know some levels of support resistance as well, they may matter. Whatever structures you think that price usually tends to react from, it's a good exercise just to check the previous low or where price is approaching. Try to see if there are anything in there. If there aren't, there's a higher probability that maybe price will just break through all that space. So we can go a little bit more now to the left side. As you can see, price basically got really close already to that structure that I marked in there. And after that, what did price do? Basically, price came all the way and just respected the next supply. So at this point, I don't really see any break of structure to the upside, at least just yet. At least if price had broken a little bit of the structure in here, maybe could start seeing a potential reason to look for longs. Otherwise, we may actually go a little bit lower before even trying to go higher again. So that will be a little bit more of my take. I think maybe the lows are going to be taken before actually we start looking for anything to the upside. And if I do have those lows being taken, then maybe I can look for some kind of reaction from one of these two zones in here, bearing in mind that, yes, this low is already broken, so I can actually have the expectation that maybe price may just actually go all the way in here. So I actually want to see a confirmation of some bullishness before I actually start looking for any longs in here. Many comments in here. Any feedback on the analysis I did? And trade the same way past this one. Unfortunately, guys, I'm not going to be able to pop up your comments because I don't have the rights to do so. So I'm going to be just reading a little bit through and try to see if there's anything. So Alex is saying that maybe he's going to be looking at New York Open and some bullishness at 42,800. That's basically around this level. Yeah, it can be. Okay, that's kind of a nice supply level in there that maybe price can go there and maybe react and continue to move to the downside. So by any chance, if someone is looking for shorts, maybe that can be a good level to potentially look for shorts. But overall, I'll be looking a little bit more of this range in here. So even if price by any chance breaks, I'm moving around, not really sure why. Even if price, okay. Okay. Even if price by any chance breaks above this high, I may not really consider straight away as a break of structure to the upside. I'll be more looking to see if price actually breaks this one to give a little bit more of confirmation in here. That's a little bit of my take in here on the. Yeah, I can see that Crispo Potato got the trade on gold, basically the trade that Vitor traded. Yeah, apparently it's looking down. That's great. Great trade, Victor. Well done. We can look at Nasdaq. I think someone else had. You're welcome, Alex. I think someone asked for Nasdaq. Where is Nasdaq? Harish. I think Harish had asked for Nasdaq and also CAD franc Swiss. We can look at CAD franc Swiss a little bit. But let's look at the rest of the US indices before we move into Forex, which is, it's at an interesting level. And even before we start looking at Nasdaq, I'm actually going to start looking at the S&P first in here. Because the S&P is something that is, it's at a key level in reality. What I mean is that this low, if we actually look at the daily time frame and we use moving averages, again, I'm not really a guy that uses that much indicators, much less moving averages, but it's also important to be aware of the traditional moving averages that many investors pay attention to. And one of the most traditional indicators, in this case, moving averages everyone looks at is the 50 daily moving average and the 200 moving average. And at this point, S&P is reacting exactly, it's touching the 200 moving average. It hasn't done it for a long time. So basically the last time that it was really close to the 200 moving average, it was back in August. And the last time that they kind of break it, it was basically in October, but it was just a small fake out and then a continuation to the upside, right? So basically since it's more or less around this level, if anyone that is using the 200 moving average to define if it is a bullish or bearish market, that basically since March 2023, that has been bullish. That's basically 2 years now that we have been in a bullish market in here on the S&P. And now we are retesting it. As you can see, price went a little bit below it on the daily time frame, but actually closed above it. And many investors, even hedge funds and so on, analysts, they like to look at this one and try to say if price is below the 200 moving average, maybe we are in a bearish market. If it is still above the 200 moving average, we are at the bullish market. So this is a key level where you should be expecting some kind of reaction, at least, because most likely there's going to be some traders, some people involved on trying to defend that level. When you're looking a little bit more of the way I look at the charts, which is a little bit more of naked price action, market structure, and so on, what I can see in here is that price actually reacted from one of the last clear demand zones that we had. If you guys are going to realize when you're looking at Nasdaq as well, basically S&P and Nasdaq yesterday, they reacted exactly from the same level. Basically, it was the same day that it was the US election on the 5th of November. That's basically this structure in here. It was created on the 5th of November when it was announced that Trump actually won the election. We had that strong bullish momentum to the upside across the US market. And that's exactly where price now is retesting. It's exactly the same demand zone where price is reacting, both on the S&P and also on Nasdaq. As you can see in here, this was also created on the 5th of November. And sometimes the correlation, it works exactly like that. Price goes and retests exactly the same key levels that were created in the past. In here. So there you go, great reaction. We started actually creating a little bit of a double bottom. Actually, yesterday I took a long in here. It was during the Portuguese live stream. Unfortunately for me, I closed the trade. It looks like that it was too early based on the move that price did, but it was the beginning of a potential long in here. I was still not convinced that this could be the bottom, so it was more of a smaller trade. I still want to see a little bit more of confirmation that actually price is ready to move to the upside in here. But price didn't really broke any structure, because basically price just had created this structure and pushed the downside, and now just retested exactly the same high without breaking any key level in here. So even though we had a good reaction, there is no break of structure to the upside, at least the way I look at it. So I'm going to be curious. I'm going to be curious to see how price is going to still react around this level, with the potential or possibility that we may still fake out somehow these lows. However, we did yesterday, after some news, I think in regards to the tariffs in Canada and Mexico, we did have this move to downside, which means that maybe price doesn't really need to go all the way to correct liquidity below these lows. Maybe it's going to be enough to correct liquidity underneath this low. So I'm going to be curious to see how price actually is going to react after taking this level. If it does something like this, then maybe you can have actually a bullish trading here without even taking this low. So that's going to be something I'll be looking at in here on the S&P. Something else, just to take a look into more of the bigger picture. In my opinion, if the S&P actually starts breaking below this low, I think we can actually start opening the door for price to move way further down. There's maybe something in here that price can hold, but aside from that, I think price can actually start aiming a little bit more closer to this level, around the 5,500, which can lead into another around 3% drop on the S&P. If not mistaken, at this point, S&P already dropped around 6% or almost 7%, and that would lead almost to a 10% retracement in here on the S&P. But for that, I actually need to see this low being taken first to actually start opening door a little bit more to the downside in there. So that's something that I'm going to be looking at. Again, we're going to have eventually the US Open in less than 1 hour, and we'll see how price is going to move in there. Any questions about the S&P? Feel free to ask. I'm going to jump already into Nasdaq in here. Nasdaq is quite similar in the sense that we are also then reacting from a valid demand zone. It's quite an important one, because this demand zone is actually the one that managed to break this previous all-time high, okay, the high that we had created back in July. It was with this move after the election that we finally managed to break this structure. So usually when you have the demands or the structure decision points that actually manage to break key levels of structure, they tend actually to be quite relevant in the future. So there you go. It's a fresh demand. This was never reacted from it, which means that we could see some reaction from here, and you are already starting to see that reaction from here. Now, is price ready to bounce from here, start retesting all the way back to the top? We still need more confirmation. Similar to S&P, if price does break below this level, I think there's a potential again for a bigger drop eventually. It doesn't mean that when price breaks this level that the move is going to happen immediately. Okay, I'm not expecting basically price to break below this 2000 and just to crash immediately after that. Apparently, I just noticed now, but this 2000 can be also kind of a nice round number to work as support. And sometimes those levels seem to happen like that. So, but what may happen is actually price can break. It can actually retest a little bit, but it starts giving the trigger that it wants to go lower. At least the way I look at it, with the potential target maybe to get closer also to some kind of range in there. So that's the potential in here on the Nasdaq. More into intraday stuff. Nasdaq, we actually managed to break at least this previous high. Opposite to the S&P, Nasdaq actually started to break some structure here, and you also have that low that can still be used a little bit as liquidity into this potential demand zone. So I'm going to be curious to see if we're going to have some kind of momentum like that, where price eventually can start moving higher in here. So at least I'm going to be looking for price to go below that low and potentially start printing some bullishness in here, which can be definitely around the US Open. We can have that kind of a move. And then I think we have also some new services PMI or something like that are going to be released. So that's going to be a little bit of what I'm going to be looking for. At least in here on Nasdaq, we did manage to break the structure, at least this high. Yes, we respected straight away this next level, but yeah, we'll see how price is going to eventually react in there. Let me just see. Yeah, Alex is saying, yeah, potentially knocking on the recession door, which is going to be interesting. And this is sometimes the advantage of our advantage as traders, is that we can actually start anticipating and looking at this potential turn in the market. We don't really need the analysts or whatsoever to tell us that when eventually price actually drops 10% or 15% to say, hey, we are now in a bearish market. No, we actually could see since the beginning or close to the top, when you start dropping it, maybe after 1 or 2% drop, that maybe there's a chance for the price actually to drop out that. Like it was possible to actually start noticing that price starting to break this structure and start anticipating that price could go there. After the break of this, that price actually could go there. And after the break of this, that price actually could go there. Right? You don't need now to wait for price to drop almost 8% for someone to tell you we are potentially in a bearish market. No, we have been, or we are potentially in a level where price may drop. Sorry, price has been dropping already for quite a long time. Right, this is already too late, at least on my view, on what we can do in here. Yeah, gold's gone. I haven't looked at gold. Yeah, gold is moving a bit more to the downside, which is interesting. So we can go a little bit more into that that next structure in here. So that was basically what we talked about yesterday on my view on gold. I could see price maybe reacting. There was a zone in there that price could react, and then I was looking for price potential go higher. And this was the next structure that I was more looking. I also mentioned there was basically this demand zone that could hold. But basically within these two ranges is basically where I'm looking in here on gold. A bigger picture may actually have broken below that low, so we can actually even look for a further move to the downside on gold as well, because this will actually manage to break that one, if I'm not mistaken. So we can actually start looking. Yep, it broke. So we can actually start potentially look for a bigger move. I'm not really sure if it's going to be from this high or if price does want still to go a little bit higher. So this could be interesting to create attract some liquidity into here. And it's nice actually to also start to create in here. So we are tracking sales at around this level. And I would definitely would love to see something like that, and then price actually dropping in here. That would be actually my preferable setup in here on gold. But yeah, that is still far from happening. Maybe price will just drop from here, and if that happens, it happens in here. What assets you guys were mentioning before? To something related to Aussie. Fabian is asking for the pound dollar. Okay, let's take a look at the pound dollar. Pound dollar. 1 second. All right, pound dollar. So again, if you guys have been following me, I've been a bit bullish in here. I think price had at least this target or this top in here to aim towards to. That level, this high in here, this top had already broken this structure, and it didn't really react from the next one, which is basically this structure in here on the left side. So eventually when price starts to, after dropping, when it starts to turn, usually price will not stop just in here. It's actually starting to go all the way there. We can also ask ourselves, where is actually price coming from? So that's one of the questions I always ask myself. Basically, where is the recent move or the recent low in the bigger picture? Where is it reacting from? And in this case, it's reacting from a perfect level, like it literally came all the way back to this extreme. So there's not really much to go in there. And from here, actually price is now ready to go and potentially aiming even to go somewhere closer to this structure in here, but attention to this one first in there. So yeah, that could be eventually the move in here, but sorry, I'm totally aware that price could have some reaction here. It's actually reacting as we speak. So let's just look a little bit in here. So let me delete all this, because now all this was taken in there, and price actually already broke this level, which eventually could react a little bit more as well in here. Now price pound is reacting from an interesting level, right? So pound in here on the left side is reacting from the first supply that was created before the drop, and price never really reacted from it. So we have this structure in here, and pound is reacting for. So if by any chance, for any small reversal setup, this could be one of the first levels to start looking for some opportunity. It's also a little bit in alignment with this previous level of support resistance, in this case support that can become resistance, which means that that was actually an interesting level to expect a reaction in here. Now, a different question mark is this going to be the top? Okay, is this going to be the top where price is now ready to do something like that? I'm not entirely sure. And before we actually get into that confirmation, we definitely need to break below this structure. Up until this point, everything that can happen in here could be another break and continuation, because we just broke that important high on the left side. That's basically this white line. And from here, basically price can retrace and continue to find some bullishness and continue to move higher from here. If you start breaking below this level, then that can be a little bit of a different story. That doesn't mean that on the lower time frame, especially this morning, maybe there could have been already some potential shorts in here. As price starts breaking this level, we could maybe aim for shorts towards this target in here. That's basically a little bit of an opportunity that happened. It's a little bit risky because price is still kind of a little bit more with the momentum to the upside, but this is a setup that can happen more on intraday, before potentially price continue to move higher. So what I mean by that is, even if you're looking for any shorts in here, you need to be able to manage your own expectations in terms of the target. Like, don't look for something like that. Just try to find what is the next level of basically support or a demand zone that you can find that maybe can hold price, and that's your target. Period, end of story. We are still literally taking a counter trend trade based on the most recent moves in here. For anyone that is still looking for longs, potentially, somewhere within this structure, it could happen. Maybe this demand zone can still work as well. None of those lows actually reacted from it. So that could be a zone, could be something in here as well. So that could be potentially levels to continue to look for a bigger move. If price actually does want to continue to move higher, so this was one of the initial levels, then you need to start looking a little bit more deeper into here to see where maybe there are the next levels. Something to be reminded as well is this previous level support resistance, even maybe that left shoulder as well in there, which is already reacted, so it's weaker. But actually this high never reacted for me, so maybe that actually, there's still something in there, and maybe a little bit of this structure, even though that's not exactly entirely strength, and maybe something in here, because this is basically one of the last lows that created this impulse push up. It should hold price up, but it doesn't break and kind of breaks. So somewhere around this level, sometimes it's also an interesting zone to look for a reaction. So those are just basically levels where price usually tends to have some kind of bounce reaction from, and you need to make sure that they are still fresh on the way down in there. So those could be potentially some levels to look for some reactions on the pound. And you can just trade zone by zone like that until you actually have some kind of break of structure to potentially look for a bigger trade. Before that, maybe it's just to trade from zone to zone, go there, maybe just retest this level, and it keeps going like that. Potentially starting to compress a little bit in here. Until we get maybe into a better level where eventually we're going to start having that reversal price action that maybe can lead into a bigger trade in here. But yeah, within this range, we'll see what pound is going to do. It is indeed a good level. I actually prefer more the level on the pound comparing with euro dollar. I'm not the biggest fan of where the euro dollar is reacting. I think euro dollar does want to go slightly higher at least. Pound dollar is okay. It's okay where it's reacting. 1 second. So Alex is asking me on oil, I'm looking for rejection from this multi-year support level. We can look at oil, and then I'm going to go to Patch Avalanche, which is asking me how do I draw my support and the resistance zones for Nasdaq and gold, which is definitely a good question. I may look at the support resistance zones, maybe slightly different from the normal. But I'll get to that in a bit. Let's look at oil first, and then I'll try to look at gold and try to mark the support resistance levels that I am talking about. So oil, what is oil doing? Actually, oil just broke out this. So oil, you are mentioning that price is reacting from this interesting level in here, right? It's been a zone that is holding price for a while at around this structure in here. Initially, and if I was maybe just talking in terms of price action, I may say that, yeah, maybe this is a level where you could see some reaction and maybe potential longs from here. However, we need to take into consideration that what's going on. For example, I think, if not mistaken, 2 days ago, the OPEC members, they just mentioned that they are planning to start increasing production, which means that the supply is going to increase starting in April. I think that was the goal. Then you have Trump as well saying that, yes, in the US, they want to start pumping oil as well. And his idea and Trump's goal to fight inflation is actually to start reducing the price of energy. How can you do that? Just more oil, right? Bring the price of oil down for sure. Which means that in terms of macro and what you are seeing from OPEC members, from Trump comments, from basically also with the situation with tariffs, which can slow down a little bit the economy, which means that there's maybe less oil being a demand for oil. So increase supply, you still even reduce maybe demand. Again, most likely that leads into a cheaper price on oil, so a reduction of price on oil. So we need to take that in consideration, and that's actually one of the aspects of oil is yes, you can still find your trading opportunities in terms of based on technicals, but it matters as well to understand what's going on in the world, and especially what these guys from OPEC members, they are actually mentioning, because they are actually they are the gangsters in here, right? They're actually controlling price. Period. End of story. If anyone has those conspiracy theories in terms of there is an algorithm or whatever, well, these guys on oil, they actually manage to control the price of oil. And if they increase production, most likely you're going to see price of oil continue to push lower in here. So with that being said, are we going to actually finally see price of oil going below all this area that hasn't been broken down since 2021? Maybe. Like if we compare, actually, I'm sorry for this candle, this is just a weird candle. But if we compare where actually oil was when Trump was in this first term, it was somewhere in here, right? 2016, 17, 18, like oil was actually slightly cheaper. It was trading at around 50s, 55, below 60. And so that's kind of where oil was when Trump was in the White House in the first term. So is oil going to go back to those levels? Is oil going to go back to, this candle is freaking me out. Okay, disappear. Is oil going to go back to something somewhere around this level in here? That's kind of a question mark in here. All right, that's kind of a question mark in this situation in here. So that's something to be aware of. That's definitely something to be aware of. Of course, you can track the PA, like try to see if there is any breaks of structure that maybe start winning into a long. I see a little bit of compression here. There's maybe something in there that maybe price could react from, but overall, maybe this is the time that oil is going to break all these lows. So just be careful with that. Yeah, John Gout says that he see oil going back to 33. Maybe again, I hate this candle. Where is 33 in here? 33. It's basically close to this structure here, basically close to this low. Yeah, maybe can go somewhere near that level. Do have this demand zone, I have that structure. Below this, almost everything is compressed. So basically, if we follow all these, price wants to go below that. So that's basically, that takes us straight away into, yeah, below 55, below 56, sorry, somewhere in there, 57. So you can maybe feel all this range in here, basically to 66 to 57. It can be maybe the next playground in here on oil. There's been for a long time around 66, 67 to 80s. So that's been a big range where oil has been trading. Maybe now it's going to go into a new level in there. Yeah, thank you, William. Thank you for joining. You're always here. I can recognize your name as well. And don't forget, guys, to subscribe and to put like on the video. So you can continue to grow and to bring more content to you guys. So next chart, which one are we looking at? Someone is asking for Aussie New Zealand, and after Aussie New Zealand, we're going to look at gold again. Because gold, we may do like 10 analysis on gold on a daily basis, or maybe every hour. So I don't really know if gold moves that much for us to do so many analyses, but yeah, gold is breaking down. Also in New Zealand, I don't even think I have that chart in here. So that most likely is going to be an empty chart in here. Someone who... Ankit, what are you looking at Aussie New Zealand? Just to let me know, like, you are bullish, bearish, what is your take in here? And why do you guys like to trade this exotic pair so much? Where literally the spread and the overnight candle, it's like it spikes quite a lot. Something that I don't really understand why you guys love this so much, to be honest. Yeah, I cannot really. What candle is this?
Hello.
Victor, what's up? Can you put some music, or is the music too low?
The music is there. It
Music
depends
too low.
on. It is a setting of. I can increase it a little bit, but I think it might have something with audios. Some people hear it louder than others, so I'm afraid to put it much higher. I think 8-9 is the setting. I see we have Mitch in the background. Can you give me a thumbs up? There you go. Not one, but two. There you go, Mitch. Let's have a round of applause for Mitch. How are you doing, Mitch?
There you go.
What's going on, guys? How we doing? Excited to join
Perfect. How
the
are you?
show. Where's the
Beautiful.
quasis? Where's the quasis, man?
That's certainly true. How are you doing, Mitch? I think this is the first time we meet.
Yeah, man, I'm excited to come on the show. You know, one of the things is, of course, I'm on the TradeThePool side, the stock side of things, but I always kind of catch you guys, especially in the morning, especially out there on X. All you guys out there watching on X, hit that like button if you're watching the stream. You guys are up early, as I like to say, when I'm doing my market research, you know, every day looking into the market and just kind of checking things out. I always like to come in early and then kind of take a little bit of a break, go get a good coffee, you know, a good espresso, and get ready to go. But excited for the day. I mean, everyone was wondering if Trump was going to make this huge move in the markets. I think there was a lot of swing traders, especially on my side, that got today, and they're like, what happened, Trump? You lost your mojo.
Yeah.
Certainly so, but maybe there's more to come, because I mean, in the end, it is Trump, right? Trump,
yeah, man.
Expect the unexpected, expect volatility.
There's always a card in that back pocket, right? He can pull out.
Exactly. Trump is Trump. We get excited because he is with us as the president, and we know what kind of volatility, what kind of moves the market makes just because he tweeted a thing or two. So it's awesome. Great thing. I see we
Mitch,
have.
I'm actually curious. On the because you look at stocks, right? So I'm curious about the Big Seven. What is your take? What is your bias for the Big Seven?
Okay, so at least the way that I've been looking at the Big Seven, and I'll try to go on with the way that I looked at it at the beginning of the year, right? Because now, you know, it could have a different perspective, right? I think a lot of people would have a different perspective, but I'll take it as the beginning of the year. What I was looking to see was that at this point in time, NVIDIA was going to have a struggle, right? Because at the end of the day, that stock the ceiling is just, you can push the ceiling, but eventually that just kind of stops the momentum, right? And I think at that point, I expected that kind of slowing down there. Now, recently we have called Tesla on the stream going back down to 300, and that was more just a matter of the tariffs coming into play, right? Like, a lot of people can think about how tariffs kind of affect inflation and different things, but I always say, look at the underlying assets, right? That's what's important. You guys take a look at underlying assets all the time on this side, and I think it's really important to think about that, right? Steel, lithium, all those types of things that make vehicles were getting more expensive. So the margins are the most focused for the auto industry. You always got to know what's the focus in that industry and sector. For them right now, it's margins, right? Because the number one thing that you're seeing is GM, Ford, and all the others really struggle to be anywhere near profitable on EVs. If anything, losing money, right? And so that's the difference between Tesla, is that they actually can make money on their vehicles. And what happened here was that now that with the tariffs coming in, that comes into question. So their little margins that they had are starting to shrink down. So that's Tesla, right? Then we got to think the big boys, the other big boys, Microsoft, Google, and Apple, right? The way that I see it, I have a big bet in my mind on Apple. Why? Because I just feel like Apple can stay in the kind of the weeds with AI for as long as it wants to, but in the long run, Apple's Apple, man. It's going to keep going, right? And I think that they're always going to kind of reinvent themselves to kind of get that push. So I'm looking for a big AI push at some point in the year from Apple. Now, if I look at Microsoft and Google, and maybe we can include Meta in there, it's going to be all also about kind of the changes that have happened in advertising. I know you guys see it. Now, when you go to every single website, what is it asking you? Can you accept my cookies? Can you accept this? Can you accept that? That has changed the landscape out there, right? Search, of course, is the biggest thing for Google. One thing that I'm noticing, and I'll ask you guys, like, when you guys go to search for something now, do you go to the Google, like, just like right in the search bar there? Or are you like me? Are you just an AI kind of fanatic where I am always clicking ChatGPT, Claude, I'll take a look at Gronk or whatever it is, but I go searching there before I'm searching on Google like I used to.
That is true. Go ahead, Pedro.
Go ahead.
Yes, I noticed it at myself, looking at myself, at my behavior. Indeed, you're trying, not long ago, I was looking for a product, a consumer product, and I said I could, search in Google the old-fashioned way, right? Where you get a bunch of links and you open each one of them, gonna read them, go through them, make look like a mental comparison. Or you can just go to ChatGPT and say, give me this product within this price range that is easy to clean up, or that is better for whatever application you want. And of course, it does a great job at least highlighting your options. It may not be completely true on things. You need to double check things, but it gives you 80-90% of the information you need. And you only need to, double check that everything is the way it is presented. But that's a huge difference. I just did that. And it took me, instead of an hour perhaps to research a product that I was unfamiliar with, it took me maybe 10 minutes.
Yeah. The way that I look at it, and just to make it simple, right, is that you just said it, Victor, when instead of asking for more like research or questions when I go in that search bar, AIs give us answers. And humans, they love answers. We have tons of questions. All we're looking for is answers. And I'm sure you guys being on the stream and seeing everybody in the chat, that's what you see the most, right? Everyone wants the answer. They want the answer to what to trade. They want the answer in what strategy. They want the answer in everything. And I think that's just normal human instincts, right? That's just how we work. So I think in the long run, I think we got to continue to watch that. And I think that that's going to affect Google in the long run in a negative. Reason why is I just don't see them with Gemini really kind of kicking things out of the water. I don't see too many people using it. Now, they have done some adjustments lately that are making some improvements here. When I'm in my Google Docs, I'm getting recommendations from Gemini, right? Trying to get that interaction. So I say you watch that. The big question with Google and Microsoft has been more about the theme that came in and came out, which was quantum. And I think we can all think about quantum, but the truth is, and you can ask anybody that's serious in that space, that's still years out, right? Where retail could use it. There's a whole nother thing, maybe Google using it, Microsoft, big companies with, scientists essentially behind these kind of chips, right? And so I think in the long run, those companies are going to have a struggle here because the AI spending is now going to be very highly scrutinized, right? That's what's happened here. So the change has happened where now it's not just spend. It's spend, but show me some profits. Show me that it's actually coming to the bottom line. That's where the euphoria has changed. It's no longer just story. Now it's slightly story with fundamentals coming into play. I always talk about in the stock world, it's about variables, right? You got to know story, fundamentals, technicals, and the overall market. Sometimes stocks will just run on story. And I'm sure it happens also in Forex and things like this, where it's just the kind of the belief of what potentially could happen. And then all of a sudden, something's just lifting and lifting and lifting. And what usually happens in the stock world, probably happens the same in the Forex, is the uncertainty comes back into play. And once that happens, that euphoria just starts to drop, right?
There's a correction.
Yep, exactly. And so I think that's what we're seeing in stocks. That's what we're seeing in every space right now. There was this euphoric time. And yeah, when it's euphoria, it seems like everything works, right? And then and it almost makes it easy. Or some traders will tell you, this seems like it's easy right now. Well, get ready. You'll get humbled really quickly in any market, right? I mean, that's just the way it works, guys.
Yeah. The reason I asked that is because when I was looking at the big seven, especially, and then maybe correlating with the US indices, I can see kind of key levels of structure, even on the daily time frame, kind of price breaking key important lows. For example, this one on Amazon just broke that important low. We have Google. Actually, Meta is at the key level in here, in my opinion. If it starts breaking below this structure, I think can drop even more. Microsoft as well, breaking key levels of structure. Tesla is in. Nvidia is within this range, but broke up so that low from last week or something like that. So we have seen a lot of these big seven breaking key levels of structure on a daily time frame, so important lows, which can lead eventually for a bigger move even. And we already are looking at the S&P and the Nasdaq, where they already dropped like 5% or maybe 7%, which means that if this big seven, of course, continue to drop, that's going to make the indices
100%. I like the way you're looking at it. I like the way you're looking at it, Pedro, and just keeping it simple, right? These are the stocks that move the NASDAQ, right? I mean, at the end of the day, that's what moves the NASDAQ. Yes, you can have sometimes what's called like ETF effects, where if you see one of these selling off, you got to ask yourself, what are they going to go buying in the queues to keep it up? Like on a day where you see like these Mag 7s getting hit hard in the pre-market, a lot of times you'll start to see some of the defensive names that are included in the queues for no reason. But the reason is it's for this. It's so that they go buying there and kind of offset. Right? That's like kind of the ETF effects there. But I like what you're mentioning there of trying to keep it simple, right? Look at the big seven and see what happens there. Then take a look to see what happens to the overall market. Another thing that I think about all the time is if there's one that's leading it, right? And it seems like recently it was that meta move. That meta move was the one that was really kind of lifting it, right? And we saw that break in meta, and it was like what? It was like 20 days of straight up. Like it was some crazy action straight up. And then that kind of shifted over, right? And it started to break, showing you more of that euphoria breaking, right? Where this is a euphoric ride. And I always talk about that the market's going bubbles all the time. And I think that's what we've lately been. The question is, are we getting towards more of the breaking in where it's the peak, we're going to the peak, or are we already past the peak? That's the question to be had here. And I think that there's no real answer that you can have right now. The only thing you can do is strategize off of that, right? So you're either thinking that we already had the top or we're getting near the late innings, right? So I think that personally, in my book, I think we're getting near the late innings and we still have an ability to give that one more kind of ripping rally before we really start getting into concern. Let's take a look at maybe the overall cues and we can take a look at
you can share your
contracts.
Yeah.
So right here I have Bitcoin because I just wanted to kind of draw this out here. I look at a pattern all the time that I call the rule of three. So a lot of times what I'm looking for is kind of drives to resistance and drives to support. I feel like a lot of times when traders see these in real time, they're trying to trade them, right? And they're trying to trade like the first resistance, the first support, versus letting the patterns kind of work themselves out, right? And using that ability to, instead of when the stock comes up towards like this second resistance,
just one second, Mitch. We cannot see the chart yet. Okay. It's on now. It's on.
Yeah, I
thanks.
know. I know that StreamYard's been having some issues, so thanks for the dance there. But yeah, so a lot of times you're going to get these drives up and pullbacks, drives up and pullbacks, drive up and pullback. So when you first start to see this drive up and you see this first pullback, look to see that the second one doesn't get through that high, right? And then instead of thinking, okay, well, I can buy here as it breaks the high, look for the support test, right? I start to build it and I'm like, okay, well, come back now to support. And then the stock just comes right back down, right? Then go right back to resistance, but don't break that prior second high, right? And then it starts to kind of start to filtering itself out. This gives us an ability to do two things, right? We can either trade within the range, right? Just buying and selling, or building a position off the support, or waiting for what I talk about, that third move down. And lately, that third move down has been bringing a lot of liquidity grabs, right? And I think that this is exactly what you saw in this Bitcoin move, right? So right here, we had this huge liquidity move on August, and it was, based on different things that could have come into play. But I think you got to continue watching things like that, right? And once you get that move, now you're going to start to see that the pattern kind of cleans itself out. And I think that we're getting really close to a similar pattern here and on Bitcoin, where we just had that kind of liquidity scare where it just went down there towards 78. And what does it do? It hits a whole bunch of stops, and people that are, scared, they get out really quickly. And then the stock just stops. It seems like it just stops going down. That's a good sign. That's a good sign, especially right after quick moves down. When you get quick moves down, you can get these pops back. Well, like kind of the dead cat bounce, but it usually comes right back down if it's really negative, right? And now we're starting to get this sideways action here, where I think we could just go back up and start doing a trend line approach again. And then we can look for a similar move that happened here, right? Where we had that liquidity move, we pulled back, we go back towards a resistance, and then a kind of a small pullback, like maybe a 50% pullback. You can use fibs for this, right? Maybe it's a 38%, right? But I think that's what we need to be looking for now. And this is a good sign, because as Bitcoin goes, so will the Qs, so will the market. Now that the big investors have gotten into Bitcoin, and yes, I know it sucks that they're in, guys, but they're in, right? And we can't do anything about that. That's going to actually make the structure of these coins actually move with the markets. And that's just the way it's going to go. So now I'd be looking to see if Bitcoin can start to get back up there. And you can use this as a proxy, right? So if the Qs can start to get strong, Bitcoin can start to get strong. Maybe that's what gives you the ability to start playing some different plays, right? That's the way I do also in the stock side of things, right? When I start to see Bitcoin really strong, that's when I've seen the euphoria really come into the market. If you think about it, when this move happened is when we started to talk about quantum, is when we started to talk about different names in the stock market. We were looking at drone players and different things, and the euphoria really just comes into that market. So that's what you need here. You need that next Bitcoin kind of boom if you're really looking for the next boom in the market. That's what I would say. So I'll bring this down. I just wanted to kind of show you guys that. Let's go looking at least into today. And this is what I do often on the stream. I use this charting platform. Of course, I use Trader Evolution also to execute my trades, but I use this platform. This is TC2000. A lot of times what I'm trying to do, right? I'm trying to do sector and industry analysis, right? So like if we're looking at the Qs, a lot of the times what we're talking tech, right? And things like that. So a lot of times I'm using equally weighted index to try to find stocks. And what I do is I work backwards, right? I try to see what is strong on that day. And then I'm looking to see, okay, so like electronic gaming and technology, and then working the stocks. That's the way I do a lot of the trading that I do. And I think this is very important, because this is how you start to find that certain industries and sectors get hot, right? Work backwards, not just towards one name, right? And this is also according to like the Mag 7 and things like that. They can really help you try to find where's the strength, right? So if we look at the Qs right now, of course, what has been struggling the most, it's technology, right? I mean, we can clearly see it. And you could also see it with kind of ETFs like the SMH, right? The semiconductor ETF. And that's where you see that weakness, right? So where has the strength been? Well, it's been in the value names, right? It's been in the consumer staples. And the way that stock world goes a lot of the times, it's going to move from growth to value, right? So we need to get this trigger here where it goes back into growth if we're going to see this big move in the Qs. So what has to happen here? Well, what has to happen, I think, is first is this chart starts to break, right? So a lot of times, just same way I'm sure you guys trade in the Forex and different space, they're kind of trend trades, right? This is a trend break and a trend ride up, right? It's riding this kind of light blue line. You can make this the 9, the 12, whatever it is. I use the 9 EMA just because I feel like it works for momentum and tells me when the momentum is working and when it's not, right? Below, it's working. When it starts to crack, that's when you start to get an alert. And then now you're looking for closes underneath to show that turnaround look, right? So what you see here is we started this first move. That's where we first get this breakout around the 78. And then we make this first pullback, second pullback, third pullback, fourth pullback. After about like the third or fourth, I start to look for the breakdown, because a lot of the times we can hit it 2-3 times, but that fourth and fifth time, it starts getting heavier and heavier. So I think at this point, we need to see if we're going to start to see some of these value names pull back, like Procter Gamble's been really strong, but look what happened yesterday. Good sign for the growth, good sign that potentially we can get a rebound. These are all the things that I've been looking at. And I think it's very important to kind of keep your watch on that. Now we're starting to get some of these value names to turn around. A classic example is Coca-Cola. When value comes into play, Coke goes into play. And why? Because it's dividend and it's safety, right? So big investors in the market, they can't just get out. The only thing they can do is shift money, right? So exactly. What happens is that in this situation where the uncertainty comes back into play, you look for certainty in what? In returns. Certainty in returns can easily come from these defensive names, just getting the dividend, let alone if it goes up, 2 or 3%. They're usually not trying to make a lot, but when you think about it, it's since, let's say, Tuesday on the 11th, where we're at now, this is only up 6%, but it makes up for getting out of those growth names, right? So you get out, you rotate money to this, and then you look for the money to rotate back. So we got to be looking to see when these start to break and to see if we get higher volume in the technology names when that happens. That can be a good sign that the rotation's coming back. So it's 9:21. Of course, we're getting closer towards the open here. I'm sure you guys are eager to take a look into the overall market. I'll just do the Qs outlook here. And one thing that I would say is that we got to continue to watch these kind of liquidity moves. So like right now, we've been testing down. When you see these wicks, and I always say this lovely quote, I'm like, wicks are tricks, guys. And I don't know about you guys, but I watched them when I was a kid, and they told me that tricks are for kids. So don't get caught with the tricks, guys. And those wicks can get you guys. Those wicks can really scare you out, and then all of a sudden the move go away from you, right? So I think more lately, especially, and this has to do with order flow and things, the way things work, we've been getting more and more of these liquidity scares before the move, right? So things like this, I think you got to continue to watch for, right? So like yesterday, when we got this move at 10:30, where it went to 487.73, but then recovered immediately back to the support, right? And those liquidity scares, what do? Is it's everyone lining up on the support for their stop, right? Then what happens, the market maker just grabs that and brings it back, right? So we're seeing this happen a lot in different stocks, right? So what I say you look for is when you get to that support, right? You either look for the liquidity move to happen and then get in. You can see this on the tape too. It's usually a speed up on the tape, on the time and sales, especially for stocks. I just look at the time and sales, and all of a sudden it starts to ramp, and you're seeing a whole bunch of orders get filled, and then the move starts to work back. So you can either wait for that to happen, or in the case that I think is important is another quote: try to have your entries where your stops would be. right?
Exactly.
And this is so vital, right? Because if everyone's saying that they're going to stop out there at, let's say, 490s, or maybe it's the 488 spot, well, that can really help you. There's a reason why it goes to 487.73. It washes some of those traders at that 488 and then catches right underneath that. So that's another thing that I think you need to be looking at in inside of your strategies, how you can adjust to maybe potentially get some gains.
Beautiful.
Awesome, Mitch. Awesome. For those who haven't seen you or are not familiar with TradeThePool, don't see the streams and your person, can you tell them what kind of trader are you? What time frame do you trade? How often do you trade? Things like that, so that they get a picture of who Mitch is as a trader.
Yeah, so I trade it all, and a lot of this is, of course, running the stream, right? And I try to do my best to teach also, right? One of the things that I always try to remind myself is that, hey, Mitch, also don't forget that you're here for the others, right? You're here for the people in the chat, right? And I try to remember that. So I try to trade it all. And one of the things that I try to do especially is when I feel I have true edge, it's like I talked about, sectors and industries. Because if there's one thing that I've noticed in my trading career is when you can catch an industry getting hot, you can find different names that haven't even moved. And it's called the leaders to laggard style trade, where you're going and you're finding a leader that's making a move. Maybe you can't catch the leader, but that doesn't mean that you can't catch the next trade, the lag right behind it. And a lot of times this is just algorithmic flow trying to do the same thing. They see, let's say, Ion Q move, and then all of a sudden they want QUBT, QMCO, and this other name, right? So that's one thing that I would say that definitely, those are the trades that I can do really well, where we can just keep on that. Now, I do also small cap trades. I have a funded account in literally small caps, like even small names like, okay, let's see where our scanner is pointing at right now. Like, let's say like a BKYI and small names like that. Let's see some top morning movers here. CMRX. No, that's a SLXN. So you got this one like right here, like, right? And so I can trade these really fast movers, and I trade these on stream, completely transparent, like you see here, where positions are shown. I show filled orders, everything, so that you guys can see it, right? And the reason why I do that is so that you guys can learn from that. And a lot of times these are going to be, let's say the small caps, they're going to be in more of your 1 minute time frame, right? But then I also go to like a bigger cap trade, right? Like we can trade either the VXX, or we could trade a lot of times like Tesla, or maybe some leverage trades like TSLL, right, in Tesla, right? So we can trade these, and these are going to give me more of that kind of ability where I'm trading more ranges and looking for breakouts. A lot of times trying to buy on support and sell on resistance some, and looking for continuation, right? So those are going to be trades that take a little bit longer, but I like those trades more. Why? Because my bread and butter really goes towards swing trading, looking at daily charts and trying to find longer term trends, right? That's how we were able to call Tesla for that move back down from kind of the rejection of this 373, which was a big spot when it broke here on Tesla. It came down, rejected that move to recover the support, and then boom, right back down, right? And so now I'm actually looking to see Tesla start to reverse back and get the move higher. If you look at the RSI here, it's been kind of just starting to give you a trend line approach here. And what I'd look for is, a lot of times for RSI, for me, what I'm looking at is not necessarily the classic, let's say 80-20. It's historical reference from that particular stock. So look back in time. When does the stock reverse in the past? So a lot of times it's when the RSI is closer towards 14 or under that 14 that the stock has reversed back. So that gives me a sign that we're getting close to the end. Maybe not just there just yet, but we're getting close to it. Those are good signs to look for. Same thing you can be doing on different stocks like Microsoft, like Amazon, right? And so you see, I already have it drawn on there on Amazon, and you can see that we're just hanging out there. So essentially, this tells me that at some point near in the future, we're going to get at least a small reversal. So a lot of traders are looking at this chart being scared on Amazon versus what certain indicators are indicating that we're close to that turn. We're close to that turn. And I think that we should be looking for little pop backs here. We'll see what happens here in Amazon today. Maybe we can get a move, right? But all right, guys, it's 9:29. Market's about to open. Who's ready to get after it? Chat out there. What are you guys watching? Let me know. I also saw the euro and kind of the euro and the USD pretty strong. I know, Victor, what do you think about that? I have been seeing that a little bit on FinViz. I took a look at that, the euro and the USD. How's that been doing this morning?
It's been as bullish as it can get. It's unstoppable. It's a juggernaut. It's been if you look at the ATR, it's expanding, and it seems like it doesn't care about the ATR. It's very bullish, but of course it's only a matter of time until we start getting that deceleration, and of course the open is happening in 10 seconds. Is there anything you want to be looking specifically? What do you look at when the open hits the market?
Yeah, so a lot of times in the opening action, right? There's two trades, right? You can either be trying to trade. A lot of times, stock traders will trade what's called the opening range trade, the orb trade, right? That's going to be looking at deeper time frames. That's like more than your 5 minute, and you're going to get 3 5-minute and a 15-minute, and you trade on the range break, right? So you wait for 3 candles and you just trade it on the range. What I'm looking for a lot of the times is, can we get this kind of opening scare, especially on a day like today, right? A lot of times I'm almost expecting this pullback here. And now the key is, can that get through this level here in the kind of the scaring morning, right? So a lot of times I'm looking in the morning. If the Qs are going straight up in the morning, well, I'm watching out for that quick pullback. In this case, the quick down moves, I'm looking to see if they get quickly bought back, like kind of we're having here, right? And these are kind of scalp opportunities. I wouldn't say necessarily they're the best opportunities, of course, because the market's just opening, but you can catch some moments where you get a dip like this. It didn't break this morning action, so now you can pretty much kind of start to bid off of this level here. So as long as it's not breaking this 495.66, you could go off of that level and then try to trade off of it. The key there, though, of course, is that you can always get that little cut down, right? But if you're able to catch that type of look and then look for the next resistance to break, that could get you a nice trend trade type of trade. These are going to be smaller trades that I would try. Like, let's say if I was trading the Qs here, probably be about like 100 shares. I'm risking about $50, trying to make maybe about 100 to 150, maybe a 3-to-1 outlook. Right. But the key there is that you're just playing kind of a guessing game off of the lows from the pre-market. Right. And it's a guessing game. It's truly that at this point. What I'm looking at more of in the longer term is more 15 minutes and hourly looks. One of the things that I would say to look into is that traders have a tendency of doing what? The 1 minute chart. Right. But the hourly chart is one of my favorite charts. It's one of the ones that I see the best returns in. Why? Because a lot of times you're going to get these moves down to support and turnarounds. Like, let's say Tesla today. I don't know if it's going to turn around, but I'm just saying Tesla in this instance. So you can see that the support is around this kind of 270 mark. So if you could actually look for opening action to go to it and then reverse out of that, that can give you a really good risk to return back to the resistance. And that's why I like the hourly charts, because you can get that opportunity where you have a tight risk and a big move to the upside. Let's say if you're getting in somewhere just above the 271, even let's say 271.60, right? Back to the resistance is going to be about 9 points, 3.3%. When I could get and risk just slightly below that, let's say that 270, and only risking about 1.19%, right? So that's why I like the hourly, guys. The key there is you have to use multi-time frames, like maybe using an hourly and like a 5-minute chart to watch the action go through that level and then come back up through that level, right? So like if it goes through the level, a lot of times I'll look on the 5-minute. Can it hold 5 minutes above that level? then I can start to get into it, right? Some trigger like that. Multi-time frame use, guys. I'll let you guys take over. Let us know a little bit about what you're seeing in the markets. What are you guys seeing?
Perfect. Let's look at the thank you, Mitch, for all those great insights, because here, of course, we look mostly at Forex, and we know there's a lot of traders who are looking at the indices, and I'm sure they're trading stocks as well. And you are such a blessing being here, because you can cater to them as well. Let's look at the. I'm gonna put my chart on. We have a couple of questions. Let's see on the chat. Someone asking, we have a live trade on gold. Actually, we did. I did take a gold trade. That's I know already how it went, and I think a few of you already know as well. Let's look at it. It is based on the higher time frames, the weekly, the daily, and going all the way down where we had some alignment. And this was the trade. It was to me on the 5-minute. We had a break of structure, a quasi. Mitch, a quasi there.
Quasi alert. You need a quasi alert button, man. Quasi.
we do need that. So, and that on the reversal, the retest or the formation of that right shoulder is my trigger. That's where I know that the market is telling me that it wants to do something. Whether or not it's going to do it is another thing, but it's actually telling you, it's giving you signs, indication, and it has a, that's how you get those good trades. So I got in, and this idea, of course, was just to go to the FTA, right? The next, the first trouble area, and my trouble area was this bullish 1 hour order block there, because I know it may go through it. It may go much lower, and it did. But that's the first thing that is potentially going to change direction of price. And if we go to the 1 minute, you can actually see the reason. Let's look if it's, let me see if it's visible. I think it isn't. Let's see. Actually, I'm going to make it another color because it's not very clearly visible. Let's see if that's, maybe I should do this. Let's just mark it with a line here. It's not only StreamYard that is doing a bit funny today. Apparently, it's also TradingView. So there you go. All right, so that's the line where price meets that structure, right? That line. Let's go to the 1 minute, and you see what happens. Price comes to the, and this is why I trade the way I trade, right? It's not based on some idea. It's something that it's evidence you can actually see. Price goes sideways, right? From that, this is the right shoulder. Price goes sideways, gets to that yellow line, as you can see. It goes through it, but just a little bit, and boom, you got that reaction. That's exactly the reason you want to have you don't want to get out of your trade on the first FTA or your first trouble area, the FTA, because it is in potential. It is a structure that can reverse price. In this case, it didn't. Price went much lower, but that sometimes that's all it needs. It touches that structure and it reverses, and you're hanging in there with your trade. That's never gonna come to fruition. So that was the trade. It was a very nice one. It wasn't my typical one, very risk reward ratio, but it's something. This is the trades that I typically trade. The entry wasn't that tight, I must say, but it's okay. It's for the viewers to see, the concept, the breakdown, the approach, and the execution of how you do it. So that was a nice one. But let's look at the euro dollar, because of course everyone is watching and this is what I mean. You look at that. This is the H4, but it looks like a 1 minute that is just jumping and leaping forwards. Let's look at the daily ATR. Let's measure the low of the day on euro dollar. And we're currently doing 162 pips. This is not GJ. This is not pound Kiwi. This is the euro, 162. if you were to, let's look at the ATR currently. The ATR is 109. So we're doing 150 some percent that ATR. That tells you there is a lot of volatility. The range is expanding, and that is after already yesterday was a very wide range candle. So it means there's a lot of things shifting in the market, because in order for you to have this is that the buyers and the sellers need to agree that price needs to go higher, right? If one of them is not so sure, you're gonna have the movement being in a range move with some pullbacks. But here you almost don't have much of a pullback. Look at that H4 candlestick order flow. These are one directional, one way move on euro dollar. But let's look if we have anything. We are getting into a bearish order block, which is not fresh anymore, which is not part of a quasi. So it's not something I would want to trade. I would be able to use it as a signal, but it is there. It's going to cause some kind of supply coming to the market. But the market has so far not really done anything with that area, other than just that little pin bar, bullish pin bar, which had a wick, and that's the reaction on that order block. But that's it. It's going through it like a hot knife through butter, you could say, in this time frame. Other than that, we're still in a bullish order flow by the looks of the order blocks being created, the bullish structures. This is the H2, and if we just keep on going lower, it basically it's very obvious, right? It's bullish all over, as I said at the beginning. And when trades do this, because of the way I trade, which is very similar to Pedro, I'm already either I'm in the trade or I'm on the sidelines, because there's nothing I can do here. I'm not gonna call the top. Try doing that unless I have. No thanks, right? The only thing, I'll have to wait for price to actually tell me, breaking down, making those reversal candlestick and patterns and chart patterns on different time frames. But that's not happening at all. That's not happening at all here. So either I'm already in, or I'm gonna just watch price and wait or look at another pair, because it's not my time. I'm not a momentum trader. I'm a you could say a reversal trader, right? With the trend, of course, I want price to come to those areas where price has shown me in the past demands area, and when it comes back, those order blocks, with or without quasi, that's my moment. Those are my trades, and this is just fun to watch.
Yeah, in regards to the euro, it's interesting because tomorrow, in theory, we're going to have a big day because it's going to be the ECB meeting, right? So we're going to have the interest rate, and it's interesting that 2 days before the big day, we're actually having these massive moves on the euro. And sometimes this happens, especially, so if you could see, like if you zoom out a little bit, there was that level of resistance that we couldn't break for almost 2 months, that we finally broke yesterday, that dotted line, exactly. So we managed to stay underneath that level for quite a long time. But then if we're actually looking left, based on the analysis that we do as well, and even you identifying the order blocks, almost everything was compressed. So basically there was no more sell orders there that could hold price as soon as price would break that resistance. So even though it feels like it's a massive move on the euro dollar, and it is definitely, and you can see based on the ATR that is like almost 2 ATR for the day, this last move. When you're looking at the charts, and if you pay attention a little bit to see where the fresh orders are and where maybe are key levels, it's no surprise that price actually just fill out that range immediately, and sometimes that happens, right? So if you are actually very aware on the left side that maybe there is no more short orders left behind in there on the left, price then just can pass through. Sometimes you see that more on maybe on the lower time frame, not so much on the daily time frame, but usually when you do have these big daily candles, it's in that scenario when you have a strong compression on the way down, and then price is just free to go. And now basically, in my opinion, I think we may have even a little bit more of a move to the upside. And what you may have towards tomorrow, which tomorrow can still be an interesting day because we're going to have Christine Lagarde speaking, and most likely there's going to be another 25 basis points cut rate in the Eurozone. Maybe the Eurodollar is going to try to find where is the next supply level order block kind of on the top that maybe can find some sell orders. And maybe today is going to be to just fill out that range until it gets into the next structure. Maybe tomorrow we may have some correction, which most likely may happen. Like it's not that often that you see 3 days in a row just price moving in a straight line. Maybe tomorrow depending of course on the approach now at the end of the day, we may have a little bit of a correction on euro dollar before potentially continue to move to the upside. But before we maybe continue to move higher, we may have a little bit of correction on tomorrow's day. It will be super bearish if by any chance tomorrow after DCB, the euro just corrects completely this move. Like if by any chance DCB just completely crashed down all the way down, now they back down, that is a kind of a super bearish correction. So in order to kind of sustain this bullishness, it kind of needs to retrace just a little bit, maybe 32%, 50% maximum of this big push up, and then just continue to push to the upside. But it's interesting because even at the end of the week, we still have VCB and then you have NFP on Friday. So if you think there is already a lot of volatility, we still have the two biggest days events of the week and until the end of the week, in theory. Aside from Trump, of course, that we never know what's going to happen. I'm actually quite upset because yesterday, I mentioned that I was looking for longs on euro pound and I didn't get filled for two pips. So if you look at euro pound, if you just put euro pound right there, I'm actually quite upset. Yesterday in the morning, I literally at the bottom, I didn't manage to get filled. Way at the bottom, literally at the lows. Is it euro pound? No, euro pound, not pound dollar. Euro pound. If you look at euro pound, yeah, euro pound. I think we had the same level. We saw also that order block potential for longs. So I think I had my order. We are talking literally on one of those weeks. I had my order. Man. Yeah, I'm going to tell you. Just yesterday, when I started seeing price going, I think I had my order at around 0.02527. It was at around 8:30 when I placed my order.
8:30.
Yeah, just underneath those last lows before price actually went up. Okay. No, a little bit higher. Yeah, somewhere around there. There's a wick in there. And yeah, I basically just when I saw that, I was expecting to get filled, to be honest, when I saw price going in my direction, but then price never filled me and then start going up. What I was not expecting was this move, right? But it makes sense. Like if you zoom out, price actually it's reacting at an important low. It's a level that also hasn't really managed to break almost since Brexit. We talked about already 8-9 years ago. Yeah, and you have exactly that order block. We remember that we talked about as well in the previous streams. Initially, it was the one above, price still respected, and then that one as well. Exactly. We talked about those two, and now price is just moving. It has actually still possibility to go even higher, even though it's maybe approaching an interesting level. So that euro pound actually, I'm still itching about it since yesterday. Unfortunately.
I think Jonathan was also in a trade on the euro pound because there was a very, very beautiful alignment all the way from the monthly, weekly, daily, all telling us that we could be seeing a great movement coming from these structures. Great stuff. I think Mitch, you wanted to say something. I saw you approaching.
Yeah, I'm taking a trade right now in the Qs to see if it can hold on here, guys. Definitely seeing that quick wash, though, right back to the 495 spot. So watching this 495 spot right now in the Qs to see if it holds. It was like the opening orb, and it did do a little bit of a fake out. So I tried to get on the 496 on that pullback there. Now, of course, we're coming right back down. You can see how the volatility also on the bands are starting to tighten a little bit. So in a little bit, we should see some expansion. A lot of times around 9:45 and 10 a.m. Big times to watch for reversals, right? So let's see what happens here, guys. Give myself a shot for this to come right back up here. Really need to see that 495 start to hold. We did wick right there now. Watching this to see if it can get back above that 495, and then really it's the 497 takeout that's going to be a big watch today. That's where a lot of the bull traders are watching. Let's see if we can get back up there.
Yeah, I'm looking a little bit lower, so I would like even to go a little bit lower, and then I'm going to potentially look for longs as well. The same on the S&P. Yesterday, I actually got long from the lows on the S&P, just a small target. I was not expecting such a big reaction, but I'm looking for the retest of that double bottom to see if there's a reaction there. I'm just waiting. I'm still waiting in here.
Can't blame you. It's good to wait. It's good to wait in uncertainty, right?
It's always good to wait. There's so much choices thrown at the trader all the time, opportunities, and if you're overwhelmed, the best thing is to just sit it out. It's much better to, you know, miss up an opportunity than actually make a mistake, because that mistake can snowball into many more mistakes. So it's much better to go calm at it, one at a time, one step at a time. But before we continue, let's have a word with from Alex.
MasteRisk free online marathon is going to start super soon. 6 sessions, 8 experts, and 6 live hours. So on March the 11th at 9 AM GMT, we are going to start with all of the risk management topics covered in one full day of practicing strategies and live demonstrations. What's going to be included? Free exclusive resources, a new account exclusive for the event, and 15 10k high stakes accounts up for grabs. Now the first 5,000 people that register will get access to an exclusive contest. So go below, join now for free, and we'll see you there.
Ooh. All right, I think got there, guys. But yeah, can't miss out on that event. Even I've been talking about that event, man. You guys are killing it on here.
Yes, thank you. We are indeed inviting everyone, all traders from all walks of life, join us. If there's anything, I mean, what bad can you focus on than your trade management, your risk management? That's one of the 3 pillars of any trader. So this is the foundational things you need to be doing to increase, to level up, to improve your skills in trading. So it's all for your benefit. Don't let this chance pass you by. Perfect. So let's look at the what. Do we have any questions in the chat, perhaps, or
any questions in chat, guys? If you have any questions, especially on the here's like this. You guys were trading some gold, so I took a look at a little bit of a leverage one here, and this is a really nice setup, right? So I talk about this all the time when you can get this kind of 3 kind of setup, right? And this is the important part is, if you have like something that you see often, make sure that you're looking for it around, right? Because I can see this without even drawing the lines, and I think that's the important thing. So you start to get this kind of one up, so you get this one down, right? And the downs are kind of it could be this one here. The one thing that I don't make this the down here is that it doesn't go back to a resistance, right? So what I look for is it just being clean. It's kind of a sweep down, right? Then back to resistance, so pull back down, right? Then now I'll move back towards the resistance, right? And so in this one, now you got up 1, down 1, up 2, down 2, up 3. When I see this one, this is the one that I get excited about, because this is where a lot of traders get caught on that 48. They're thinking breakout, and I'm thinking pull back one more time to the support. I can go buying. Then this is the nice little buy area, because you can go small size here with a good risk down, right? And then if you wanted to, you could add on the breakout of the 48, right? And right into that move, right? And this is very similar to what you'll see on a lot of charts. I look at this pattern all the time, whether it be on pennants, flags, different action out there. You're going to be able to see this in different time frames too. It doesn't need to be a 1 minute, 5 minute. It can be on the hourly. It can look a lot cleaner on the hourly, right? Like here. Looks a lot cleaner on the hourly there, right? And so I think you got to look for this. I call it the rule of 3, but you'll see that a lot of traders look for this. It's not just the rule of 3. It's looking around, looking for 3 tests the resistance, 3 tests the support, then looking for that move to go higher. And it just helps you wait for it. Now, gold is looking pretty strong. One of the stocks that I like to use as an indicator, and people look at GLD, right? Because it measures more, but I like AU. If you guys ever take a look at AU, it has a tendency of really trending when gold is hot, right? It has these like wild up moves where it rides the trend higher. And of these, of course, if you're a trend type of trader, well, you can make a lot of money on riding that wave up, right? And then waves down, waves up. But I like stocks that do this versus stocks that just chop, right? You know what I mean? If it can just keep going up in the trend, come down in the trend, up in the trend, come down in the trend, that can really help you try to grab it. Like a lot of gold traders will end up, at least in the stock, where they end up trading this one, this GOLD. But where do you see this one going? It goes sideways, man. This thing doesn't go anywhere, man. Not comparable to like an AU, where this thing has a tendency of taking long, and you can see it on the weekly too, how it just goes up for a long time comes down, up, down, up, down, up, down. So I think these are good stocks to take a look at, especially if you're maybe looking at the gold contracts. You maybe take a look at these gold players. Of course, they're not directly tied to the underlying asset, but it could really help you kind of take a glimpse into the sector and industry that is involved, right? All these companies are kind of either mining gold or involved some way with gold. So I'd take a look at them. Definitely not a bad one to look at. And then if you want to see momentum, if you're trading maybe those golds, why not look at the leverage stock version and see if that's ripping higher, which would be like a JNUG, right? And if that's ripping higher, it can be your conviction to maybe stay in a trade, right? Maybe it's not your entry criteria, but it's your exit criteria, and it helps you have higher conviction that you timed the trade right.
Awesome. I like how you're able to get different variation of the same underlying asset from a different perspective, and reading different signals of each one of them. One is for trailing, as you just mentioned, and the other one for you actually want to be trading because it's more trendy, or it has a better technical outlook, or how it looks on the chart it looks differently. I like that. We have on that note, we have about 5 minutes, actually exactly 5 minutes still for our stream. Let's see if we can look at gold, because we have a lot of gold traders in the chat, in the room with us. So we have on the higher time frames. I'm going to try to do this as quick as possible. On
do
the
daily
time frame,
do the dance. I can't see the chart. Do the dance. Do the dance.
Do the dance.
There you go. We got it. At least on my side.
All right, thank you. Let's see. The after that dance, we continue. We have a break of structure. In my book, this is a break of structure. This would be considered the left shoulder, the head, and that will be the neckline. It broke down, and the next level, right, the next test or intersection of where price is going to decide if it wants to go up or down, to me, are these two order blocks, and we're currently in one of them. That's on the daily. We go down to and by the way, I didn't mention it, but we are in a weekly order block, a bearish one, right? So it makes sense to expect to have that but that scenario open, that maybe we're going to have at least one other leg pull down on the higher time frame, right? This is the weekly time frame, so it can be something for this week, next week. It can be even 2-3 weeks in time. So on the daily time frame, we are coming back to that order block, right? One of those two. We don't know which one is going to react. Actually, we don't know if it is going to react, but it is at the right area. Then we go to the next level, which is the H4, and we look for signs in price action to tell us if this is reversing or not. It is also a order block on the H4, an entry that is, and it did actually also signal us the sellers coming in, which is, for example, that could be this engulfing that we see here, right? That could be considered a sign or a signal that the sellers are coming back to the market. But if what I would like to do is, yes, I do trade those structures, and that was one of the reasons I took that trade. But I want to see more. I want to see on the H2, on the H1 as well, before I go to the hours. And if I do that, we are currently seeing people in the chat. Let me know. You still have about 2 minutes to let me know. What do you see? Do you see something here? A certain type of pattern, a order flow, right? Do you see the same thing I see, which is a bearish order flow? We are constructing, and it hasn't printed it yet, but it is looking bearishly, because it is creating one order block within that H4 order block, bearish one, both of them bearish. And then now it still has 2 minutes. This is the 2 hour. It only has 2 minutes to go. And that 2 hour is showing, in less than 2 minutes, showing another bearish structure being created on top of the previous one, meaning the sellers are coming back to the market. And I know it looks on the lower time frame, it looks scary to be shorting something that has this kind of left this kind of a wick, but you got to follow price action. That wick does look, and that does indicate that the buyers are coming back to the market. But the thing is, if we look at the 1 hour, You can also see it. We're coming back to the same order block that's also visible on the 1 hour, which is that bearish engulfing. We're coming back to it. Let me move the other ones out of the way so you can see it a little bit clearer, right? This is the move, right? The market on that candle went up. That's the candle. It went down to create that engulfing. And where does it come back? It is coming back, at least right now. I'm leaving that wick with that the origin of that wick and the of that movement, I should say, presumably for a continuation to the downside, right? We don't know if that's going to happen, but based on the price action we're seeing right now, this is what the market is telling us. So that looks very promising for a move down. We'll see if how far that's going to be, if it's going to be all the way to that H4 demand zone you have below us. So that's basically what I see on gold. However, gold is gold, so you gotta watch out and not marry this bias or this idea, because it has been very bullish on basically all time frames, and I wouldn't be surprised if it just rips up and continues to the next station, leaving all our ideas behind.
Yeah, and we have news in 3 seconds, so we'll see. There you go.
All right, guys, there you go. Some movement. That's for sure.
It is.
Yep.
Let's see.
There you go. Buying.
Yeah, some action coming in for sure.
Yeah. Nasdaq moving up. S&P moving up.
And gold is moving down, it seems, or at least not really a strong reaction. But there's definitely some movement coming up. We are at the end of our stream. Any last comments, guys? Pedro, Mitch, anything you want to share with the audience before we wrap things up?
Yeah, like always, I think it's important to learn from all sides of the market, right? And I think it's so important, guys, to try to see what can work for you, right? Whether that be stocks, whether that be future, whether that be Forex, and then also learning from other traders. I think it's so important. That's why I tune into different trading streams all the time. I think it's important to look at traders and see what strengths can you add, what weakness can you maybe take out, right? Or maybe realize that that's a weakness and not try to attach to that, right? And I think it's so important to do that. So when you see different traders come on here or other shows, right? Literally write down what you felt was the strength, right? What did they have that maybe you need to add to your trading? And what did they maybe do that you would not want to do? Those types of things are important because that's how we really improve on habits. I feel like the number one thing that you can adjust in your trading is just habits themselves and trying to work at one of those habits every week.
Awesome. Some solid advice there. Yeah, that's some solid advice there, Mitch. Thank you on behalf of everyone listening. Yeah. I think that's awesome. Pedro?
Yeah, that was first of all, it's a pleasure to finally get in touch with you, Mitch. I love your intros. Anytime I see like the intros, and then that I started with the Portuguese version as well on YouTube. I tried to replicate your intro, but it's impossible. Like you have such a great energy in the beginning, which is great. It's great to hear also the another perspective for people that trade stocks that usually don't do it. So to hear also your thought process, how you do it, like to look at different stocks, different across the same underlying asset. Something that actually maybe for another conversation that you mentioned in terms of reading the type. Unfortunately, something that you cannot do with Forex, and if you use it or not in terms of your own decision making to execute trades. I try to find it within the candlesticks, the formation of candlesticks, where those decision points are. But of course, if I could indeed see the orders, like the big orders jumping into a certain level, maybe that would give me even more certainty that maybe that was the right moment where the market is shifting in there. Because I'm always curious, like when you hear guys that trade stocks talking about reading the type and how important it is or not, like we don't do it, like we don't have that info in Forex. I'm always curious if there is an edge in there that maybe I'm missing out. on something, and maybe you should just swap to start trading stocks as well instead.
Or do them both, man. Use them both, right? One of the things that I would say is look into also learning more about hedging, right? And I think that that's one of the things that a lot of traders cannot do. Why can't they do it? Because it's complex, it's hard. But I'll tell you what, a lot of money is made on that, right? Where let's say you have certain stock positions, you can go and hedge them, right? You can go and make some money on the downside and the future side, right? And then kind of adjust there. I think that's really where even I see myself moving towards further and further in my trading, right? Because I like to do a lot of swing trading, and a lot of that is kind of trend following, but there's times where I can almost see it, right? I can see the trend turning against me, but I still want to hold on to the core positions, right? How can I make money during that time? Well, I need access to different areas like the 5ers or TradeThePool to go ahead and make some money in the meantime, right? Because that's what we're all trying to do, right?
Beautiful.
All right, guys, we're getting that action in the queues. The party don't stop, guys. We're gonna take you guys over now to my stream. We got a Michael Noss over there, a CMT right now. If you guys don't know the CMT, I would definitely look into that also. I know it's not future related, but I'll tell you, we do studies. It's called the Chartered Market Technician, and it's such a great status to also have on your name. I know that you guys like to call people like doctors, right? Well, why not have a CMT after your name? It's not a bad thing to have. But we're going to keep the stream going, right? We're going to kick over to the TradeThePool side, guys.
Thank you.
Yes, indeed, Mitchell. I understand that I will close this stream and automatically
That's it. It would just bring you guys over
to the other side. Before we do so, I wanted to share something right before we do so, because I do see that the market is, after that news, is changing a little bit. We have this area on gold, which is the reason and the overlapping and the reason why I took that short. And that is the test that the market needs to hold. If it doesn't hold that level, then everything is off the table. We might be growing and changing direction altogether. If you see the reaction, the wicks, the rejection wicks or reversal candles on the lower time frame patterns, then we might be going in that direction. So on that note, I leave you. See you guys soon again. Thank you all. Thank you, Mitch, for stopping by. We love having you here. Pedro, thank you for all. And everyone, don't miss that event we have next week. See you soon again. Bye-bye.
Thank you, guys. Bye.
MasteRisk free online marathon is going to start super soon. 6 sessions, 8 experts and 6 live hours. So on March the 11th at 9 AM GMT, we are going to start with all of the risk management topics covered in one full day of practicing strategies and live demonstrations. What's going to be included? Free exclusive resources, a new account exclusive for the event, and 15 10K high stakes accounts up for grabs. Now the first 5,000 people that register will get access to an exclusive contest. So go below, join now for free, and we'll see you there.